Apple stock is coming off its sixth consecutive day of gains, up close to 6% over the past month. That followed a rocky start to the year. I think it's up now on the year. Joining us to talk Apple and tech is Gene Munster, Deepwater Asset Management, managing partner. Stillwater's run deep, I'm told. Gene, is that part of the thinking? Yeah, that's what I think of. I think of you, very calm, but runs very deep. Stillwater's. Why is it up? And you never really threw in the towel. You always thought, I think that Apple was probably, any weakness was an opportunity.
I did, Joe, and ultimately Apple has obviously been late to the game when it comes to AI, and the move here, call it up 15% since they reported their last quarter, is anticipation for next week. Before I talk about the kind of the bigger picture, what to expect next week, I do want to caution that there's a traditional buy the rumor, sell in the news. So don't grade how Apple has done in AI based on how the stock trades in the next day after the event on June 11th. But just quickly, Joe, the reason why I didn't throw in the towel is that Apple has a unique asset that, of course, is the 2.2 billion active devices. Those are monthly devices, and that is the window that 20% of the world is going to experience AI. And of course, they can quickly bring those to market with a partnership, most likely with OpenAI, improve Siri, and ultimately start to inch back towards revenue growth. That's the second piece of why the stock is improving. For the last 2 years, revenue's been flat. It'll be up a couple percent in June, 4% in September, and 6% in December. So combination of what we're going to see next week, along with improving revenue growth, is what gets us back to a better place for Apple shares.
No new hardware, you don't think? Doesn't need it?
Probably, yeah. They kind of showed the new M series a couple weeks ago, introduced that in a surprise move in an iPad. That's typically in a Mac where that would come out. But this is not going to be the hardware event. They'll save that, of course, for September when they come out with a new A chip. Eventually, we will see a shift in terms of, I expect a new chip architecture from Apple. Not this year, probably in 2025. Think of a GPU for a smartphone. This will be used to run small language models. So I think Apple is going to increasingly rely on silicon as a competitive advantage, but I don't expect to hear much at the developer side of the business.
And this will do it. This will vault Apple into the ranks of player in AI, do you think, or do they never actually catch up?
Well, it's going to vault Apple, it's going to vault the world into using more AI products. As much as we talk about it, most people actually don't experience it. And so very similar to what Apple has done in terms of shift the paradigm shift from the mouse to the touch interface, the AI interface, and AI embedded in the operating system is going to be a vault forward. That will improve their business. It's not going to go, we're not talking about a business going from 2 to 30% growth. This is 2 to 5% and sustained. That is a vault in terms of Apple when you're a $400 billion revenue company, but it is a different conversation than what's gone on with Google and Meta, for example, and what they have been tapping into, obviously NVIDIA. So I wouldn't call it a vault, but I would call it a huge step forward in terms of how we're going to use Apple products.
I haven't used Siri. You use Siri, Becky?
No.
It was so bad that I don't even attempt it. Is this really a game changer for Siri? Do you think? Will you show me what I can use it for, Gene? Can you come in? And,
Well, it definitely is going to be this is going to probably be the shiniest things that we're going to see next week for consumers is going to be Siri, and you described it properly. As Siri's been around since 2011. And they've just lost the confidence of the consumer. People typically use it to check the time and potentially ask what the temperature is, but that's about it. And of course, what by a deal with likely OpenAI, potentially Google, but allowing you to have a conversation, really opens up a whole different use case for Siri. In part, trying to find more what you're looking for, but also this concept of agentic or personalized AI. And keep in mind that when it comes to Siri, all of Apple's devices, with the exception of AirPods, have the ability to summon Siri. And so think of this, we talk about different forms of wearing and having AI close to us. Siri is probably going to be the best way that that's going to be embodied. And so big opportunity, they better nail that piece related to a better conversation with Siri. People are going to give it one more try. If they miss this, they're in trouble, but if they nail it, I think the view of Siri is going to change materially.
You can't, doesn't your phone have the time like right on in its resting state?
Yeah,
that's what Siri.
the phone does at the
when
time.
I see Siri, when I bump the phone the wrong way and it comes up and I get annoyed, it's like, oh, what is? Doesn't that happen to you when you bump it the phone and there's Siri all of a sudden? Yeah, it's like I don't want you. Yeah, and so it's just an annoyance at this point. That's definitely not what they need. I don't think so. Will Apple be the preeminent tech stock again, Dean? And does the NASDAQ need Apple to be the preeminent tech stock?
I think it's going to be the number 1 or 2 at the top. If you think about the Mag 7, NVIDIA is obviously having this breathtaking run that will probably last a few years. But if you think about the scope about what Apple can do over the next 5 years, we've talked about just injecting AI into the business, but there still is this other piece that they haven't tapped into that is related to kind of bringing the world to us in a more seamless way. And so what that means is what Vision Pro, of course, has not been a success. They've been struggling to get adoption of that, but it does tease out the ability to have some form of a wearable. What Google showed with their Astra a couple weeks ago really was, I think, embodied the opportunity that Apple has to come out with new devices. And I think if you play that forward and think about just the next generation of devices that are going to be more AI enabled, I think Apple's in a great place. It's going to put it at the top of the list in terms of tech companies. The one piece I think it's worth noting is that Apple, Microsoft largely don't have control of their AI destiny. And I think that they're going to be doing these partnerships. Google and Meta are in a different camp because they're the two of the mega caps. So that is one reason why I just can't definitively say Apple's at the absolute top, because how they're going to be, where that soul of their AI strategy, it could be in the balance of someone else's hands like OpenAI.
All right, Gene, we're going to end it there.
Thank you.
See a lot of you, and we'll see more of you, I'm sure. Thanks.
When we come back, big tech layoffs. We're going to tell you about the new rounds of job cuts at Alphabet and Microsoft. And later, don't miss our interview with Hollywood mogul Jeffrey Katzenberg. Squawk Box will be right back. Alphabet is laying off employees from several teams in Google's cloud unit. CNBC has learned that at least 100 positions were cut in several areas, including sales, consulting, go-to-market strategy, operations, and engineering. A Google spokesperson said that the cuts are what they called incremental across teams to better align its go-to-market organization, in its words.
And a Microsoft spokesperson telling CNBC that the company will lay off some employees who work on mixed reality. The cuts will affect the department that contributes to the HoloLens 2 augmented reality headset, but Microsoft plans to continue selling that device. A source telling CNBC that the layoffs total about 1,000 jobs. Coming up, a social media crackdown. We're going to talk about legislation in New York State that could prevent social media companies from using algorithms to serve content to kids. As we head to breakers and look at yesterday's S&P 500 winners and losers.
Affordable.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square. Checking the futures, they're in the red this morning. The Dow's down over 200 points. NASDAQ pulling back this morning in the pre-market session by triple digits, actually now just under that, 97 points. S&P also off this morning.
The state of New York plans to prohibit social media companies from using algorithms to steer content to children without parental consent. The legislation is aimed at preventing companies like Facebook and TikTok from serving automated feeds to minors. Critics have said that the feeds lead children to violent and sexually explicit content. It would also prohibit platforms from sending minors notifications during overnight hours without parental consent. That bill is still being completed, but it is expected to be voted on this week by New York State legislature. The governor, Kathy Hochul, said that the measure would make social media less addictive. California's legislator is considering a similar measure. And Joe, we've been dealing with social media for more than 20 years now that it's been on the scene. These rules, like 2004 was when Facebook first hit the scene. So these rules have been in the works for 20 years. Legislation is behind all of these things. Just reading the story in the Wall Street Journal today about how AI is now jumping into this picture, using fake nudes where you take somebody's face and you stick it on a nude body, and even though these are fake images and almost everybody knows they're fake, they look at the teenage girls differently afterwards. They think, oh, they
I saw that
and
story.
so we jump ahead to AI before we've even dealt with the social media issues that have been brewing for 2 decades.
I saw that story, and I mean, does it? You can't tell. I mean, bodies aren't that different, so that it really makes no difference whether it is the actual or whether it's just someone else's.
Questioning their
it's the same
morals,
thing, but it's
bullying them as a result for something that they've
this
done nothing.
clown is back.
Yeah, that's why the windows behind us are so dark.
Oh, good. We'll keep him.
Black him out again.
Now he's got some kind of crazy.
It's a skull. Maybe it's a Hamlet type thing.
He's got the angel. What's his? Well, we don't want to publicize it, but yeah, it's. It doesn't matter that it's not their body because it's close enough to where it looks like they're so I don't know.
But you can put yourself in that situation as a 15-year-old or something.
Yeah.
Trying to imagine what's.
I don't want to see myself.
But to have that out at such a vulnerable time. So
Right.
we've moved on to the next technology before we've even figured out how to deal with some of the social ills of the last one. And again, I'm not saying that social media is terrible. There's lots of great things that come out of it. But it has certainly impacted teenagers in this country and I think led to anxiety levels. And we're not doing anything about it.
Right. And you wonder a lot of society's ills, and you don't want to just say it's all social media, but
it's not. But it's
in a large part,
it's amplified.
It's why we're in this crazy world that we seem to be in. Bill Ackman's worth a lot of money. His net worth jumping to $8 billion. It's according to the Bloomberg Billionaires Index. It says the move came after a group of investors took a 10% stake in Pershing Square for just over $1 billion, and that values his Pershing Square stake at more, which now it's all the way up to $8 billion if you include everything. He now ranks number 333 on the world wealth ranking, surpassing some other prominent financiers, including George Soros and Blackstone's John Gray.
A technical issue yesterday caused the Class A shares of Berkshire Hathaway to appear to be down nearly 100% on the New York Stock Exchange for most of the morning trading period. Trading was halted in those shares, as well as in Barrick Gold and NewScale Power. All of those appeared to show dramatic drops in their stock prices. The NYSE said the problem stemmed from the price bands that were published by the Consolidated Tape Association, or the CTA, which is used by major exchanges to jointly provide real-time stock quotes. The CTA said that 40 stocks were affected by that issue. The NYSE said that at roughly 11:45 a.m. Eastern Time that the issue had been resolved and trading was back to normal. It said it would cancel erroneous trades in several securities, including Berkshire. When we come back, the new Fortune 500 list is out this morning. The magazine's editor-in-chief will join us next with the biggest changes from last year. And a reminder for you, you can get the best of Squawk Box and our daily podcast. Just follow Squawk Pod on your favorite podcast app, and you can listen anytime. We'll be right back. Welcome back, everybody. Fortune has announced their Fortune 500 rankings for 2024. The magazine, which is out this morning, names Walmart #1 for the 12th year in a row. Other names at the top of the list include Amazon, Apple, Berkshire Hathaway, CVS, and many more. And joining us right now is Allison Chantel. She's the editor-in-chief and chief content officer of Fortune magazine. Okay, first question for you, Allison. If Walmart's at the top as #1, how come Satya Nadella, the head of Microsoft's on the cover?
AI.
Okay.
This is the year of AI. They're number 13. It's not so bad on a list of 500, but under Nadella, who's been in the role for 10 years now as CEO, Microsoft has grown in value by 10x. So now they are the world's most valuable company. They have a $3.1 trillion value. So I'd say he's achieved quite a bit to be on the cover.
Yeah, I mean, that is quite a move. If they've grown tenfold, where were they before he came in?
With Ballmer.
No, but where were they on the rankings?
Oh, much lower. I mean, they've still been there ever since 1995 when we opened the list up to service companies as well as industrials, which is how the list started. They've been on the list every year since, but they've grown very steadily and very significantly under him.
Okay, let's talk about some other trends that you've seen. What else kind of caught your attention when you were looking at the rankings this time?
It was the year of efficiency. Mark Zuckerberg was right. Profits grew faster than revenues, although both grew a bit year over year. Travel's back. We saw fuel costs come down, and we also saw global business travel open back up, and that boosted profits for the airline companies as well as revenues. And then AI again. I mean, you see NVIDIA jump. Its revenue jumped 126% year over year. It jumped 86 spots on the Fortune 500, breaking into finally the Fortune 50 for the first time.
Wow.
So some significant gains there. Tesla jumped 10 spots. Part of that was the boost in the revenue due to bringing down the price of their cars last year. But those are some of the big movers.
How do you calculate the list?
Revenue.
Just revenue alone?
Just revenue.
But you look at all these other factors too.
We do. I mean, we look at all sorts of things, but really it comes down to the revenue. There's a lot of ways you could do this list. Historically, it's always been revenue, and we've never changed it.
And what else have you noticed just in terms of diversity measures? You say have stalled, only 10% of the Fortune 500?
Yes, so there's still 52 women running Fortune 500 companies, and
That's
actually
a big increase from what it was. I remember a time.
Oh, there was zero
6
until
or 8.
Yes, there was zero when the list started in 1972. We got our first. It was Catherine Graham. But really, it's ticked up. The last 2 years have been the first 2 years where there's ever been more than 10% of companies run by women. And then for Black CEOs, it's dismal. It's only 8.
High interest rates had a pretty big impact this time around too. How did that change things?
Yes, so 17 of the 20 fastest growing companies on the list were from the financial sector, which hugely benefited from the high interest rates. So we see that pretty significantly.
Going through the course of the year, I mean, you look at all of these different things that are moving, and what other trends have you picked up over time? I mean, there's so much money that's indexed to the S&P 500 at this point. It's a very closely tracked index, very closely followed.
Yeah, absolutely. I mean, I think I really can't put my finger on it enough that AI is here and it is making moves all over the list. And I think we haven't even seen the private sector really come in a meaningful way. But even if you look at Supermicro, just squeaked onto the list this year. It's a 30-year company, but for the last 5 years, it's really seen explosive growth because of AI. It's a server company. NVIDIA, again, I think just like the huge gains that they've seen over the last year even, and they continue to see. And then Microsoft, with its diversification of different services of AI that they invest in, has really seen its trajectory grow. I think Amazon is being impacted by AI a bit in a positive way. Yet to see Apple really step up, but I'm sure that they will. But you're seeing it start to transform the Fortune 500, and over the next decade, I think we'll significantly see changes.
So what got knocked down? If you have AI that's making such a big difference and financials moving up the list, what got knocked out, what got knocked down?
Yeah, there were a couple of one-off companies, like Coinbase showed its face once and like never again when there was sort of this boom. Open Door was, in real estate had a different year, a tougher year, and so to say the least.
Understatement.
And so yes, so they have been knocked down. So there's a few like that have kind of fallen off, and then there's a few that really work their way on, like Monster Beverage. I mean, I don't know if you drink Monster Energy, I do not,
No.
but apparently a lot of people do because they made the list for the first time this year. Workday made the list for the first time this year, so there's a few new entrants.
Okay. Allison, I want to thank you for coming in today. It's really an interesting list, and like I said, there's so much money that's indexed to it. It's something we follow pretty closely.
Thank you so much.
Thanks for coming.
All right, coming up in media news, a deal between Paramount and Sky Deal. now reportedly waiting on approval from Sherry Redstone. Those details next. Squawk Box will be right back. Paramount and Skydance have agreed to terms of a merger. David Faber reports that a deal could be announced in the coming days, but still needs the sign-off from Paramount's controlling shareholder, Sherry Redstone. Among the terms of the proposal, Redstone would receive $2 billion for national amusements, and Skydance would buy out nearly 50% of Class B Paramount shares for $4.5 billion. Skydance and Redbird Capital would contribute $1.5 billion in cash to Paramount's balance sheet to help reduce debt. And following the deal, Skydance and Redbird would own 2/3 of Paramount, with the Class B shareholders owning the remaining third. Should have sold it 5 years ago for $40 billion, and none of this would be, we wouldn't be like struggling through these details.
Shoulda, coulda, woulda.
Shoulda, coulda, woulda, but they didn't.
Stocks in India pulling back from record highs after an electoral victory by Prime Minister Narendra Modi's ruling party appears thinner than the landslide that the exit polls had been suggesting. New data from India's Election Commission shows Modi's majority is likely to be reduced from the number of seats in parliament that they won in the last election back in 2019. It's been a huge issue. Such a major part of the population in the world voting in this election. We've been tracking it very closely, of course, because of the big changes that Modi has had underway in India for the entire time he's been there.
Right. Most populous country
Yeah.
in the world. Coming up, it's Jobs Week in America. We're going to get some new employment data on small businesses from Paychecks. That's next. Then later, U.S. Deputy Secretary Wally Adeyemo is going to join us. He just returned from Ukraine. Squawk Box will be right back.
See a peacock.
Small business job growth is stable and growing at a moderate pace. Wages, though, are growing a little bit more slowly, the lowest level in 3 years. That's according to Paycheck's May Small Business Employment Report. Joining us now is John Gibson, Paycheck's president and CEO. To start out with, John, when we're talking about small businesses, and we have Friday's number coming, what percentage do you use? I mean, I don't know where the cutoff is, but how much of what we're watching is generated from what you would call small businesses?
Yeah, Joe, well, first of all, it's great to be with you. So we track in this survey small businesses less than 50. That represents the vast majority of businesses in the U.S., and we think it's a good indicator of what's happening in the general economy. And as you stated, in May, it really showed some positive signs. We saw job growth was the highest one-month gain we've seen since January 22. We saw the lowest wage increase in 3 years. And then when you look for small business workers, we actually saw the first earnings increase so far this year. And that's positive, mainly because they're getting more hours from their employer. So all regions improved. So when I look at the May report, really good news for the U.S. economy, which I said is driven by small businesses. Good news for the Fed and its fight on inflation. I think good news for small business workers is they're bringing more home each week now.
I see positives and negatives for people that really want to cut, though, John. And I mean, this doesn't look like it's slowing very much at all. And that is good. It's good news, but we're constantly in that position where, oh, good, is it bad, is it good? But I mean, it's just barely below where it was, and it's the best, as you point out, it's the best month in a couple of years. That doesn't look like the increases that the Fed orchestrated are really affecting the labor market that much at this point. The good news again, good news because wages aren't rising as much. I guess for inflation it's good news, but again, we look at it from both sides on that fact as well.
Yeah, Joe, I think the headline here is there's a lot of stability across the board. We're not seeing any signs of a recession. We're not seeing any massive changes. We continue, as you said, to kind of be stable. But when I look at the underlying trends, the job index continues to be stable. It's not growing as fast as it was last year. Now, on wages, I may disagree a little bit. I actually see a lot more downward pressure on wages in what we've seen. We've seen some anomalies at the start of this year as some states increased minimum wages, and that really spiked some of the wages. What I see now, and in this earnings, we're at 3.13% in our hourly earnings. But I watch another factor that we report, and that's the 1 month annualized. That's down to 2.1%. That's more than 1% where it was last year, and it's the lowest we've seen since November 2020. So I actually do see some wage deflation in the numbers here.
When I said that wasn't good news, I just meant, we all want the narrow inequality and everything else. So we do, but then again, and I'm fascinated that, Horatio Alger would say go south, young man. It's 101.05. 19 out of the past 21 months, the South has been the fastest region for gains. The West is the only region that's down. It's below 100. So that's because they went to $25 an hour and some of the minimum. Is it that simple that they went too far with the wage gains out in California?
Well, I certainly think you can see the impact of the actions in the West. As you said, the West is the only region that is below 100 in our index. It has the highest wage inflation of any of the regions. As you said, the South has continued to really dominate. I would say up and coming is the Midwest, and something for both you and Becky, the Hoosier State and the Buckeye State. Hoosier State #2 and Ohio #5 are really showing positive signs as well. So the Midwest is continuing to grow at a faster rate than even the South so far this year.
Well, I mean, with Becky, you got to include 10 states that she claims. I'm from Cincinnati.
I was born in Indiana. I graduated from high school
I thought you were born in Broken Arrow.
No, I lived there that was from 4th grade to 11th grade.
New Jersey. Really?
I didn't mean to start a fight.
No, my parents moved there after I graduated.
You didn't want to start this, did you? John?
There's New Jersey on the list. We both live there now.
Yeah. Right, it's a garden state.
New Jersey's not too great, Becky. I'm sorry. The Northeast is a little sluggish as well.
Yeah, well, I can give you a list of our issues back here. What's all this say about Friday, do you think? And, I mean, the bigger picture, John, is the Fed going to be able to land this softly, like we're already giving them credit for it, without unemployment rising very much? Are they going to be able to do that? It's never been done before.
Well, it hasn't, but so far what I see is stability. I do continue to be concerned about credit, the ability for small businesses to expand the cost and access to credit and capital is critical. But I certainly think the Fed has the opportunity. Again, in these numbers, Joe, what I see and what I expect on Friday is a good, stable growth in jobs. We see wage inflation going down. And I get your point, Joe, a little bit. Is that good for workers? But as I pointed out, as we've seen the wages decrease, employers are increasing hours. So in fact, workers are taking home more. So when we had the higher wages, there were less hours. Employers were controlling the hours. So what I see is a win-win here both for the economy, the Fed, and for small business workers.
Yeah, a lot of nuance to, be careful what you wish for with higher wages, 'cause sometimes that's what happens. All right,
What about Colorado, your other state,
that was college,
and Kansas,
Yeah.
where you used to stop along the way?
Kansas, LA.
I mentioned California.
Yeah, I wasted time out there.
Wasting away.
Kind of. I mean, like 2 friends the entire time. Maybe that's my fault. John, good having you on this morning, and it's always good to get an update, especially. And you figure small businesses are. You didn't give me a percentage number for what we're watching, but it's above 50%. That's for sure.
Yeah, it's well above 50%, Joe. Small businesses really drive the U.S. economy. When you look at all small businesses, it's close to 90% of all businesses are small businesses. And when you look at small business starts since the pandemic, they're at record levels. They continue above pre-pandemic. There's an entrepreneurial spirit out there. And so I think small businesses are going to continue to drive the U.S. economy well into the future.
John, where are you from?
Indiana. I'm a Hoosier.
That's right. I knew that, actually. All right. John Gibson, thank you.
Thank you. Thanks for having me.
It is just before 7 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. We're going to get to Andrew Ross Sorkin in Washington in just a moment, but first we do have today's top stories. Intel unveiling its new Xeon 6 processors during the Computex conference in Taiwan. This is just a day after new product announcements from rivals NVIDIA and AMD. Intel said that its new offerings are designed for greater performance and power efficiency for data centers. President Biden will sign an executive order today allowing him to halt some asylum claims at the U.S.-Mexico border. That move would temporarily shut down the southern border when daily migrant crossings exceed 2,500 people, with the border reopening when that number falls below 1,500. And the FTC is preparing to file a lawsuit against the largest U.S. alcohol distributor, Southern Glazer's Wine and Spirits. Politico reports that the suit is related to how the company prices wine and liquor around the country. The FTC is considering bringing the case under the Robinson-Patman Act. That's a 1936 law meant to prevent suppliers from offering favorable pricing to certain retail customers over others.
All right, let's check the futures. This morning we are looking at some weakness, although not as much as we saw. It was 200 earlier on the Dow. Let's get to Don Chu with a look at this morning's pre-market movers. Hey, Don.
All right, so let's kick things off with that check on computer chips. As Becky mentioned, Dow component Intel is moving higher by about 1.5% pre-market, so just over 350,000 shares of volume. Some of that positivity is, again, due to CEO Pat Gelsinger, who took the stage at the Computex Tech Conference in Taiwan earlier today and announcing that new line of artificial intelligence semiconductors for data centers. It rivals kind of NVIDIA's offerings, Advanced Micro Devices offerings as well. Gelsinger added that Xeon 6 processor will deliver better performance and power efficiency for high-intensity data center workloads compared to previous generations of those Xeon chips. So Intel shares up about 1.5%, helping at least buoy the Dow on a down day so far. We'll stick with that semiconductor trade and get a check on NVIDIA, the world's biggest chip maker by market value. Right now, just down about 0.25%, 320,000 shares of volume after a near 5% gain yesterday. New this morning, analysts at Bank of America have added that stock to their so-called US 1 list of best ideas. And by the way, if you're looking for more detail and analysis of some of those top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get full access to that content. So NVIDIA shares down 0.25%. And we'll end with a check on that meme stock complex, including GameStop, which is down just about maybe a couple percent or so, roughly 2 million shares of volume. You may recall it gained 21% yesterday on 127 million shares of volume, driven by trader Keith Gill, aka Roaring Kitty, posting an image of what could be his large position in shares of the video game retailer. He made another post that could show the position was held onto even after yesterday's big rally, where the stock briefly gained 70% in regular trading. The stock did lose steam, though, after a Wall Street Journal report saying that Morgan Stanley-owned E-Trade was holding internal discussions about possibly banning Gill on that platform over concerns of potential market manipulation. So, Joe, GameStop down 2.3%, AMC's down 3% as well, SunPower, BlackBerry, Reddit, some of the other ecosystem names that we're watching in the pre-market trade. I'll send things back over to you guys.
I don't know, man, Morgan Stanley and E-Trade. That would be quite a move, and there would be quite a bit of backlash from that, Dom. Thank you, though. Right now, let's get to Andrew. I told you, Andrew, yesterday in Washington. It just smells. It's too much money to be able to make from just posting a reverse Uno card or something. $85 million overnight.
Well, we're going to talk about that, Joe, in just a little bit. We've got a couple of segments actually on it. In about 20 minutes, we're going to talk to a lawyer about that very issue. And I think actually that issue may come up here in Washington. I'm at the CNBC CEO Summit in Washington, D.C. this morning. A big focus here for executives gathering is the 2024 election, which we'll talk about how to integrate artificial intelligence and technology, and, as you might imagine, regulation, which I think is going to play into all of this as it relates to Roaring Kitty and so much more. Later this morning, I'm going to be speaking with FTC Chair Lina Khan and Assistant Attorney General for the Antitrust Division, Jonathan Cantor, in conversation together. I think it's one of the first times they have done something like this. We'll bring that to you. And then later this afternoon, 26 North founder Josh Harris, who of course led the group that now owns the Washington Commanders for $6+ billion. We're going to discuss sports valuations, the broader economy. He's a rock star here. We're going to bring you highlights from all of that on CNBC today and tomorrow as well on Squawk. And also, I should tell you, Joe, talking about politics, we'll be talking to Mike Johnson a little bit later. So a lot going on here in Washington as this lobby starts to fill up with CEOs.
Yeah. John Boehner, the mentor. See those articles? That's interesting. Speaking of Ohio, speaking of Cincinnati, John Boehner. Maybe we'll ask him about that. Thanks, Andrew.
When we come back, how bullish are the bulls right now? We've got Bank of America's Savita Subramanian, who says she sees some volatility ahead for the markets. She will join us next. And Hollywood mogul Jeffrey Katzenberg raising money for his WonderCo venture fund. But don't expect any media investments. Big cybersecurity and the future of work. He will join us in the next half hour. Squawk Box will be right back.
50% off.
A mixed finish for stocks to kick off trading in June. Let's talk markets now with Savita Subramanian, head of U.S. equity and quantitative strategy at B of A Securities. Is it a month ago? When did we see you last?
I can't remember. Time means nothing these days.
It's weird. It's like Einstein was right. It's like time dilation. You've been feeling pretty positive.
I have, yeah.
And does the divergence from the Dow, 1,500 points, whatever it is, that from the highs, has that got you concerned, or you expect the Dow to catch up with the NASDAQ?
Right, the Dow is supposed to be this sort of wonderful canary in the coal mine of industrial activity. I mean, I think the indices themselves are a little bit flawed right now because, you know, if you look at the S&P 500, it's, you know, 7 stocks. If you look at the Dow, it's pretty, you know, top heavy. So I almost feel like when you peel back the onion and you look at the underlying stock market, what makes me feel better is that earnings are coming in positive for a broader array of companies in the S&P. It's not just the Magnificent Seven that's doing all of the work for the index. So I think that's bullish. What makes me a little bit more worried at this point is I feel like the idea of, you know, being in a bull market is not necessarily new. We're not faced with a bunch of bears anymore. People agree with us more than disagree with us. So it feels great to go into a meeting and be agreed with, but it doesn't feel like we're fighting that wall of worry anymore.
I mean, I don't know if you can count on multiple expansion. It's not cheap, is it? What do you have as your multiple on the S&P for next year, based on next year?
So based on where we are now, I think the trailing PE and the forward PE are kind of reasonable. But look, I think
it 21?
It's 21, yeah, and it sounds very high. But I think when you look at what's in the index, it's very different from prior cycles. It's a lot of asset light, innovation, high margin industries.
AI, yeah.
AI is part of it, but I think, you know, maybe that's the area where there's a little bit more hype than reality. But I do think that productivity and efficiency are really bullish stories, and we've been talking about that for a while. I feel like a broken record. But I think that's what you really want to see corporations do, is generate earnings from true replicable processes rather than just borrowing money for free. So that's what makes me bullish, is we're off the Fed, you know, kind of stimulus machine, and we're in a more normal, rational market environment.
You need earnings to lead the way then. So what type of gains, S&P percentage gains year over year?
This year?
Yeah.
Well, I mean, our target is 5,400, which isn't too far away from where we are today.
So that wouldn't give you much. If
it doesn't give you a whole lot.
How about next year?
Well, next year I think will be, you know, I think it'll be a solid year, but I think price returns are not going to be as exciting. So where we're going to get more of our bang for our buck is from dividends. And dividends are kind of a forgotten story because we've had, you know, buybacks being the way that companies are returning capital. I think over the next 10 years, the best performing area of the overall U.S. landscape is going to be large cap value companies. Right now, if you buy the large cap value benchmark, you're buying one of the most hated areas of the equity spectrum. I think there's more bullishness on small caps right now than large value. When you think about large cap value, these are companies like energy and financials that have been starved of capital for the last 10 to 15 years. They are now trained to survive in a high rate environment because they haven't been given any money. And these are companies that can rework themselves based on all these exciting new tools like AI. Think about large cap value companies. They're labor intensive, they're clunky, they're old economy, and now all of a sudden they have this potential to become more streamlined and labor light.
Would your appreciation of the dividend stocks changed if tax law changed to raise the tax rates for dividends?
You know, it's such a good question because we've looked at tax permutations and what that actually does to the underlying asset classes. I think what's interesting is that when we saw dividend taxes cut in the mid 2000s, high dividend yielding stocks actually started to underperform. So they do the opposite of what you would expect. And I think the idea is it's not really taxes that matter for dividend yield. It's really where you're going to get your inflation protected income. So you're right, taxes matter, but I think a lot of these stocks are held in tax managed accounts. Taxes aren't as important in our quant work as one would imagine. I thought that was one of the biggest surprises when we're studying all these different facets of the market.
So you're happy you're not obsessing about the Fed, but we still need to talk probably about the Fed. We're in a 2% GDP world, and that allows the Fed eventually to cut a couple of times this year? Is that your base case?
I mean, I think that we might be in a higher nominal GDP
Then
world.
they shouldn't cut at all then.
My sense is that there's a very high, reasonable probability that the Fed doesn't cut it all this year. This is what our economists tell us. There's even a, very non-zero probability, I don't know what it is, but it's, higher and higher, that the Fed actually, their next move is a hike. And I don't think that would be terrible for stocks. In fact, I think that would be good for value, for some of these areas that are more kind of GDP sensitive. Because think about it, the Fed is going to cut if there's something wrong in the economy. And I think you've brought this point out brilliantly in the past, that the Fed basically is only going to cut when things are starting to break. And if things aren't breaking, why wouldn't you want to own it?
I don't know why they say it's not political, it has nothing to do with the election, but they've just had that default stance. That's the fallback,
Because
is
they
we're
thought the
cutting.
neutral rate was going to be probably
really?
lower than it is.
What gave them that idea when they're seeing no really sopping up of liquidity or
But I think you hear Neil
bullish spirit?
Kashkari and others saying, look, the neutral rate's going to be higher.
It's going to be higher,
It's not
right.
where they were assuming it was. It's going to be higher, so they're going to have to see more before they can actually cut.
Yeah, I think that's right. I mean, I think there are structural areas of inflation risk in the market today. Like, look at employment. I mean, one of the reasons that it's been really hard to get wages, modified or moderating is that we have this very structurally tight labor market. We've got an aging population, we've got early retirees. So I think that the only way to fix that problem is maybe ease up immigration, which is more of a political decision. So I think there are areas of inflation that are hard to argue are going to go right back down to, those kind of benign levels that we got used to in the last decade.
Okay. It's a non-consensus view. We're still sure there's going to be 2 or 3 this year. I don't.
Yeah.
It doesn't seem right. So
It doesn't. Yeah, it's great to see you both. Thank you.
Andrew?
Okay, thanks, Becky. When we come back in the next hour, we're going to talk to another bullish strategist, fund strategist, Tom Lee. Sees a strong month ahead for stocks despite yesterday's rocky start. He's going to join us at 8 a.m. Eastern Time. You do not want to miss it. But next, what we've just been talking about, GameStop and meme mania, the latest post from Keith Gill, known as Roaring Kitty, and the options action around the stock reportedly now has the attention of the SEC. What are regulators looking for when it comes to stock manipulation? That is next. Welcome back to Squawk Box this morning. GameStop shares, they are down slightly this morning. The stock gaining more than 20% just on Monday after Keith Gill, also known as Roaring Kitty, posted a screenshot of GameStop holdings. Wall Street Journal now reporting that E-Trade is considering barring Gill from its platform due to concerns about potential stock manipulation involving his recent GameStop option purchases. And the SEC may also be looking into the trading. Joining us right now is Jacob Frankel. He is the chair of the Government Investigations and Securities Enforcement Division at Dickinson Wright, and he's formerly served as the SEC's Division of Enforcement. Good morning to you. Jacob, we've been talking for the past couple of days, and frankly now for the past couple of years, about what constitutes manipulation, stock manipulation, in the context of social media and maybe some of the things that Keith Gill, a.k.a. Roaring Kitty, has been doing. It doesn't seem like a natural case. What do you think?
It does not seem like, Andrew, you're darn right. It does not seem like a natural case. And what we're really talking about here is the ability of one influencer, in the case of, in this instance, Mr. Gill, to influence the price of the stock. What the SEC looks at when it's talking about stock manipulation is somebody engaging in activity for the purpose of creating actual or apparent active trading for the purpose of driving the stock in one direction or the other, in other words, up or down, for the purpose of benefiting financially. In other words, the idea is that the person is engaged in trades for the purpose of creating false or misleading appearance of active trading to create a market. But at the same time, when there's one person doing it, merely by virtue of his presence, we've seen people with personalities who have the ability to drive stocks, drive the market, captivate the market. Good examples are Martin Shkreli, Samuel Bankman-Fried. But at the same time, there is content here for SEC enforcement to look at. What's really interesting is we're hearing that the SEC is looking, but we're not hearing that it's the enforcement division necessarily. So it could also be divisions that involve the divisions of the commission that are involved in regulation.
Right.
But you're right. This is a unique
what would you be looking? What would you be looking at? And then there's a separate question, which is, do you think the rules are up to date, need to be updated, changed in this new environment, or do you think that this is just an idiosyncratic aberration?
Andrew, let's take your second question first, because the challenge in a liquid market with our markets, I don't think you really can create regulation merely because of the activity of one person. It certainly invites scrutiny. I mean, clearly, Mr. Gill has tripped every wire at FINRA for market surveillance. But to create new regulations merely because someone's presence has the ability to drive the market, I think would have an adverse influence and really would not be productive. What I think the SEC, particularly where the enforcement division is going to look at is there coordination with others? In other words, when he's trading, do other people know in advance what he's doing? Because there's a recent case that the SEC brought in California involving insider trading. That's a theory that the SEC could further try to extend. When it comes to manipulation, what is the purpose behind all of the activity? Clearly, he's benefiting financially. The real issue, from my perspective.
But if he's going on Reddit or another site and telling even a bunch of friends privately or quite publicly on a site like Reddit that he's doing these things, does that constitute manipulation?
Yeah, that's a great question, because if he is telling people in a public forum what he is doing, I don't know that it would constitute manipulation. On the other hand, if he's having private conversations, let's move the price of the stock to X, and he's going to benefit. Maybe there is no change in beneficial ownership. That's something that the SEC specifically looks at when it's talking about stock manipulation. In other words, is a person using multiple accounts to drive the price of the stock? I mean, this is really a conundrum for the SEC because it's a unique phenomenon. It is contrary to all of the concepts with which we're familiar and always talking about, which are the application of corporate fundamentals, technical trading.
Right.
This is strictly momentum and social media.
Jacob, I am sure there are people watching us right now having this conversation saying, how are you even discussing this? This is happening every day on Wall Street. The big guys are on the phone with each other. They're on private message boards. They're messaging each other on their Bloomberg terminals, talking about the different trades that they're making. How is it that we're even having this conversation? This is the little guy actually trying to play with the big guy, or maybe even beat the big guy.
And that could end up being the reason why the SEC does not do something. Not for that reason specifically, but you're right, there is a lot of activity. There's only so much that the SEC's Division of Enforcement can focus on. But what happens is when you have someone such as an influencer on social media who creates this type of unique phenomenon, and more importantly, let's look at what happened 3 or 4 years ago in GameStop, where you had the tremendous rise in the price. People try to jump into that momentum. They don't have the market sophistication, and then they lose. And to whom do they look to be bailed out? If they go to the SEC for help, they go to FINRA for help, they go to plaintiffs' lawyers for help, and it's not there. So yes, it is a difficult phenomenon, but one that you cannot regulate away.
Okay, so Jacob, final question for you, because we had to run. Morgan Stanley, which owns E-Trade, thinking about, do we want Roaring Kitty, or do they want Roaring Kitty in this case, on their platform as a client, as a customer? If you were their lawyer, and they're probably thinking about either their own liability or reputational issues, and by the way, the reputational issues could cut both ways, because I think a lot of retailers, especially in the E-Trade world, are, they're fans of Roaring Kitty. What would you be advising them?
Look hard at your contract. Look at what is the agreement with this and every other client, and is the person playing by the rules? If the person is following the rules that are set in the contract, the customer agreement, then I think you leave him on the platform. But I don't think you merely kick him off because he has created a presence for himself. On the other hand, if there's the slightest inkling of a violation, then you absolutely cut the person from the platform regardless of the risk, because the downside reputational risk is much too great.
Okay, Jacob, it's nice to see you this morning. Thank you for your perspective. Appreciate it.
Yeah, Andrew, good to see you.
Back to you.
Thanks, Andrew. When we come back, mortgage rates putting a chill on housing. Right now, we'll get into the challenges that are facing the real estate market. Squawk Box will be right back.
Insurance.
Welcome back to Squawk Box. Futures down, but not out. A little bit better than they were when the show started. But we do have, triple-digit losses now in the Dow was 200, and the Nasdaq was triple digits for a while. It's only it's less than 70 now.
The housing market facing some big challenges from higher mortgage rates. Diana Olick joins us on set this morning with a look at some of the issues in real estate. And Diana, I guess it's a good time for a check on this. We are getting to the end of the spring housing market. How are things shaping up?
Well, it was actually, I can't say anything but that it was a bust. I mean, spring housing market really was pulled forward. We saw that mortgage rates started the year much lower than they had been in the fall. So there was this pull forward of demand. We saw a lot of people coming into the market in January and February. Sales bumped up. We thought, great, we're going into spring. We're seeing more supply come on the market. Then in April, the rate on the 30-year fixed just shot up and the market shut down. And so we saw a drop in new home sales. We saw a drop in existing home sales, even though supply is actually improving.
Well, that's what I was going to say. Was it supply shut down because people thought I can't leave my 3.5% mortgage and trade into something else? Or was it that people said, forget it, I can't afford to buy at this point?
Well, it was part of it, but there was some more supply coming onto the market. It was spring. Some people simply have to move. If you're leaving your city or you want to upsize or something like that, there were a lot more people coming onto the market. The problem was you have such sensitive buyers today. Home prices are so high that they're right on the margin. So when you see a rate, we say, okay, it was a 6.5%, now it's at 7.5%. Is that really that much? Is that big a change? It's a big deal for most people, especially on the lower end and in that move-up market, which is where people were really stuck. And there's actually, I brought you my two favorite charts. These are in the existing, I know Joe's gonna love this. They're in the existing home report, and they're the way back. And what they do is they show the share of homes for sale and what's selling. And what's so interesting is that 15% of home sales in April were in the $750,000 plus dollars. So $750,000 up, 15% of sales. Go back 4 years, that was just 6%. That tells you what's happening in the market right now. All of the activity is on the high end of the market. That's where people can afford it, and that's where the most supply is. On the lower end, there's nothing.
Is that like apples to apples, though? Was it 750 3 years ago, or was there a different number?
No, it was,
because 750 is not what it used to be.
Right, exactly. 750, but I'm talking 4 years ago.
Right.
So we saw what happened is that home prices not only jumped 45%, which then skewed the market higher, but again, it's that supply that's on the higher end of the market, so it's available to transact, where it's not available to transact on the lower end of the market.
But at this point, there's even some softness even at the high end, right?
Yeah, some. Well, there's a lot of supply, and prices are supposedly coming down a little bit. I just heard of a very sad story of a $68 million house that's been sitting on the market for three months now. Poor guy.
No, that's terrible. What about single-family rent? Because the rent component is one we follow pretty closely.
Yeah, this is my favorite story, because this was back during the Great Recession when everybody was buying up homes and then putting them up for rent. But then you got these institutional, American Homes for Rent, invitation homes. These are REITs, and we're here covering REIT Week. That's why I'm here. I'll just say that. But these are two REITs that not only bought up a lot of houses and started renting them, they are now building homes. And in fact, the NAHB just reported that new construction on single-family rental homes is up 20% year over year. Wow. Right now, 20%. So you're seeing these companies build thousands and thousands of homes, which is great because it adds to the housing stock, which we desperately need.
Yeah. Diana, thank you. Diana Olick here in town this week, and it's great to see you. Thanks. When we come back, DreamWorks co-founder and former Walt Disney Studios chairman Jeffrey Katzenberg raising nearly $500 million for his venture fund. But it's not focused on media. He's going to talk about where he's putting his money to work right after this. Squawk Box will be right back. Welcome back, everybody. Hollywood mogul Jeffrey Katzenberg announcing this morning that his Wonder co-venture fund raised $460 million. The fund's not focused on media, but on cybersecurity, the future of work and consumer technology. And joining us right now is Jeffrey Katzenberg. He's the founding partner of Wonder Co. He's also the co-founder of DreamWorks and the former chairman of Walt Disney Studios. Also, Sujay Jaswa, who is founding partner at Wonder Co. and the former CFO at Dropbox. And gentlemen, welcome. First of all, congratulations. It's a pretty huge amount of money to be raising.
Yeah, and certainly, you know, in this environment, it's with a challenge, but excited to have it behind us, and we have a great group of LPs, and it's actually really sort of become a very exciting time to invest again. I
How
think,
so?
well, I think, you know, if you look back in, you know, 2022, 2023 were challenging times in tech for sure. But we've just seen the first 5 months of this year have been a real sort of uptick, and the quality and the quantity of opportunities coming our way today is really, really significantly better. So it's exciting time, and I got a great partner.
Let's dig in a little more deeply to what you all are investing in. We'll talk about media later, but let's focus on what you are looking at. And Sujay, we've had a number of venture capitalists who have come in and said that valuations are really frothy when you start looking at AI. You guys are looking at cybersecurity as one of those areas, though, and maybe that's a place where you're finding some better deals?
Yeah, well, cybersecurity, there's a tremendous amount of opportunity. It's been an interesting 15, 20 years because while the world has changed in so many great ways with the internet, at the same time, the idea that all of us are more vulnerable online has become, it's crazy. You were talking about it an hour ago.
Yeah.
What's happening to children, what's happening to the elderly, I mean, it's shocking.
It
so,
is.
you know, that's something that we've decided we want to
And the
take a hand in
focus
pursuing.
is very specific on consumer cybersecurity. Obviously, cybersecurity is a huge, particularly for enterprise. You know, we see all sorts of investments there, but we have focused and really become the leading firm in consumer cybersecurity. How do we protect you, your family, you know, online, your kids, your parents? So it's unfortunately, it's a you know, a tsunami of challenges for every single one of us today.
What are some of the companies that you all are focused on, things that maybe we haven't heard about before?
Well, Aura, A-U-R-A, is a company that we helped get off the ground a number of years ago. And at this point, I think it's pretty much the leader in helping families protect themselves online. It's a comprehensive solution. In fact, today we're announcing a major initiative towards helping families protect their children in terms of understanding, you know, what's the impact of social media on children's mental health. What are, you know, like, you know, for example, if your 13-year-old is downloading calorie tracking apps, you probably have an eating disorder coming your way. You know, things like that are.
Those don't work. No, I'm kidding.
They may not work for actually losing weight. I'm living evidence.
That's what I'm saying.
And then they help.
If you sign up just to get like a plan every month, I'm like, oh my God, it's happening every month. You have to cancel that. I'm telling this is TMI, but it doesn't
Well, it
work.
costs you a lot of money, and it, you know, just reminds you all the time that there's something wrong with you.
Yeah.
Which is really not what you want happening to a
Right.
teenager.
You got my co-anchors.
We've talked an awful lot about that, just what happens to teenagers in particular. And then this morning, the Wall Street Journal has this story about AI. We haven't even solved the problem with social media yet. And here we are facing new problems with AI and fake nudes created by
Well, here's one of the crazier
teenagers.
scams that's happening is basically someone will create that and say, I'm going to send it to all of your school friends if you don't send me $10,000. And it's a 15-year-old. And so guess what happens? They don't want to tell their parents. And you see suicidality go up. I mean, it's actually genuinely horrible what's happening around the world right now.
Jeffrey, people will look and say, how come you're focused on technology, not media? Because when you started the fund, I think back in 2018, about a third of it was looking at media things. That's your expertise. That's your field that everyone knows you for. What made you think that's not going to be the place where we would put this money?
I think what we all saw within 2-3 years of that is that digital media, all of the value creation there went to the platforms and not to the content. And so we pivoted out of that now over 4 years ago and really sort of doubled down.
After Quibi.
After Quibi, doubled down on tech as really being the place of opportunity. Having said that, I look at everything. We actually try and, you know, keep our eyes and ears open because I do think that there is a next big opportunity that is going to come in media, driven by AI, driven by.
It's still no, I think it's noteworthy, Jeff, though, that you're that you're totally focused on this right now. To the exclusion of media, I have no idea what to do with media. I'm like lost.
But I think that's true of many today. I do
Streaming,
think that it's a very, very challenging, and certainly it's not a growth opportunity. I mean, there are a handful of players that are doing great. I think Iger has done an amazing job turning around.
But the stock hasn't.
Disney and
It's not
yeah,
stock
but
hasn't done
he'll
it.
get there. He's on. You know, this is tortoise in the
I should
air.
buy. I should buy it. You promise?
I would bet on Bob every day of the week.
All right.
You know, he will get there in the end, and obviously, you know, you look at the tech platforms. Netflix has done a tremendous job, and it's so. But it is a very disruptive.
I mean, look at Warner and just look at the value destruct. Look at Paramount, what it was worth a couple of years ago. I mean, it's scary.
You're
Isn't
asking me
it?
why I'm not.
No, that's, I'm saying
What did I get wrong?
It's noteworthy that you might like cyber, but I mean, I see why you might be eschewing media.
Yes, but there will be, media is going to find a path through this, and I am optimistic that, and it's not in front of us today, but I do think in the coming years there are going to be phenomenal opportunities in the media.
Other than
landscape.
Netflix.
Andrew's got a question too, but very quickly, since you mentioned Paramount, can I just ask
Yes,
what you think
sure.
about this deal today with Skydance? I know you had looked at that before and thought it was a good idea coming from them. It looks like
Right.
it's going to be announced in the next few days, according to David Faber and the reporting he's been doing.
Yeah, I mean, it seems like it's on its way to a conclusion here. I think it's now singularly in the hands of Shari Redstone, and you know, a decision she needs to make here. And you know, I'm sure it's a difficult and challenging one to listen. You're talking to someone who let go of his baby and sold it 8 years ago, and so this has been in her family for her whole life, and so probably the right thing to do, but we'll see.
Andrew?
Hey, Jeffrey, I wanted to ask you actually about a different chess piece that I think converges with your social media conversation you were having earlier, but also with some of your past as well, which is, would you want to buy, and what do you think of TikTok, and whether that's something that can ultimately get hived off from ByteDance, and who would be the right buyer if not you?
Well, I don't have a spare couple of $100 billion sitting around, Andrew, but were I to have it, I certainly would want to take a look at it. It is an amazing platform, and they continue to do a really interesting job in evolving and growing it. But interestingly, today, I'm actually looking for what the next one is. I mean, when you look at how these platforms have evolved and how content itself just keeps iterating and evolving, you know, you look at movies into television, you know, into sort of all the forms of streaming, that into YouTube into TikTok, and I'm most interested in what's the next thing going to be, and that's where I think generative AI is going to be a huge factor in that, and is going to create an opportunity, a new democratized type of storytelling, and therefore a new platform for it.
The AI, the generative AI, has raised so many problems in Hollywood, though, because you have the artists and the actors who say, wait a second, you're going to just take my image, my voice, download it, and then you don't need me anymore. And
well, yeah, and listen, there's no question, this is shaky territory that do have to navigate our way through, and we've seen incidents here, you know, with Scarlett Johansson, where you can see where this could get away very quickly. I try and look at the other side of it, which is we are going to put a set of tools in the hands of creators and artists that is going to democratize content creation, you know, even more than sort of the digital revolution has, I think.
Sujay, why don't you talk a little bit about the other deals that you see that are new ones? You mentioned Aura as one that you've had for a while. What do you see as the targets for where you're going to be putting these new billions of dollars that you've raised?
You know, I think since the beginning of WonderCo, about 2/3 of our investments have been in software. And I don't think that's going to change going forward. Future of work, productivity software, finding products that people can use at work that are basically the things that they would like to use in their personal lives, that aren't driven top down but are more bottoms up. You know, look at what's happening with ChatGPT. the adoption of that in enterprises is wild. And that didn't happen because someone decided that you should be using it. You're using it because that's what you want to use. And I think you're going to see a whole new era of AI-driven productivity tools. We're in the past, we were investors in Airtable and Figma and these kind of great product-led growth companies. And I think you're going to see a whole new generation of those.
You're also investors in Robinhood, or you were investors in Robinhood. We've been talking an awful lot about how meme stocks are back, retail traders are big and huge. Where do you see that headed? Do you look at other investments in that arena? Do you keep your Robinhood?
You're smarter on this than we are. we have no idea what's going on.
Did you keep Robinhood, or are you?
No, we didn't, but they've built a great business.
Jeffrey, again, getting back to these issues of the day, I know you said this is in Sherry's hands, that she's going to be deciding what happens with Paramount. You think it's a good deal in terms of what this combination will mean for Hollywood writ large?
Well,
what happens?
Yeah, I mean, again, David Ellison, is actually an amazing entrepreneur. In his young 40s, he has built a multi-billion-dollar company during maybe one of the most difficult times media has ever seen, right? And so his enthusiasm, his passion for the business is huge, and I wouldn't underestimate that for one moment. I think he's a very, very talented entrepreneur. He's surrounding himself with a talented group of managers, Jeff Zucker, Jeff Shell, just a really, really good group of people. And so I would be actually pretty optimistic of what they can do with those assets.
If you could buy AMC for a song right now, and I don't want I don't want it to go away ever. And there's debt issues. Obviously, I think it's still down 30%.
Yeah.
And the people going, what needs to be done there?
It needs to be reinvented.
How?
It is.
Alcohol? I mean, what, do you need to be able to have a drink when you? What's going to do it?
The answer is there is probably a premium reinvention of that, almost like what happened to sports. If you look at sports 25, 30 years ago and what it was to go to an arena, the old Yankee Stadium, or you look at what the investment that they have made in sports and the live experience, how amazing that is today. They've built these spectacular palaces. They have great food, great access to them, all types of events that have turned these things into great successes again. The movie-going experience needs to be reinvented in the same way. You know that if you go to these theaters out here on the street, it's just not a great thing. And
it's better but we need more Barbieheimer's too.
Yeah, we sure do. Yes.
How's that
no question?
Well, there was a time when they almost closed down the patent office because everything had been done. Everything's been done. There's no more movies left.
I don't buy.
I don't either.
I don't buy that for a minute. But I do think that you have, an industry that was, very, very much crippled over a long period of time of, the strikes that happened that set things back, and we're just seeing now today what are still the impact of being out of work for 6 months. Movies take 18 months, 2 years to make. And it's a year ago that the business was shut down.
So there's a boom coming in content?
I would hope so. I mean, again, I don't have my
cybersecurity now.
Well, yeah, there you go. I'm trying to protect you and your kids and your parents.
Exactly.
And, I'm going to let somebody smarter than me go make great movies.
I don't know that exacs, but Jeffrey, thank you very much for coming in. Sujay, thank you. We wish you guys all the luck with these new investments. Come back and tell us more when you're looking at that next AI thing that you're getting into too.
We look forward to it. Thanks for having us.
Thank you for having us.
Thank you. Andrew?
Thank you, Becky. That was a great conversation. When we come back, Vinod Khosla, founder of Khosla Ventures, raising a new round of funding for Sword Health, which provides physical therapy powered by artificial intelligence. He and the CEO of Sword Health are going to join us at 8:30 a.m. Eastern Time. And we're going to talk to U.S. Deputy Treasury Secretary Wally Adeyemo, who is just back from Ukraine in just a little bit. Squawk Box coming right back after this from Washington, D.C. and the NASDAQ market site this morning. Back after this. Beautiful live shot of the White House here in Washington, D.C., just a couple blocks from where I am sitting right now at CNBC CEO Council Summit. When we come back, Ford is going to be rolling out sales figures later this morning. Will the automaker's hybrid strategy pay off? That is next. And June didn't get off on the right foot for the markets, but Tom Lee, yep, he remains bullish and sees the S&P reaching new heights this month. He's going to join us when Spot Box returns after this.
Jim's Club.
All right, Ford's going to release its May sales figures later this morning, while GM gets ready for its annual meeting. Phil LeBeau has more on what we can expect from the two automakers today. Hey, Phil.
Hey, Joe, let's start off with Ford, and you can expect that we're going to see strong hybrid sales numbers when the company reports its results for the month of May. Hybrids is really the one area where they made the pivot last year, started rolling out things like the hybrid Maverick, the hybrid F-150. They've done well with that. Sales up 41% year to date all the way through April. It's about 9% of Ford sales. But in terms of Ford versus the competition in hybrid sales here in the U.S., this is still Toyota's market, and they dominate it, selling more than half of all of the hybrids. There you see Ford all the way down there at 8.4%, behind even Stellantis, which has had success with plug-in hybrid electric vehicles for the Jeep brand. Ford's focus now is going to be taking the demand for hybrids, and we heard this last week from Jim Farley, and eventually start also pushing extended range electric vehicles. They're not there yet, but that's one of the areas they focus on. You may be saying to yourself, well, what about the pure electric vehicles? They're only about 4% of the market. The Lightning, the Mustang Mach-E, E-Transit, they are at 4%, and that's not a huge growth area. Look, they're losing over 100,000 per vehicle right now. At least they were in the first quarter, as you take a look at shares of Ford, and also take a look at shares of General Motors. As you mentioned, Joe, that company is holding its annual meeting. I don't think we get any news here from Mary Barra. Most of these annual meetings have been pretty straightforward in terms of, here's what's going on, here's where we are. They have not been making news at these, but we'll tune in and see if Mary Barra has something to say a little bit later on that is noteworthy.
You see RFK Jr.'s latest idea, so it's brilliant. $12 a gallon gas. That way, we hasten the transition to EVs. Or we move to California, where it's already $12 a gallon, I think, under Gavin, isn't it? Do you, what is it out? You've been out there recently? Maybe not 12.
I haven't been to California lately, but you know that when you go there, and you rent a car and you're like, whoa, what am I paying here?
Right, exactly. Maybe I'll rent an electric one. That just strikes so much fear.
I see you trembling.
No, that's the problem. So much fear that I won't be able to do, I won't be able to find a station,
Look,
or I don't know.
Hertz learned a hard lesson, a very painful lesson, about when you go all in on EVs right now in the rental market. It's not what people want. I rent Hertz's, I rent other autos companies, Avis, etc. You don't want an electric vehicle when you're out on the road. I want to return it and get to the airport. A lot of times I don't have time to fill up with gas. You think I have time to sit there and recharge? No,
Right.
That's not what the consumer wants. They want convenience.
I just realized, if you do return it without putting gas in the tank, it is $12 a gallon. Have you tried that? They really do.
Oh yeah, they'll get you there. There's no doubt about that.
All right.
Same thing if you fill it return it without a charge.
I wonder.
Yeah, you gotta pay for that too.
Like
There is a charge for that, Becky.
If you don't rewind the
You
eight-track.
can't just bring it back with minimal charge. You've got to have some charge there.
Yeah. Bill, thank you.
You bet.
It is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Intel announcing a new AI chip during the Computex conference in Taiwan. That was a day after similar announcements from NVIDIA and AMD. Intel's new offerings are designed for greater performance and power efficiency for data centers. Sources telling CNBC that Alphabet is laying off at least 100 employees from several teams in Google's cloud unit, including in sales and engineering. A Google spokesperson confirming the cuts and calling them incremental across teams to better align its businesses. Speaking of job cuts, a Microsoft spokesperson telling CNBC the company will lay off about 1,000 employees who worked on mixed reality. Those cuts will affect the department that contributes to the HoloLens 2. That's the augmented reality headset. But Microsoft plans to continue selling the device. Right now, let's get right back to Andrew in Washington. Andrew, you've got a lot of big things going on there today.
Hey, thanks, Becky. I'm at the CNBC CEO Summit here in Washington, D.C., just about to kick off. The day of programming starts at 9 a.m. Big focus here for executives, of course, the 2024 election and how to integrate artificial intelligence technology. We're going to see what this crowd really thinks of the election and which way they're going to go. We'll talk about it on the broadcast, of course. And then later this morning, I'm going to be speaking with FTC Chair Lena Khan and Assistant Attorney General for the Antitrust Division together, Jonathan Cantor, in a rare conversation about regulation in America today and where it's all headed. Imagine the CEOs in this room are going to have a lot of questions for them. And then the man who's become the man of the hour in Washington, D.C., Josh Harris, who now leads the Commanders. He owns the Commanders, spending more than $6 billion with a team of other investors, and also 26 North, former Apollo man. We're going to discuss sports valuations, the broader economy, and so much more. We've got the Speaker of the House here, Mike Johnson, and a all-star lineup of CEOs as well. We're going to bring you highlights from all of that here today on CNBC from this location, then again tomorrow on Squawk Box. In the meantime, I'm going to send it over to Dom, who's looking at the markets, which seem to be headed in the wrong direction, my friend.
They are, but they're still hovering near those record highs, so we'll see how things shake out today, Andrew. We've got some news this morning with regard to one big mover, and that's on earnings. It's for Bath & Body Works. I'll show you that right now because it's down roughly 7.5%, which is off the pre-market lows, just about 60,000 shares of trading volume. This is the personal care and home products retailer. It reported quarterly results that were actually generally positive, but it offered current quarter and full year guidance that fell shy of some analyst expectations. Those expectations were maybe understandably high going into that print for a stock that had already hit a high for the year. You can just see just in yesterday's session, and was up roughly 90% from the lows that we saw back in October. So again, Bath & Body Works down 7.5%, mostly the outlook there. Meanwhile, on the analyst front, keep an eye on shares of Flutter Entertainment today. They've been kind of moving between gains and losses, just around 12 to 13,000 shares of volume. Analysts at Oppenheimer have initiated coverage of the parent company of online betting giant FanDuel with an outperform rating, buy, and a $240 price target. That's about 27% higher than last night's close. They expect FanDuel to maintain market share in the U.S. and have the ability to absorb possible higher online gaming taxes, hypothetically, in the future. So those Flutter shares, we'll keep an eye on those. And we'll end with a check on the oil and gas complex. Oil prices have been under near and even medium-term pressure. U.S. benchmark West Texas Intermediate, or WTI crude, is working right now on a 6th straight day of losses, following through on a big drop yesterday after a weekend meeting of global oil cartel OPEC and its partner countries yielded a surprise announcement of a plan to increase oil production. Slated to begin later on this fall, oil stocks under pressure across the pre-market trade. Majors like ExxonMobil down 1%, APA Corporation on the exploration and production side, and oil services company Baker Hughes down 1.5%. By the way, for more on that and other top stories of the day, just head over to cnbc.com/pro, including a look at where oil prices may be headed into 2025. Subscribers get full detail and analysis there, Joe. I'll send things back over to you.
Okay, very good. Thanks, Tom. Our next guest says that June is going to. Well, I'm going to introduce you, and then I'm going to let him tell you, because we're not going to bury the lead on this. Let's get to Tom Lee, Fund Strat. He's pretty amazing guy that we try to visit with as much as we can. He's on kind of a roll. He is managing partner and head of research at Fund Strat Global Advisors, also a CNBC contributor. And once again, you're doing exactly what I tell you not to do, Tom, and that is giving a price target and a time frame. Never do both. Never do one or the other, but you're doing it again. So 5,500 on the S&P by the end of June. It's hard not to talk about that immediately. Based on, Tom, lower inflation.
That's right. I think there's a fundamental case, Joe, which is inflation is coming in softer than expected, and I think the job market is it's cooling but not weakening dramatically, and I think that's a good situation for equities. And I think that the sell-off in April actually hasn't really been fully recovered, and that's why we expected a rebound in May, but I think that carries over into June, and there's still $6 trillion in cash on the sidelines, and margin debt's still way below where it was in October 2021, so we know investors really aren't that long yet. So I think that comes together this month with a pretty surprisingly robust move higher.
It is a little bit longer than that crazy call you made. It was based on a week, Tom. I remember, and it worked out for you. You were right. So now at least you're doing it in terms of a month. In the past, when you have made these calls, it's been about inflation, hasn't it? And that's where it is again. What are you seeing in terms of components that make you confident that those were outliers that we saw a couple months ago, where it looked like it was inflation was coming back?
Yeah, the April inflation data, both CPI and PCE, kind of revealed that the two things that the Fed's been waiting to cool are starting to cool. One is shelter inflation. You know, it's decelerating, even though it's still higher than the Fed would like. And then I think there's some evidence that auto insurance, which has been, rising over 22%, is beginning to sort of normalize. And I think sometime before the second half, auto insurance is no longer going to be contributing to inflation. So that's the dynamic we think that's at play in this upcoming May CPI report. That comes out May 12th.
The other lead I didn't want to bury, and this is another crazy call, Tom. 150,000 on Bitcoin by the end of the year. It's already June.
Yes. We're still constructive on Bitcoin. There's the tailwinds that are associated with the halving that just took place. We also know because of the Bitcoin ETF, and there have been tremendous inflows, but institutional sort of adoption and infrastructure being built around Bitcoin is only beginning, and that makes crypto, especially Bitcoin, a bona fide asset class. And I think that sort of widening ownership is going to be propelling Bitcoin to 150,000. And again, maybe surprising or not surprising, Bitcoin still follows math. More than 87% of the move in Bitcoin still follows just the number of wallets and the activity per wallet, and both are moving higher.
Tom, I would think that a lot of your calls are based on the Fed cutting too. Bitcoin's not going to 150 if the Fed doesn't cut. So you must think that the Fed is going to be able to cut. Is that because of inflation? Is it because the economy slows? Fundamentally, what do you think has to happen for all these bullish things in both stocks and crypto to happen with the Fed?
Yeah, I think it is important for the Fed to not have hikes on the table. So I think that's the most important for investors, is the Fed is no longer in a rate hiking cycle. But if the Fed makes even just one cut this year, I think it's really supportive of equities, because it really shows the Fed is trying to sort of nurture the business cycle, and it's a good environment for stocks. I don't think one cut or three cuts makes that much different for stocks, but again, you're exactly right. It all depends on inflation, really the edge coming off enough for the Fed to say we're comfortable cutting this year.
But not necessarily, we could have Goldilocks. We could have inflation come down and the economy continue to do okay.
Yeah, that's right. I mean, I think the company's earnings have actually really spoken to how in a 5% pretty restrictive rate environment, earnings have been really robust. I know consumers, there are some trouble signs out there, but consumer leverage is still quite low. And of course, if the Fed does begin to cut, there's a lot of levers that will boost both consumer wealth and company demand. So I think there's still positive catalysts that are associated with a Fed cut eventually.
All right, Tom Lee, not much more that needs to be said. We'll be able to, that's just way too specific, but we'll have you on and we'll check July, maybe we'll have you on July 1st, see what's going on. We won't be mad if you're not exactly right, because you're willing to go out on a limb all the time with us, so we appreciate it.
Thank you.
Will you be mad? No.
Oh. His neck out
I know.
on a regular basis.
Tell him not to.
When we come back, Paramount and Skydance agreeing to terms of a merger. We will talk about what it means for the changing media landscape. That's next. Plus, Deputy Treasury Secretary Wally Adeyemo will join us to talk geopolitics, including why he's calling for more sanctions on Russia. Squawk Box will be right back.
Insurance.
Welcome back, everybody. Paramount and Skydance have agreed to the terms of a merger with a deal to be announced in the coming days. That's according to CNBC's David Faber, who says that Sherry Redstone still has to sign off on this deal. Joining us right now is Rich Greenfield with Lightshed Partners. And Rich, why don't you walk through what we think we know and what we don't know yet about this deal?
Well, I think saying this transaction is going to be announced imminently is a bit cart before horse. I think there's been sort of some form of ruptures occurred between the two sides, and I think it is not clear that this transaction is going to move forward as planned. I think Skydance very much wants this transaction to occur. The Paramount Special Committee, Becky, as you said, has certainly endorsed the current transaction. The key piece has always been, what is National Amusements? What does Sherry Redstone want? And I think there is still, for some reason, I don't know what happened over the last week, but something's happened that has led to friction between the two sides. And I think the Redstone National Amusements group is actively looking for alternatives. Doesn't mean this won't happen, but I do think that it probably is, if it does happen, it may be happening on a slower time frame, because I think they are actively pursuing alternatives despite how much Skydance wants this. And remember, Skydance has sweetened this bid. It's moved from zero cash to shareholders to 20% of the transaction in cash. Now we're up to about 40% in cash. So they've moved the bar pretty dramatically for public shareholders. The problem is you're still getting 60% of your shares meaningfully diluted by the inclusion of the merger.
Yeah, I mean, Sherry Redstone National Amusements may be looking for other suitors, but they've been doing that for a while. Are there viable options out there, you think?
It's not clear. I mean, there's been a lot of press reports and a lot of stories we've heard from talking to people of interest in buying out her stake directly. And Becky, you know, some people would say, oh, it sounds crazy to just, who would want to just buy the National Amusement stake and not buy the whole thing the way Skydance? Remember, they're buying Sherry National Amusement stake, and then they're buying or merging in the rest of Paramount. You'd say, who would want to buy just the Redstone stake? And, you know, I think step back and go, there's a lot of people who buy sports teams or buy parts of sports teams. So if you think of it as sort of a trophy asset for $2.5 or $3 billion, are there people that might want to do that if the Skydance deal is not happening? It's possible. You know, I still think there's probably a good chance Skydance happens, but I don't think it's certain. And I think you're seeing the fact that this thing didn't happen yesterday, today, shows everybody something changed. There is definitely friction on all sides right now.
Look, when you ask me who would want to just buy the National Amusements piece, I would think everybody, because then you get a far lower price to take over effective control of the company. I think the question becomes, can you do that without paying anything to the other shareholders? Are there questions of fairness that come up? Is even the board going to be able to sign off on those issues? I mean, I'd love to buy it and only pay for the National Amusements piece, because you're paying a small portion for the majority voting control.
And remember, that was the original idea of Skydance, and then they realized that you can't tax-wise then merge in your studio with Paramount for several years, and so they sort of shifted to this alternative transaction of sort of doing it all at once, needing special committee approval. But I do think that I think National Amusements is eager to figure out, is there somebody who might buy just that stake? And, you know, maybe not even all of it, maybe just a portion of it. You know, I think when you think about who's going to be president, you know, I know you've got Lena Khan coming up at 11:30. She obviously, you know, detests all forms of consolidation, but under a different administration, there might be a lot more potential buyers for these assets. So there's also a school of thought that if you wait, you know, till next year, instead of having effectively, as you're talking about, Becky, one buyer, maybe you'd have a lot more alternatives if you waited. So I don't think this is entirely clear that this plays out the way a lot of the press has reported it.
Yeah, so 5 months to the election, you're saying if you hold off, you have a shot of maybe a more welcoming environment. Although I don't know that that would necessarily be the case either. The last Trump administration was not always fond of many of the media deals and mergers that were taking place.
That is a nice way of saying it, Becky. I would agree with that. On the flip side, consolidation, right now, this administration's been hostile towards private equity financial buyers of TV stations. I don't know if that would be the case. I think there might be a much more pro-consolidation stance at the FCC. And so, look, it may not allow, who knows whether Warner Brothers could buy Paramount under that construct, you're right. But could you split off pieces? Would it be easier to consolidate assets? I think a lot could change under another administration. Look, we know that National Amusements wants to raise cash. They know they want to exit this business. The question is over what time frame and to who. There is no doubt in my mind, over the next couple of years, they are not going to be the majority owner of these assets. I think the question is just, is the Skydance deal the right deal, and did something change? Meaning, is it significantly less cash to Sherry, or something happened that has changed their mind? Maybe not permanently, but they're certainly exploring other alternatives to see, like you just said, Becky, could they pull a rabbit out of a hat and find somebody who just wants to buy the national stake at a big premium?
Yeah, rabbit out of a hat may be the nice way of saying that, Rich. Let's very quickly, we had Jeffrey Katzenberg on a little bit ago, and look, he's out of media entirely because he can't figure out where this is headed, what a problem this is. I just wonder, do you see any partner that makes sense from a content and distribution strategy that, hey, this is a fix, this is something that looks better?
The media space is undergoing pretty seismic change. And when you look at the internet, it's traditionally winner take most. And pick your category, but traditionally it's winner take most. And I think that's the sort of the challenge you're seeing is everyone's trying to figure out, can they really be a streaming juggernaut? There's too many players. We need some players to either go away, abandon. I don't think, in consolidation, unfortunately, Becky, at least under the current world, I don't think it's possible. So yes, consolidation would certainly help, and that's traditionally what would happen. That is not possible. And so I think a lot of these companies are gonna have to make hard decisions. How long do they persevere, and do they actually, make a hard right turn and make different decisions with their businesses? Like Paramount Plus is a crazy idea right now to continue to be burning $1.5 billion a year on a streaming business that isn't working. These companies need to make big decisions. Obviously, until the M&A process plays out, we don't know when they're going to make those decisions. But I think changing strategies and admitting that this is not what you're good at and focusing on what these companies are good at, which is making content, and stopping trying to be Netflix would be a big step in the right direction.
Hey, Rich, thank you.
Thank you.
Coming up in just a moment, a social media crackdown. New York State preparing a bill that would limit the platform's use of algorithms to serve content to kids. We're going to bring you more on that story in just a moment. But as we head to a break, take a look at today's biggest pre-market winners and losers in the S&P 500. Squawk Box returns from Washington, D.C. and the NASDAQ market site this morning after this.
Welcome back to Squawk Box, everybody. The futures this morning under a little bit of pressure. We're off the lows of the session, but or the lows of the morning, I should say. You should see the Dow futures right now down by 125 points. S&P futures down by about 17. The NASDAQ down by 57. It does come after a down day for the Dow, at least yesterday. S&P 500 and the NASDAQ up.
State of New York plans to prohibit social media companies from using algorithms to steer content to children without parental consent. The legislation is aimed at preventing companies like Facebook and TikTok from serving automated feeds to minors. Critics have said that the feeds lead children to violent as well as sexually explicit content. It would also prohibit platforms from sending minors notifications during overnight hours without parental consent. The bill is still being completed, but is expected to be voted on this week by New York's legislature. And Governor Kathy Hochul says that the measure would make social media less addictive. California's legislature is considering a similar measure. It wouldn't be the same without all that stuff, would it, Andrew? It seems like it wouldn't even work. It seems impossible to do that, pulling the rug out.
I think you're right. I think you're right. We will see. We will see. We got a lot more coming up on Squawk in just a moment. I'm in Washington, D.C. at CNBC's CEO Council Summit. And when we come back, using AI for physical therapy, we're going to talk to the CEO of Sword Health, one of its major backers, venture capital titan. Vinod Khosla is going to join us on how its technology is personalizing patient care. We'll bring you that story and that interview right after this. You're watching Squawk Box on CNBC. Welcome back to Squawk Box this morning, live from Washington, D.C. Sword Health, which provides physical therapy powered by artificial intelligence, raising a new round of funding led by Khosla Ventures. Joining us right now, First on CNBC Sword Health founder and CEO, Virgilio Bento. Also, Vinod Khosla, former, or I should say, it's not former anything, founder of Khosla Ventures, a legend who's invested in Sword Health since the beginning, and a legend in Silicon Valley, and we're thrilled to have both of you here. Vinod, I'm going to start with you, which is just go back in time and tell us how you found this company and what makes you excited about it. The idea of physical therapy and AI, it sounds like it doesn't go together, because you'd think to yourself, physical therapy needs somebody physically with you, and AI seems like a computer, but you're doing something different here.
Yeah, well, we got a cold email from Virgilio in 2019, a Portuguese PhD based in Portugal, with a very large vision to change healthcare. One of the largest trends in healthcare is musculoskeletal span. So that fit our ethos of very early bold bets in a very large area that would be really impactful. So that's how we met, through a cold email. It's now become one of the fastest growing companies in healthcare I've seen, gone from about 2 million run rate about late 2020, 3.5 years ago, to about 200 million now run rate. So I'm very excited about what Virgilio has done. He's a little underrated for the attention because he's based in Portugal, but I do think they're one of the most exciting companies in digital health, and using AI to deliver digital health very accessibly and rapidly and well.
Right. So, Virgilio, for those uninitiated, explain what Sword does.
So basically, what we've been doing is using AI alongside human clinicians to allow patients to recover at home. Either we started with physical pain, then we expanded to pelvic health, now we are expanding into other areas of care, but basically we allow patients to recover independently at home with our AI technology. We call it Phoenix. The patients can recover at 7 a.m. In their pajamas after breakfast, and we make sure that everything that they are doing, we always have the human clinician in the loop, providing the human touch, but also in an elevated way, so they are highly skilled.
So, in terms of how this works, one of the things that people have talked about when it comes to healthcare and AI for a very long time is liability, frankly, because they've always thought, you know, is AI going to hallucinate? Is it going to instruct somebody to do the wrong thing? How do you address those concerns?
So basically, that's why we believe that in our AI care model, it's not just the AI, it's the AI and the human, right? And the human is there to act and do the checks and balances of what the AI system is doing. So independently at home, the patient doing the session with our AI system, the AI provides feedback in line with what was defined by the clinician, changes the program in line with what was defined by the clinician. And so every single thing that the AI does in healthcare, either it's pre-approved or post-approved by the human clinician always. And so that's why we make sure that everything that is being executed is always in line with what the human clinician defined.
Vinod, you were an early investor in OpenAI and all sorts of forms of AI. You know, we've been having a big debate on the broadcast now for maybe several months about who the winners in AI are going to be. It's clearly the chip makers in terms of processing power, but increasingly the question is within the software world, and maybe this is one of those examples of a potential winner. How do you see both large language models, smaller models, productized versions of AI like this in your portfolio?
Well, there will be more than one large language model and lots of small models, but hundreds and if not thousands of applications like Sword Health. So what we've done is a classic example of an area you don't think of, but its economics is hugely impacted, and you couldn't deliver this kind of therapy with really robust margins without AI. And that's what Sword Health has done, and it's a stunning example in an area people don't expect.
Vinod, while I have you here, just because we're talking AI, and I'm so curious what you think's going on in the Valley. When you think, though, about the big winners in the model world, how do you see it today? How do you sort of stack rank the quality of what ChatGPT looks like today versus what you think Google and Gemini are doing versus, you know, Anthropic, what you may see out of AWS eventually? I mean, how do you sort of look at all of these different players?
No question, OpenAI has established a good lead. They're ahead of the pack for sure, very quickly, and they're executing extremely well. I'm also pretty certain Google will do well, as will Anthropic. There will be more than one model in the West, and there'll be regional models in other parts of the world.
Where do you think Apple's going to land in all this?
It's all about execution and talent, and a couple of companies have all of those. Many of those hype valuations will decline and go away, in my view, but the winners will be very large winners. More money will be lost. Most companies will lose money, but more money will be made than lost by a lot.
Vinod, let me ask you, since you are an investor, early investor in OpenAI, there have been a whole series of articles about Sam Altman, and just recently the Wall Street Journal had a piece yesterday about his investments in so many other businesses, where he gets most of his wealth. He doesn't have equity in OpenAI itself, which is unique. There's been lots of criticism about these outside investments. The truth is, I don't understand it personally. I actually think he's doing remarkable things and probably should have been paid at OpenAI itself. But I'm curious, as an investor, what you think.
Well, the press likes to take knocks at Sam, to be honest. If he takes a lot of risk with a lot of money on fusion and brings it to the planet, I'm all for it, even though we are in a competitive effort in fusion. So I think he's doing a lot of good things for the world in bringing things like fusion to us, or at least attempting it. And he's been in the Valley ecosystem. I know hardly anyone in the ecosystem who doesn't make lots of investment. In fact, it's a shame he's had to be a little more restrictive on himself because he is a really good investor.
And then separately, the other thing I wanted to ask you about, given that we have an opportunity to talk to you and it's so rare, is to talk about politics in Silicon Valley. You've been a supporter of President Biden. I'm in Washington, D.C. this morning at the CNBC CEO Council Summit. What is your sense of the shifting winds in the Valley around politics? I think for a very long time, the Valley was seen as sort of a liberal bastion. But, you know, if you listen to Elon Musk or you listen to All In podcast and that gang and others, it seems to be shifting potentially towards former President Trump. Is that just a small pocket, or do you think that that's a real shift in terms of the way the Valley's thinking politically?
The first thing I would say is All In podcast and some of the supporters there are not based in the Valley. I would say there's a bunch of MAGA extremists in every part of society, and I hope we can prevent them from destroying democracy, which is probably the most important issue we face.
So how do you explain what's happening? And I'm thinking of, and it's true, Elon Musk is now in Texas, and Peter Thiel is, I think it left California. But what do you see happening? Just the thinking. You must have had conversations with a lot of folks in this space.
You know, there's clearly concerns with the extreme left and the extreme right. I have those concerns. Many, like myself, are actually registered independents. And they want to be in the middle and be like learn to innovate. So I do see the frustration on the right, and I see the frustration on the left. But I think most people I know of are more focused on the morals and values of a guy like Trump. Like, would you want your kids to grow up with those values that Trump has and demonstrates?
You know, one of the things that I'm hearing at this CEO conference, just even last night, is a worry among CEOs about regulation. We're going to talk to Lena Khan a little bit later today. How do you balance, and I imagine you may even agree with a lot of the criticism about regulations here. I don't know if you do or not, but how do you balance that versus some of the other views I think you have either on social issues or these moral issues that you have around the former president?
You know, most people in Silicon Valley are social liberals and economic conservatives. That's sort of the trade here, mostly. People like Lena Khan are extremists in enforcing regulation and enforcing more, I would say, control, wanting to enforce more control. So I think most people would be in the middle here in the Valley. I think as a culture, as a place, and with social values very different than with fiscal values.
Fair enough. I could talk to you forever. I could talk to you, Virgilio, forever. There is a lot more to talk about, and I hope we have the opportunity to do it. Virgilio, I want to congratulate you on the new funding round. Vinod, it's great to see you. We look forward to seeing you again very, very soon. Thanks.
Thank you. Thank you.
Thank you. Becky, back to you.
Andrew, thank you. When we come back, we will talk to Deputy Treasury Secretary Wally Adeyemo on why he says the U.S. needs more sanctions on Russia. Right now, though, as we head to a break, let's get a quick check on the price of Bitcoin this morning. You'll see below 70,000, sitting just above 69,000. Squawk Box will be right back.
See a peacock.
President Biden will sign an executive order today allowing him to halt some asylum claims at the U.S.-Mexico border. The move would temporarily shut down the southern border when daily migrant crossings exceed 2,500. with the border reopening when the number falls below 1,500. Encounters at the U.S.-Mexico border are currently averaging about 4,300 per day, which suggests that a shutdown could go into effect immediately. Sources tell NBC News that those thresholds have been conveyed to lawmakers, but could still change before the order is signed. And then, of course, the move expected to face a wide array of legal challenges. Border security. Here's a news flash, has been a weak spot for Biden, according to polling data. And a CNBC national poll in March found that former President Trump has a 30-point edge with registered voters on the question of which candidate would handle immigration and border security better. Andrew.
Thanks, Joe. Meantime, just back from his trip to Ukraine, Deputy Treasury Secretary Wally Adeyemo writing in the Financial Times op-ed the following. He says, it's time to step up our efforts to stop Russia's war footing, and that will require manufacturers to scrutinize their supply chains. Secretary Adeyemo joins us this morning. We're here in Washington, D.C. at the CNBC CEO Council Summit. It's great to see you this morning.
Great to see you too, Andrew. Thanks for having me.
So tell us what you really learned on this trip. What was the big takeaway for you?
So arriving in Kyiv reminded me of two things. One, of how brave and determined the Ukrainian people are, but secondly, how much of a strategic failure this is for Russia. When you remember in February of 2022, Russia thought they would have Kyiv within days and Ukraine within weeks, but standing there in Kyiv, you recognize that that isn't true, and that the Ukrainian people are committed to fighting. And the reason I was there is to commit to them that the U.S. was going to stand beside them as they do that.
Okay, so what do you think needs to happen next?
The most important thing that we need from the U.S. business community and business community across our coalition are two things. One is we need manufacturers, be it microelectronics or machine tools, to step up their compliance efforts, but also to make sure that freight forwarders and their distributors do the same, because what we know is that the Kremlin has asked their intelligence services to find ways around our sanctions. And the second one is for financial institutions who are the big correspondent banking relationships to look at small and medium-sized banks in the countries of concern for us, because we know the Kremlin is not using big banks anymore. They're trying to use these small and medium-sized banks.
Do you believe fundamentally that U.S. manufacturers and U.S. banks are either looking the other way or are complicit in some kind of effort to help the Russians?
No, I think the opposite is true. Every time I talk to a major CEO, they ask me what more can they do. The challenge we have is that the Russians are very good at trying to evade our sanctions, and that we need to do more because they're trying to learn from what we're doing here on our side. So I would say that U.S. CEOs, the ones I've talked to, have been patriotic and often come to me and ask, what else can we do? And I want to deliver that message, not just to the ones who are calling, but to all of these CEOs across our coalition, that what we need you to do is to pay more attention to your supply chains and also to the banks that you're working with.
Okay. Let's talk about the role of China as a chess piece in the situation in Ukraine, which is what kind of pressure they can bring to bear or not on Russia, and clearly they are not right now. But what kind of pressure do you think should be brought to bear in regard to this situation?
China has the ability to put a great deal of pressure on Russia, because without China, Russia's military-industrialized complex would grind to a halt. Today, the vast majority of the dual-use goods, like machine tools or engine parts that are getting to Russia's military-industrialized complex, are coming from China. What we told the Chinese is, you can have a robust economic relationship with the Russians, but for these select goods, we need to stop selling them to them. And if they did that, and if the Chinese said they would stop doing that, Russia wouldn't be able to build the weapons they want for the war they're fighting in Ukraine.
Both President Biden and former President Trump former President Trump has talked about big tariffs on China. President Biden has also talked about tariffs on China. There was a recent piece where he's interviewed about some of these tariffs in Time magazine. And there is a question mark about how much inflation, what are the inflationary effects of tariffs on China? President Biden says his tariffs are not inflationary, but suggests that former President Trump's, if they were to go into effect, would be inflationary. You're in the middle of this. What do you think?
I think you got to look at the difference in approaches. And there's two fundamental differences in the approach to what the previous administration did and what this administration is doing. We've taken a targeted approach to using tariffs, but we're not doing it just in the United States. We're working with our allies and partners to do it, so that we're actually putting real pressure on the Chinese from all sides. Look at the statement that G7 just made. That was an important indicator that China's not only going to face tariffs from the United States, but from a collection of countries that want them to play on a level playing field. The second thing that we're doing is we're not doing them in a broad way that would increase taxes for the American people. I saw a recent report that said that an approach to put a 10% tariff across the board would be a $1,500 tax on each American. That's not something the president has done here, because our goal is to make sure that we create a level playing field for American firms and workers, and the best way to do that is not America alone, but America with our allies and partners.
I have a broader sort of domestic question, and it's a political question, which is, some polls suggest that a majority of Americans think we're in a recession right now. Which I would argue to you is misinformation of sorts. But then the question arises why they think that we're in a recession. I'm curious why you think that they may think that, and also to the extent that that's a messaging problem for the administration, why you think you've landed in that spot.
So as you know, Andrew, I don't do the politics, what I do is the economics, and what I know for most Americans is that we've been through a very tough period, not just here in the United States, but around the world with the pandemic. And while we're coming through that, and our economy is doing better than any major economy in the world that is developed, there are still challenges that Americans face. But the thing that gives me confidence that we're making our way through it is 16 million Americans have decided to start small businesses. You don't start a small business if you don't have confidence about your ability to sell the goods and services that you have. We have record low unemployment, but we've still got to do more to make sure that those Americans who are still working to get past a pandemic that was hard have access to the goods, the services they need to make sure they can build the opportunity they want. So my view is that the challenge that the American people are facing is one that has to do with high costs, and we're doing a lot to try and bring those down. From what we're doing on prescription drugs, to advocating building more housing, to making sure that we bring down the cost of the goods they need. So my view is that we got to keep doing what we're doing.
I'm not going to ask you to comment on the Fed, but I am going to ask you to comment, and maybe it goes to the pricing issue, just on inflation broadly. There was a sense that things were getting under control, and now it appears from what we hear from Neil Kashkari and others that they're saying maybe there's a rate hike in the offing, which would suggest that they don't think that inflation's under control. Do you think it's under control?
So, as you mentioned, I'm not going to comment on the Fed.
You don't have to comment on the Fed.
But what I will say is that we all know, that look at where we started. CPI got to 9.1. It's down to 3-something now. We expect it to continue to come down. But I think for most Americans, they're not paying attention to PCE or CPI. What they're paying attention to is, what does it cost for me to get gas in my car? What does it cost for me to get food? What does it cost for me to get housing? On gas, it was at $5 a barrel in 2022 until we used the Strategic Petroleum Reserve and took actions to bring them down. Now it's about $3.50, so it's come down. On food, while the numbers there have gotten better, I think the most indicative thing is what you've seen Walmart and Target do in terms of starting to cut costs on products in their store, and we hope that more stores will do that. And then on housing, we've got to build more housing in this country, and that's what the president's advocating for us to do, and we expect to see those prices come down too. So we're focused on doing everything we can to bring down costs. We expect that inflation will also come down over time, and will lead to the Fed the decisions they need to make.
We got to run. What was the reaction inside Treasury to the conviction of the former president?
So I was in Germany when I found out, and fundamentally the thing that I was focused on was doing my job and talking to German businesses about the two things I just mentioned to you, and getting them to focus on doing everything we can to help the Ukrainian people.
Is there a policy inside Treasury about hiring convicted felons?
I am not going to talk about, I know you're going to try and get me to talk about that. I'm not going to talk about that, but I appreciate you trying.
Wally, thank you.
Thanks for having me.
I appreciate it. It's great to see you.
You too.
We got a lot more coming up on Squawk Box after this. We're coming right back.
All right, welcome back to Squawk Box. I'm Dominic Chu with a check here before we head out of this show with some top headlines of the day so far. Check out what's happening with Intel shares. The Dow component semiconductor company's up 1.5% after announcing a new line of artificial intelligence chips at the Computex conference in Taiwan. Remember, it comes a day after NVIDIA and Advanced Micro made their own announcements at that same conference. Also, sticking overseas, watch what's happening with anything India-based with regard to investments, including this ETF that tracks it. It's down 7% pre-market. This after election results are projected to show that Prime Minister Narendra Modi is going to win, but not by as much of a landslide as previously thought. That's the reason why many of those shares are going to be lower today. Modi has been seen as a business-friendly government in the world's fastest-growing major economy. And then one more thing to keep an eye on is the meme stocks. We'll just get you a check after a 21% jump in GameStop yesterday. GameStop pulling back just about 3.5% today. AMC Entertainment, SunPower, BlackBerry, Reddit, some of the other ecosystem names also showing some more stability. Joe, with that, I will send things back over to you.
All right, we don't have a lot of time, Dom. Thanks. We'll take a quick final check on the market. So when we started, I think the Dow was down about 200. Now it's down less than 100. The Nasdaq actually was down triple digits right at the beginning at about 6 a.m. in the pre-market. Now we've got that. Really, we've seen across the board the averages pairing their losses. Wait, we're still anticipating Friday, big jobs number, but tomorrow's only Wednesday. Make sure you join us. Squawk on the Street is next.
Just here for your looks. Come on. All right. Good Tuesday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We're live from Post 9 at the New York Stock Exchange. Carl's on assignment. He's at the CNBC CEO Summit Council, or Council Summit. Council Summit. That's in D.C. Let's give you a look. I'm not sure we have all our boards right now, so we're not going to be able to look at futures. We'll get them in a second for you. Let's get to our roadmap. It does start with that AI arms race, NVIDIA remaining among the best performers on the S&P this year. Apple turns positive, by the way. Shares for the year. And Morgan Stanley is calling the Worldwide Developers Conference Apple's having, less than a week from now, I guess, a key catalyst. Plus, there are signs of EV demand recovery, perhaps. Tesla sees its China sales gain. Those shares, though, still down 29%, and it's not the king in that market. No. BYD is. And speaking of, what we're keeping an eye on, hey, how about the memes? E-Trade reportedly is considering kicking Rory Kitties off the platform. His name is Keith Gill. And he's made a lot of money from GameStop. Yeah, good for him. Where do we want to start, guys? Do we want to start with the news? All right, let's start with this news involving Elon Musk and AI, in particular NVIDIA chips. Memos circulated inside NVIDIA and obtained by CNBC show that Elon Musk was telling the chip maker to prioritize shipments of processors to X, the old Twitter, and XAI ahead of Tesla. As you can see, this is a story that's just gone up on CNBC.com. By ordering NVIDIA to let privately held X jump the line ahead of Tesla, Musk pushed back the automaker's receipt of more than $500 million in graphics processing units. Of course, these are the GPUs that are so vital in this generative AI world we're in, and that may push the delivery back for Tesla by months, likely adding to delays in setting up the supercomputer Tesla says it needs to continue to develop its autonomous driving, and not to mention its humanoid robots. So interesting story here, of course, Jim, and raises those questions that are also central in the story. I invite people to go to the website and read it, about Musk. He's the CEO of Tesla, but obviously controls completely privately held X and XAI. And if you sort of deny a benefit for one company and confer it on your private company, is the board signed off on that? I don't know. All of this coming, of course, as there is a vote coming as well on his compensation package that was originally granted to him in 2018, but is being re-voted on.
Subtle threat. We lose this, then I lose it, then I'm going to take my bat and ball. This weekend was a very seminal weekend for Elon Musk because Jensen Huang said that NVIDIA is by far and away that Tesla is by far and away the biggest autonomous because of NVIDIA. And I don't know if that'd be the case if NVIDIA gave the chips to Musk and he gave them to the other company.
Yeah, I mean, one of the key paragraphs here in the story, again, Laura Kolodny is the reporter. Emails written by NVIDIA senior staff and widely shared inside the company suggest that Musk presented an exaggerated picture of Tesla's procurement to shareholders. Correspondence from NVIDIA staffers indicates Musk diverted a sizable shipment of AI processors that had been reserved for Tesla to his social media company X.
Well, I mean,
you know, again, now, it's funny because Robin Denholm is the chairman of Tesla, is making the rounds, as I've said and reported, with their institutional investors as they begin the process, truly, of deciding how they want to vote on the compensation package. A package, by the way, that was passed by some 73% of those same shareholders back in 2018, that obviously awards Mr. Musk a $44+ billion worth of stock based on the options granted at that time.
In the lottery, I mean.
That said, it was agreed to, and it was only because he was going to reach what seemed to be incredibly outsized goals that he did reach. But I wonder if a story like this, this has been a concern in the past.
Right.
That given so many things, are even in terms of resources as well,
right.
Whether it's computer scientists, whether it's other people who are repurposed from one company to another Musk company, even though, of course, Tesla, while, he runs it and controls 20% of the stock, it's not a Musk company.
No, I mean, look, you have a board that might say, look, this is a commitment that was already made to us. You can't funnel the commitment away from us. Obviously, when you get as many chips from NVIDIA, you have an edge. When you take away the chips, maybe there's not as much of an edge.
Or it slows your progression of obviously something that's incredibly important to the future of the company, which is full self-driving.
But who ordered the chips? Who ordered the chips?
I don't. I mean, this is not my story. It's ours as a news organization, and we've got NVIDIA declining to comment. Musk and representatives for X and Tesla, apparently, according to the story, not responding to requests for comment. Now, as for Jim, the decline in sales, or I should say the reviews on the China sales, I mean, they've lost the lead in the market to BYD, but that said, the numbers themselves, I'd love to get your take. What they sold, 72,573 China-made cars in May.
But
that was up 17%.
They're offering 0 or 0 down
from
payment.
the year earlier.
0 or 0 down payment.
Yeah.
But yeah, the numbers aren't that bad. There are other places where it's not doing as well, but I think that, someone called me last night on the show, would you count this, Musk out? Let's say Musk wins, and Musk then pivots. Well, I mean, geez, at a certain point, they are creating autonomous machines, not vehicles. And they're, by the way, NVIDIA is sensitive to that. They never called it vehicles.
Right.
It's always autonomous machines.
Mm-hmm.
And if you get the latest and greatest NVIDIA chips, which he's in line to,
yep,
then maybe they can come up with things that we haven't seen before, which is one of the reasons why I don't want to count him out. I mean, you count him out, and he has something up his sleeve, and he wins the vote. Well, geez, he can then offer the same technology to the AI. He doesn't have to just keep it to himself.
No, well, listen, there's plenty of sharing between X and the platform and as well XAI, which obviously is now, they just raised $6 billion. They're using the data from Twitter in part to power the large language models that they're going to put in place. I've talked about, obviously, their own orders of NVIDIA chips and their plan to build a huge data center, I believe, in Tennessee as well, from at least what was communicated to people who were on a call about XAI in terms of when they were in their fundraising mode.
I mean, I'm just trying to figure out whether, if you have a publicly traded company and you're powerful, and you can ship these over, whether there isn't some sort of...
Well, but, I mean, as Tesla's a public company, if in fact that, that they diverted things to a private company, that's not.
No,
that's not appropriate.
That article,
unless of course you got sign off from the board, or there's something that's completely misunderstood here in terms of there was not a need, and therefore they had this order, and then the other companies came in and said, well, we'll take it because you don't need it. You know what? We'll see. We'll see if there's a response.
We know that one of the things that Jensen Huang has been saying over and over again, he wants to know where stuff goes.
Right.
Because he doesn't want stockpiling. It's
Right.
very clear that that he is really in favor of Musk after a period where the relations were strained.
Yep.
Where he believes that Musk is doing more than anybody else to become one of the largest uses of NVIDIA. Remember, he's got healthcare, he wants an auto, or what Jensen's really key on. And the guy who is working on this is Musk, and I would not vote against Musk here. I'd vote in favor, and I also think that they have the possibility at this price to do something. But I know it's 550 billion, which is the one sticking point. It's a lot, big market cap.
It's a
versus,
big market
versus
cap.
Ford.
It's a big market cap.
Maybe we can get some Ford numbers that would move something.
We'll see. We'll hear from Philip perhaps a bit later on those Ford numbers. As for NVIDIA, which we're taking a look at, Citi keeps its buy rating, 1260 price target. TD Cowen, 1200 price target. Mizuho raises it to 1275. I mean, on and on.
I know.
What are your thoughts this morning, given NVIDIA, I think, pretty much every morning seems to be the key to this market in some ways?
So we Bank of America, the one list. I remain very sanguine about NVIDIA. I think that you've got to. I mean, NVIDIA's one of these companies where they'll present you a link. The PR people who are really good, and also like break down the link. But it's the 2-hour speech from Computex, and in it he lays out a version that basically says Intel nowhere, over, Moore's law dead, can't do it without his chips, how powerful his chips are, the roadmap for his chips, and you come away from it and just say, I'm a believer. I mean, there's just nobody's got the power. No one has the kind of compute power that he has.
I'll tell you, one person who's not a believer is Pat Gelsinger, the CEO of Intel.
No, he's not.
Here is a quote from him. We actually have it. Let's take a listen to Pat Gelsinger. He took a direct shot at Jensen Huang's claim that traditional processors such as Intel's are running out of steam in the age of artificial intelligence. Take a listen.
There's a little chart there quickly.
As we look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's law is alive and well.
Well, it's alive, but it's not well. I mean, we just showed a chart, and this is a chart about AI compute and how you can't, the incremental addition of transistors to Intel is not giving you the power. You can't really see the bottom line.
I can kind of see. Well, that's Blackwell up there at the top.
Yeah,
and Rubin, I don't even know where Rubin's going to come in.
I know Rubin's insane. Rubin's insane.
Whose chart is this, by the way?
This is the NVIDIA chip showing Intel's Moore's law. There's a line. Can I just have to get up?
You're getting up. Well, it's not going to help. You can't write on this.
You can't?
No.
Can't I look and show that this is? That doesn't matter?
No, you're not.
How can it not matter? I mean, I'm on TV. Doesn't TV do that? I mean, I work for Rune Arlich. You just do this.
Put it up in the thing where we can write.
Okay, well, all right. That's it. It's probably an ill-advised strategy that I've adopted here.
Yes.
But how about this? Can I show it on here?
There you go. Now you're at it. Okay. All right. We're getting there.
That's Moore's law. That's the power of Moore's law. And this is how many what happens if you add more transistors.
Do your draw thing. You want to draw? You can draw if you want. Yeah.
Okay. So. Yeah. This is really good because what it shows me is I'm about as good as Pat McAfee in the morning.
I love it.
Whoa, right, here we go.
Okay.
So you have, that's Moore's law, according to what happens. As you add transistors, that's the increment of power that you get.
Yeah.
Here is the increment of power that you get if you do what Jensen wants. Now you tell me that's alive and well? I mean, I think the reports of that, the death of Moore's law are mature. And look at this. So I just really feel that people have to recognize that Pat Gelsinger is just by far the nicest person who's ever been to Taiwan. I mean, he is nice Rooney McFaddy, to use the great High Litz term from Philadelphia. And I really find myself baffled how this man can continue with what I regard as a charade. After what I said.
So tough. You're just being very tough.
Jensen on every call is like, look, I met Gordon. Gordon Moore was a great man. But, sometimes things fulfill their usefulness. They do. Like when you guys dropped Wheels from the Mets. Oh, no, that actually worked out. But what I'm talking about is that this is so night and day that I find myself thinking, does Pat not think that, is he calling Jensen a liar? Is he calling Jensen a liar?
Well, that,
Oh, look at that. There's another chart.
That's just 1 year. It's one. Well, guys, come on. 1 year doesn't tell the story.
Oh, yeah. Why don't you do 10
I
years?
want 10.
Why don't you 10 years is even better?
I want 10.
Look, I mean, Pat, oh, geez. Look, Pat has got a
We'll just keep
Gordon
piling
Moore,
on the pain here.
Gordon Moore came up.
Oh, and 10. All right, well, we're only up 24,260% on one.
All right, just to really be clear about this, Gordon Moore came up with Moore's Law.
Yes, he did.
Okay.
Yes, he did.
He was founder of Intel,
Yes,
and it
he
was the
was.
idea that
And he was
pretty much
followed by
every 2
Andy
years
Grove.
you get
Yes.
you get more power. What all the chance is saying is if you keep adding
double,
to
right.
CPU,
Cost comes down,
if
they
you
double
keep,
the
right. If you
more
keep
than
adding
double.
to the CPU, it does not create the level of power that it used to, and that's a perfectly legitimate thing. Just at one time,
All right,
he came on the call and he kind of really went off the
Real
reservation.
quickly, because you did, you have many times questioned sort of Pat Gelsinger. I mean, his view is, listen, he's spending an enormous amount of money right now to build fabs that are going to be producing chips, that are going to produce a lot of cash for this company.
And I hope his balance sheet
Now,
supports
it's years away, and he knows that, but are you not a believer in the long-term plan, or are you simply saying
I'm
stay
not a
away
believer in the long-term plan because I do not believe that you can get from a CPU the power that you can get by adding GPUs together. Like you can add Blackwells. One of the things that Jensen did was add a Blackwell to a Blackwell, and the power increases. And I don't mean, look, no disrespect to Gordon Moore, who was the greatest, maybe one of the greatest scientists of all time, and also an incredibly good man. I mean, because I did some charity work with him. He was an amazing man. But the problem is that the GPU is always been faster, and Andy Grove knew that, and he treated Jensen Huang with zero respect. There was a board member who wanted to adopt Jensen Huang's view, and the board member was treated with zero respect.
Interesting.
Yes, zero respect by Andy Grove. So remember that.
I will. I will. All right. In the next block, we'll see where Jim chooses to wander off to. We're also going to take a look at the meme stock frenzy after a wild day of trading for GameStop shares. Let's give you a look at futures. Of course, you can see we're set up for a slightly down open. A lot more Squawk on the Street straight ahead.
calm.
All right, mentioned this a moment ago. Ford is out with those
here we go.
sales
Here we
figures.
go.
Let's get to Phil LeBeau. He's got them for us. Phil.
Hey, David, solid month of May for Ford. Take a look at the numbers. Total sales up 51%. EVs up almost 65%. Same with hybrids up almost 65%. The focus on EVs right now is about bringing down cost, less about driving volume. Different story when it comes to hybrids. Hybrids are red hot right now, and Ford has been smart to pivot towards hybrid production and hybrid sales. The Maverick hybrid is a good example of this. Hybrid sales of the F-150, another great example of them realizing there's demand in a certain segment, up 51% in the month of May, F-150 hybrids. By the way, as you take a look at shares of Ford, keep in mind that the F-150 sales, about 9%, 8.3% of those sales, total sales in the last month, were for F-150 hybrids. That is one of those growth areas, guys, where Ford was right to make the pivot a year ago, realizing that that's what people are interested in right now. They're not interested in the F-150 Lightning to the degree that Ford thought they would be a couple of years ago.
It's very big. I mean, one of the things I'm trying to focus on, Phil, when I look at what Ford's doing, I mean, Ford has fallen, the stock has fallen so far behind GM. No pressure there to get maybe do a buyback the way GM has, which has been a fabulous one.
Right. You were one of the people who said they should do a buyback. And look, ultimately they may do that. I think the real question for investors right now is when it comes to the EV, that part of the business, you know how they broke it into silos in terms of the three divisions, they've got to do something about cutting the losses in EVs. And I know they say they have a plan and that they are driving down those losses, but it's going to be a rough year. And I think a lot of investors are looking at that and they're saying, wait a second, we can't live with that right now. That has got to change. And so I think that's what you're looking at, Jim, when you're looking at Ford versus General Motors.
Wow. Okay. I mean, Phil, do you have that number handy about how much basically Mustang cost for Ford versus what they sell it at?
Well, not Mustang, but EVs in the first quarter. And understandably, Ford will sit there and say, look, there's a lot of costs that are built into it, but it was more than $100,000 per vehicle that they lost in the EV division within Ford. And so now Ford says, look, you're including a lot of sunk-in costs there.
Well, I don't know, Phil. It is really, I think you're absolutely right. That's what it is. That's why there's a difference, because of the EV situation. Thank you, Phil. Versus GM.
Yeah, you bet.
Wow.
Phil LeBeau with those Ford numbers. All right, coming up, we're going to get Jim's Mad Dash. We'll also count you down to an opening bell. It's about 8 minutes from now. Let's give you a look at futures one last time. More Squawk on the Street. Right after this. Let's take a look at oil. That's a notable chart there. We're not too far from the lows of the year at this point. And we're down to some 17% in a relatively short amount of time.
When we were rallying, it was bad for the market. When we go down, it's bad for the market.
I know.
Heads I win, tails you lose, partner.
Yeah, you can see it right there up, just 2% for the full year. And as you see, down another 1.5% in the early going here, a bit above 73. We got an opening bell a few minutes away, and we'll squeeze in a mad dash as well from Jim. Don't go anywhere. All right, let's get to a mad dash. J&J CEO joined CNBC yesterday.
Yes,
you were talking about talc. You've got more on that.
Yeah, I asked him a question not about ovarian and talc, where they've been winning a series of cases, 16 in the last 17. I asked about mesothelioma, which is also part of the overall arching package that J&J wants to pay off. But last night, one of the reasons I asked for it, and I think he had a problem with his audio for that particular moment.
Yes, he did.
Was that I asked about mesothelioma, and sure enough, last night a jury came down in Oregon and ordered J&J to pay $260 million to a woman who said that she developed mesothelioma by inhaling talc. 200. Now this is what's really interesting, David. 60 million compensatory, 200 million in punitive. So now, the stock's not reacting because I think people don't know about it.
They don't? You think it's a continued risk then, this litigation?
I have to say it is.
We're talking about a different, right? Not what they have settled on.
Right. Well, they haven't. There's still no settlement agreement. They're fine.
Correct.
They need 75%. Now, mesothelioma would be included.
Yes.
Again, these are not ovarian.
Right.
The last last one was also misleading, but I will say, David, you cannot dismiss the existential nature of these big health lawsuits because we know not to dismiss asbestos as a problem. Ever.
Stock Exchange, of course, where we are right here, but here's a look at the real-time exchange back at our headquarters in Angeles, 6 New Jersey. Corteva Agriscience did the honor celebrating its 5th listing anniversary over at the NASDAQ. Nuvalent, a biopharma focused on oncology. All right, where do you want to start this morning? I'll open the board to you.
Sure. Well, I think that we've got to deal with the notion that the market is soggy every day. That you come in at 334, the futures are down big, almost regardless of Europe, and you say to yourself, okay, what's in control of this market? What's the metric that people are looking at? And I keep thinking that what people are looking at is that the Fed made up its mind that it's going to be higher for longer, just when the data is weakening. And so people feel that maybe the Fed is losing control of the narrative because the PMI, for instance, when you drilled down yesterday in the PMI, it was so weak that you have to say, all right, if you're in an industrial company, be careful. Yes.
And there it is. Look at that move in the yield in the 10-year. I mean, we were at 4.6 not long ago.
And that's really important because when we were 4.6 going to 4.7, we were told to sell. Well, now we're at 4.3, maybe going to 4.2. We're told to sell. You can't do that. You can't do that. I mean, I want inflation to go down. Now, I think everything's going to be decided by Friday. When we get that employment number, if there is a dip in employment, we get unemployment above 4.
You think we could go that much higher?
I don't think we can.
No,
I'm saying
where are we? 3.7
No, I'm
still,
saying,
aren't we?
but we...
Wishful thinking, guys. It could probably happen. Good morning. Well, I'm not going to fall for it yet. We're getting ready to squeeze here in a second. We got a hammer. We could break out, but I think we're going to right now. Let's see if I got my... They're wishing for higher unemployment, huh? They don't care about the people. Damn it, come on, Jim. I gotta get my platforms up. We got a lot going on today. Oh, come on. Good, I'm glad we dropped. Well, that took forever. So we had a gap up there, something happened right in here. So they got the unemployment numbers, is that what it is? Labor turnover, factory orders. Set the alert above the 200, but we got to focus here. Ah, damn it. I'm getting ready to be honored on Thursday, so I probably won't be here. I'll be here right at, well, probably not much at all. I'm getting a plaque. We do have 2 engulfing candles. I'd love to see another one, but June 5th. Let's get another red candle here. 528 strike, or actually 527 if we get one more candle. get 5, means we're at this price here. Well, 10. So it's the 527 call for June 5th. I'm putting in, I've got 10 contracts I'm getting ready to buy. I want to see one more red candle down here. That or would just break out here. But just for the few seconds I listened to idiots on CNBC, they're very bullish on one rate cut before the election, because they want to do everything they can to get this market up and keep it where it is. I've never seen anything like it during an election year, and they might be biting off more than they can chew. So we got 2 soldiers now. There's the third one. That's a big engulfing candle. That's a gap. So they're doing their best to bring it up. Somebody put an order right there, and the market maker did. This is the resistance channel right here. Can I change that? Oh, I can go down here and change the... Hell, I didn't know that. That'll save me a half a second. Yeah, I missed that scout. CRM popped. Here we go. We're above the VWAP. Volume slowed down big time to a halt. So they're making up their mind if they want to break this or not. I'm not quite ready yet. We'd have to get to 526.60. Yeah, I'm getting honored on Thursday. I can't wait. Going to give me a gift. Maybe the key to the city. So we're getting ready to squeeze. We'll know what's something in 1 minute. If we go below this line, it'd be a double bottom or back here to the 200. I don't know why I got the 200 on there. There's the 200 SMA right there at 275.43. Let's drop the VWAP. This is an entry if you want to take the risk, but I'm going to see if we can get the 200. $528. I'm going to change it to 528. Here we go. No, not yet. That was the 1, 2, 3. The volume's to a halt again. You got to watch the tape. There's some buys coming in. And what's all this 12 about? See a bunch of 12s. We got a new 1, 2, 3. I'm not convinced yet. I'm gonna have to move on here. I'm just going to put what I'm watching, but I'm not. I mean, this is very convincing, but just not feeling it yet. But I think they want it to break. Yeah, they want it bad. They want it to break. Come on, bitch. I'm gonna go for it. 15. It's probably a mistake. What do you think about that, Fannie Willis? I hope they give me a holiday, sneaky snake. So we're at 127. Yeah. 527.08 to 528.97 is the resistance channel. Give me the key to the city. Give me a trip to Mexico. I might get my wish. Or a big bonus. 20 years. I'll be one of the top, probably 30 people that made it that far.
I find it hard to believe.
Break it. I want 527.08 and I want it now. Mike, are we going to get it?
It's my money and I need it now. It's my money and I need it now. It's my money and I need it now. It's my money and I need it now.
It's your money. Use it when you need it.
Jen, can you hear me today? Mike, I couldn't get Jen to hear me. She could hear everything else. She's not even showing up today. Jolts is coming out in 10 minutes. Well, I just got jolted. Google and some other laying off 1,000 people. Come on. I'm going to put a tight stop on this if I don't hold the VWAP. So now we've retested. We could get one more little candle down, but this has to hold right here. This is retesting that bottom trend line. See, 1, 2, 3, boom, 1, 2. So we hit right little sweet spot there. It could come back, could have come back one more time and hit it, but we're going to count this as that. But after it broke resistance, I wouldn't mind getting 150 out of this baby. And I'll be celebrate. Dance to the music. We got a flag on the QQQ. Yeah, this is because this is close. It's taking a little bit too long. But I think they're waiting for that number. We got 6 more minutes. Yep, there it goes. The old Jim would have got out of that trade by now. Right now we're a little bearish, but we're still squeezing. We're still safe because we're above this resistance line. I mean, it perfectly pulled right back to it. So if we can not go down there again, I'll be okay. This new improved Jim won't get out of the trade. Think about get out there. You're right. I got glasses I can see now. Okay. Come on, you suckers. I'm letting everybody know this is a little risky. Yep, worked it up. Break it. Looks like we're going to get the 200 after all. So there's the Head and Shoulder. CRM up. And we're still above the 9 on the hour. And we got a doji. We got a nice hammer right here. These are all bullish, including that one. Now it's turned into a spinning top. SPX is at the 200 on the 1 minute. Come on, baby. Could have added on there. I'm being honored, man. You've got to be able to break out. Roaring Kitty is about to become a billionaire this week. Correction, red book. Year to date, 5.8 versus 6. Woohoo! I did it. Oh, yeah. One of the most happiest men in the world. I did it. I did it. 157. Got it. You can thank me later. I'm high on elliptus. Jim, great job. We knew you could do it. Oh, I removed it. Come on. Undo the remove. Why are you acting like a bitch? Dog, that is. I gotta watch what I say. I could offend somebody. Oh boy. Keep going, baby. I can't wait to see the grade on this one. I walked you through it and everything. She still can't hear her. She hears the alerts going off. She just can't hear me. I don't get it. She can hear everything else. I wasn't going to get shook out. I had balls. I've got the biggest balls of them all. I can't tell you how good I feel, man. I'd have to say that was pure luck. You're taking a big risk when you jump into a trade before news comes out. I mean, that was, I'm going to say, a little bit of skill and a lot more luck. We had an inverse head and shoulders right here, and we touched that shoulder at the right time. Here's your left, then your right, and as it started to come down, I added on to it right there, and boom. So that turned out to be a good trade. Good enough to go in there and whip up some tonic. It's trades like that that you finally know you're reaching a level that you thought you'd never hit. And to come in here late. These are big soldiers here, so if it does come up and double top, we could have a breakout. But now we got to get reaction to the market and see what they think about how they think about this. Right now, it's a knee-jerk reaction. My balls are made of steel. That is so strange, Jen. You sure you can't hear me, girl? Checking. Is Jen out there? You know I really love you. Yeah. She's not even in the room. They're trying to screw, they better not. He's mine. I can't tell you how happy I am. Can she hear me on my phone? I hope she didn't hear me say I love you. I'm single. That's like stealing money from a blind man. Oh, you're blind? ABDB, ADBE, Adobe. Oh, one of their speakers may be damaged. That's a good point. The Jim and Tony watch list is pretty red. Dell's up today. It's had that. This is day number 3 for Dell. After earnings, 1, 2, 3, 3-day rule. Gosh, it makes me happy. We got a symmetrical flag with a resistance to break on Dell at 137.57. Support will be the second touch off the shoulder line off the 50 SMA at 136. I would have set your alert right at 136. Create alert, 136. Below. That would be the right shoulder off the 50. Or the 63 would be a double bottom. We do have a crossover between the 50 and the 63. I think I've really got it today, guys. My trading genes are on high alert. Boom, baby. CRM's at 63. AMC at 482. And where's GME here? Where is it at? I'm going to go urinate and celebrate. Where is it? Oh. Okay. VICTORY. That is my battle cry. GME's flagging out. Anybody give me a good grade yet? A+. Thank you very much. I remember when I was 9 years old and I got my first F. It destroyed me. I went and shaved my head bald and joined Helter Skelter. And I did my best to pass that test. Adobe. Press release. Adobe to announce second quarter earnings results on June 13. So this is an earnings play. Adobe. F was a good grade for me in school. We're at the shoulder line of a Head and Shoulders on SPX. SPY hit a 1, 2, 3. Hit that right shoulder one more time. Damn, I'm hot today. It's not every day you get a billionaire call you on the phone in the morning, or at least worth a couple $100 million, and tell you that he wants to present a plaque to you. It'd be nice to see like a $10,000 check or a $20,000. Kind of want to go in there and do an extra cleaning job tonight. I gotta go. I heard if you kept urine in your belly too long, that's not good for your liver or kidneys or anything else inside of yourself. So I've got to go and meet, I hate to say it, Nancy in the bathroom. See how pale I am? You think it's easy to hold a gallon of urine in your stomach?
Talk about applying the new technology into your search tools and the products that you provide to big companies, a lot of big banks, big retailers. Is that coming from in-house development? How are you putting that on top of your offerings? Is it a layer that you're building, or can you just source it from what's available publicly through these language models?
So our core strength is our Search AI platform, and what it does is it takes all of your private data. So businesses, our customers will.
Was it Washboardjim that said we could pull back and hit the 200 SMA on that last scalp there? That's what he said.
Builds Gemini models through Amazon
very
Bedrock.
popular.
There are so many out there now. This entire space is just growing, and you're seeing models even open up in open source. But fundamentally, the way our customers use us is to provide that private context without shipping all your private proprietary data. And so they're able to build these generative AI applications in a very privacy-first, security-forward model. And that's really the future. That's how these applications are going to get built.
Is there any risk that your clients or customers would say, okay, we used to pay Elastic to do these search functions for us. Now we can just plug our data into one of these models and have them program it for us. We don't need to have specialty programmers. Do you have to stay one step ahead of that? Or what do you see as any potential risk that this can be done in-house?
But that's, if you think about any business out there, whether you are a retail store, whether you are a manufacturing company, a financial services company, your data is your lifeblood. Your information about your customers, your proprietary, processes, that's what you differentiate on, that's what you compete on. Nobody wants to hand off all of that private data to these large language models. And that's the reason why these large language models, whether it's from OpenAI or Google or whoever, they've all been trained on publicly available, non-proprietary information that's out there on the internet that you can just scour and learn from and so on. They have no concept, they have no understanding of a business's private proprietary information. And that's exactly where retrieval augmented generation and our Search AI platform comes in. We connect the dots in real time. So when a question gets asked, we're able to, in real time, tell the large language model, only answer this question based on these few documents. Because of that, the large language model does not hallucinate. It knows exactly how to construct the answer. It's able to give very precise answers. And it does not need to have access to all of your proprietary information, which is what all of these businesses care about. So this model is the only way businesses truly expect to be able to do things going forward. And that's what's so exciting about the space that we're in.
So do you have to hire new people that know how to do this within house, or these programmers that you are adapting to this? Because if we are to believe that this technology is completely novel in the last 18 months or a year, how do you build a workforce around that? Have you needed to go out and find kind of new ways to think about it, or is it able to just kind of adapt and tweak within workers and the expertise you already have?
That's a great question. And
that's a good question.
Large language models, foundation models, as they're often referred to, this is body of work that's been going on in academia and in a lot of companies for a very long time. Now, ChatGPT really came onto the stage about a year and a half ago. This was the first real attempt by any company to get this out, democratize this space. And since then, this has, it's become part of our daily conversations. But the reality is that there's been a group of people who have been working on these machine learning techniques for some time now. Within Elastic, much like with other companies out there, with a few other companies out there.
Okay, when you're scalping the SPY
for the last 8-9 years, we've.
And you're watching it hit your shoulder line. Then the next pullback, you got this here higher low. So that's a good indicator. And then you had that big engulfing candle. See that higher low. Both these candles, this is an inverted hammer down at the bottom of the chart, which means that could be bullish. But this is kind of weak. That candle is. Can you hear me, Jim? Roses are red, violets are blue. I'm waiting for a chance that you can hear me too. She can hear her. At last. It's like the first time you ever hear. Hearing me is like if you were blind and you can see. You can see at last. It's a wonderful day today. She can hear me. Do I sound as sexy as you ever thought? I might sing to you a little later. Right now I'm rewarding myself with some celery and some cream. Creamy ranch dressing. Yum, 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 yum. Ooh. Man, I'm getting rewards everywhere. I think it's time for me to break out of the closet. Spies at the 63. We're waiting. This could be the first day of a reversal. The market thinks that we're going to get an interest rate cut right before the election.
Of this year as well, and then a gap down to the downside. That failure of that neckline and a gap formation is actually fairly bearish.
Yes.
And it really does make it hard for technicians to really
Okay, watch 200 here.
on those levels just because of the erratic price action. Now, where do we go from here? If you're looking at like this A2 portion, I just moved that channel from what we saw last
The
year
same
over to
strike.
where we are right now, and that's once again the expectation. Maybe we range out.
See if we can get a little bit cheaper.
$15 and say $18. The other thing is
$5.28.
RSI is actually significantly or severely oversold levels. That's a little concerning when the stock kind of gets out of its normal range for RSI. You kind of want to put your flags up because maybe the move to the downside is not over yet. And then we have that max
Come on, guy.
bearish formation. So I would say range bound is probably the most likely scenario in this situation. And it's going to be very tough to be able to break the stock to the upside without a good fundamental catalyst in order to hold those prices.
I love that perspective. It's like full 180, right back to where it started in that range-bound trade, the old that A region. So we've kind of did this venture into and past $20, didn't last, head and shoulders, broke down, and full retreat back to where we were. So this kind of massive failed breakout, but important to note that the breakout was driven by earnings, and then the breakdown was also effectively driven by earnings. So very interesting that the analyst is coming to upgrade this right at the moment where it's fallen back into its old range. Sentinel 1, okay, interesting player in the cyber trade. Let's talk generally positive stuff this morning. First Solar and American Express are other names. Let's go First Solar, Jenny, where it's been on this big run and really stand out in its
Okay, Jenny, tell us.
And also some of the other solar trades a couple weeks ago tried to rally too.
I know solar, like the solar ETF was looking really interesting for a while there. It had like its best 10-day stretch in years just a few weeks ago. And
I will say First Solar did close out, I believe, the month of May as one of the U.S. performers in the S&P 500. So
Ooh, look at that.
right, and I know this name has been like the outlier in the solar space, but it has only continued to really drive that divergence. I mean, like they're not even close to some of their closest competitors, even though we've seen a comeback in these other solar names. So we are at this point now up almost 60% this year. We've pulled back from highs by just about 5%, but a really solid player in solar. I think one that has continued to really benefit from the various changes we see with government funding. For example, Morgan Stanley did mention this today, highlighting these recent policy changes that will incentivize developers to procure more domestic supplies of their clean energy equipment. And they said that First Solar is one of the biggest beneficiaries of these policy changes. So to account for the potential average selling price uplift and associated earnings accretion, they did update their model to reflect around $35.14 a share in earnings by 2027. This name also has not a single bear in it either. I mean, there's 6 holds and 28 buys, although average price target is $255. So that does not imply any upside from where we're trading. I think it's 6% downside from here, but at least as far as overall conviction goes, it seems like everyone is in agreement. I mean, the majority are buy here.
Yeah, well, the chart went straight up. So,
right, so you just hope that people will reacting as such.
Yes, they're kind of catching up here a little bit. So, I don't know, man. It's pretty wild stuff.
Yeah, it was wild stuff, baby.
It's like a real change.
I'm looking at it to go lower.
It's just like a one-off crazy move.
Well, I'm glad that we actually looked at this because actually I didn't even know that the stock actually made these advances, which is very impressive. But this one's actually going to be a very simple chart. We don't have any head and shoulders, and I'm not talking about pennants or anything. It's just a consolidation or this move to the downside that we saw last year. We had a consolidation period for about 6 months, trading between $135 and $175, kind of bouncing off that 20-day SMA. And now that 20-day SMA is active.
He's using the 20-day SMA.
For the stock, we'll get back to that here in a second, Oliver. But this should be in a textbook somewhere because we actually saw positive bullish divergences within the RSI before we actually saw the breakout to the upside, which is exactly what we want to see. The pricing internals show that there was positive bullish price action or bullish momentum. You also have that complemented by the volume as well.
Sir, you got that chart wrong.
From February to mid-March of last year before we broke to the upside. We actually had the same situation occur with the MACD where we saw a bullish divergence where the 12 crossed over the 26 EMA, back at the end of February and then in March across that zero line, making higher highs and being able to once again kind of confirm that breakout. Now, is this going to be sustainable from a chart standpoint? Maybe not, but if you're going to utilize that 20-day moving average as an area of critical support, that's the price that I would be looking at, which is sitting at around $229 right now. But once again, if you kind of look at a longer time frame chart, which I do not have, it still has some ways to go, as Jamie was kind of talking about, but an impressive move to say the least. But this is one of those situations where it's very simple. Pull back, consolidate, push higher, maybe retest that 20-day and then continue to push higher from there.
All right, so the consolidation part seems really necessary at this point. So, I don't know if you want to be a crazy person to just try and short after this huge run. I mean, that's like bashing your head against the wall a little bit, but maybe selling some upside here makes more sense if you aren't necessarily buying into it. If I'm just as options to think about if you're suspicious of the move. I guess I'm showing my bias a little bit. I'm a little suspicious of the move. But okay.
I was going to say, if you're suspicious, I think you're suspicious of the move.
Right. Okay. American Express. This one is pretty amazing. Yesterday we had a guest on from the Gabelli Financial Services Fund that loves American Express. They're in Berkshire because Berkshire owns American Express. Then they own American Express separately, and I mean, you kind of see why. I mean, the chart's just like a rock. It's amazing.
It is amazing, and I think you look at the demographic it serves too. I mean, it serves this typically more I'd say higher income, insulated from inflation type consumer that is corporate travel and
Uber forcing you to use your corporate card even though you didn't even select it.
I know. I can't even go dive too much into that. I have a lot of feelings about that. But Morgan Stanley raised its price target on American Express. Wells Fargo raised its price target on American Express to $275 from $265 with an overweight rating. With an inflection, they said that in global acceptance and volume penetration weights well below the U.S., They believe that overall international will be their strongest segment in the next decade and beyond. So they also say the growth story at this point is underappreciated, and American Express is now their top pick. So, I mean, it's pretty optimistic as far as like international recovery goes. I think that if you're American Express, you were thinking about time, because that has since been like the growth laggard of their earnings for several years now. But overall, 28 analysts, there are 16 buys, 8 holds, 2 underperform, and 2 sells. So this is a pretty mixed picture. I remember when there was a sell rating on this name initiated, and it was like, what are you thinking? I mean, this has been like the biggest benefit of the travel, the overall like credit landscape. But hey, I mean, we're still hanging on to a 27.5% rally this year. We pulled back about 2% from its recent highs.
Okay. Yeah, a little bit of a slowdown, but that's kind of what it's done. It goes up and slows down. I mean, kind of what we were just talking about that you would want to see for solar to consolidate on the way up. American Express has had many moments, it seems, Kevin, on the chart where it's paused, refreshed, moved higher. Am I wrong?
I would say you're right there for a little bit here, but I would say the reversal is different, and we kind of were suspicious when it came to First Solar. I would have to say First Solar's chart looks a little bit more constructive, in my opinion, than it does for American Express. And here's the reason why. We had last year the 20-day moving below the 50-day moving average. You had that bearish formation, and they bottomed out. Pretty much did, for the most part, a double bottom out there in December, or in November. And in November, we also had the cross of the 20-day above the 50-day moving average, which is bullish. And then that's when the stock was
Watching
off.
SPY here with the 1, 2, 3. We've got, that's kind of a bearish. So we get the higher low. I hate for it to drop below the 63 and keep that 63. It's right now, it's retesting. AXP. I had the Fibonacci's on this one. Or do I? I got something on it. Yeah. I'd wait for the 50 SMA. Let's go over the watch list real fast. Always clean. This is Jim. May I help you? This is a recorded phone call. Hello. Hello? Ripper man. $234 maybe. We're going to draw a trend line. See this here, kind of, you see them consistent trend lines right there? I have one right there. And one right about right there. We'll set an alert just right above it. Right around 235. Boom. We'll just wait for it. SPY came back and hit the VWAP here, so this is where we want it to break. If we bounce off this number 4, we got 1, 2, 3, we're in the sweet spot. We're in the sweet spot for the breakout, folks. It's got to move up. SPY's in the sweet spot. Oh, I can't see what I'm doing. If this doesn't hold where it's a drop to the 200, but it has to really break here. This is where it has to do it. I mean, it can drop here. When it comes up here, it has to break here or the game's over. I gotta get this icing out of my face. I'm gonna lick it. Right now it's 9:50, so I'm gonna go work out here in a little bit before I eat my lunch. A small salad and barley soup. It says it's ready, but I don't think so. I think it's bullet bearish. This is it. I mean, where's my call at? On the hour, we got a symmetrical flag. We got an inverse head and shoulders. So this looks good. This really looks good. That's going to be our new resistance. I'm not looking at the SPY, yeah. This looks real good. And we got to break that blue line. This looks real good. I mean, it can come back down here and hit this again, but this is a symmetrical flag. We're getting higher lows with a 1, 2, 3 and a 1, 2, 3. This thing comes up, breaks out the fourth time. Break it, baby. Strike. 528 at 121. Oh, shit. Well, that sucked. I'm typing it in, the knife told me. Should have added some right there. I just didn't think about that. It's really not the best time of the day to be in it either, but We're at the 200 now. Add at 108. I have to get stopped out here. We got 10 contracts at 108 and 121. Exclusive, sure. Yeah. Get another 10 here. Maybe about 2,200 in the trade, but I'm gonna wait. There's some big sales right there. Much more right there. So they're getting out. $1,600 right there. Someone got 1,000. Biden to speak at 2 p.m. That's going to be a screw up. Break. Break it. Tell America reshoring ETF outshines S&P without owning Magnificent Seven. RSHO. Come on, you bastard. Yeah, it's not going in my favor here. Get all the chickens out of the hen house. Break it. Damn. Here's your 1, 2, 3 again. 2580 was my pivot point today. 525.80. I was right about saying it could pull back more. RSHO. Jimmy no like. Let's get all the way back up to here. We got a 1, 2, 3 at the bottom, and we have a 1, 2, 3 up here. So we get back up here, it'll be a 4 if we get back up there. I got an average of 115 at 528 strike. ADBE pulled back. We got Lily, NVIDIA. The Lily's squeezing. NVIDIA might have had a new high. Baba, and then at frickin' Boeing. MCD, Walmart, I'm not far out of the money with my SPY calls, so I'm not really too worried yet. If we dropped another notch, I might start to sweat. I hate to go and leave you all raw here while I'm going exercise, but CRM had a knife now, and this had a pivot point area. Come on, SPY. You had a little bit of pop there. Let's break the 200. If you break the 200, I think we can break the VWAP. Break it. Do what I say. Should have grabbed some more, but I didn't want to put no more money in this thing. What's Mike in? QQQs? Calls? Yep. SPY might not be the one to be trading right now because it was definitely way overbought, but let's break the 200. Now they don't want this thing to go. A lot of weak hands in here today. We're at the pivot point. Oh, it's 5:24. It was 5:24. Shit. It was 5:24. That makes me worry some. Well, it's not going my way. Last time I got a reward, it was homecoming king at college. Break it. We just want you to go ahead and consolidate here off this head and shoulders. I know it's a puny one. And break the 200 on the 1-2 free bits. That's all I want. I don't ask for much more. I gotta pay rent. Jim, that could be an ascending triangle. What are you talking about? You might be set up for life here. I know what's missing. I'll be right back.
Break it.
Break it. Tim America restoring ETF without the Magnificent Seven. How dare you? I think we're going to make it. Right now, Mike, we're above the 63 on the 1 minute on your QQQ. Stay above that. We do have an inverted hammer, though. But if this thing bounces up... You still in it? Okay. Break it. Mike's in the QQQ and Washboardjim is in the SPY. And if this SPX breaks the 63, I think it'll break the 200. Maybe. Now the 200 is more harder resistance to break. I'm now at 110. I could sell here, but I'm not going to. Because I got balls of steel. Ain't that right, Nancy?
Last time I checked, you did.
Break it. SPY will close over 528 today. Taking calls. Okay, Georgia. Let's do it. Fabian, I love your name. We're at 115. Jimmy's even. This break the VWAP. And we're off to the races. Let's all join hands. Break the VWAP. Boom. Break it. Break it. Break it. Break it. QQQ broke the 63 and has respected it very well. We got a double top coming up. We're head and shoulders. And if either one of them break, see you later, mama. We're at 118. I'm up $60. I was. Stop it. Come on, you cowards. Back to the 200 and retesting again. It needs to hold this 200 to stay game, to still be bullish. Nancy, will you make me a shot of vodka and a Valium, please? Make that 2 Valiums and 2 shots. Okay. GME broke out of the 200. Meta. Meta has to break the 50 SMA on the daily. Tuesday is your least favorite day to trade. I really want it to hold the 200. I'd rather prefer that than come down here because that would be kind of a breach. There it goes. I didn't want to see that. But that's okay. It'd been more bullish if it stayed above the 200 on that. What was resistance now is going to maybe be support. Starbucks up today. Lulu's up today, and Walmart up 32 cents. Apple, they were really pumping Apple into the future this morning. saying that could really open the doors up to AI. More people will be using AI if they, so I don't know what the heck he was talking about, but God darn it. Probably should have sold it. What did you miss? You missed me being in the, getting hurt here in SPY. There's a 1, 2, 3. And we got our one candle above the VWAP. A little bit too late to be in this thing. This could be the last chance. I'm still going to stick it out before it gets nasty. So I'm going to set a stop here if we don't, probably off this right shoulder. Carvana's up 72 cents today on the dip. Yeah, it's not being very cooperative. AMD was hit. Oh. Real close to my support level here. AMD double bottom, triple bottom with a double bottom. Yep, there we go. Come on, you sucker. This is the last chance. Second right shoulder. Actually, it could be lower. Yep. Right before I said it. I'm getting a plaque tomorrow. There it is. So now Wall Street thinks they're overpriced, huh? AMD double bottom in here. We got a hammer on the QQQ with a 1, 2, 3B right now. SPX sold off with it too. We got a hammer on the SPX. We got a hammer on the SPY. And we just got a snake on the IWM. NVIDIA new low. It's not good. Not good. It's hard to believe. We broke out of the fallen wedge. I don't want this to be my first losing trade in a while. I'm gonna get my mind off this for a second.
You're in the industry, does that seem like it could be beneficial for the world of crypto?
I mean, certainly I think as an industry we would prefer it to be a bipartisan issue.
Right.
I believe the latest stat I saw is there are about 92 million crypto holders in the United States, so it's higher than dog owners. I think I saw Anthony Scaramucci tweet that out this morning.
Yeah.
So it is not an insignificant portion of the population and the voter base, and I think, I mean, my personal preference would be it not be a politicized issue.
Right, understood. You know, it's interesting too, because, you know, Bitcoin really held during last year where we saw a lot of volatility. We saw a cleanup act that was happening when it came to crypto. But, you know, it held its own, and that really said something as well, didn't it?
Yeah, I think that's true. We continue to see investment coming into the space. We continue to see signs of incremental adoption by institutions and enterprises, right. and I mean, certainly that trend is continuing in 2024.
Yeah, AMBC Crypto's analysis now, it says Bitcoin's path to 100,000. That really 67% of crypto users believe Bitcoin will rise 80% by year end. NBC Crypto Survey finds.
From here?
Are they being too optimistic?
Yes.
Is 100,000 in the sights? If it's not this year, is it in the future?
Look, across the industry, there was broad
I'm still in it.
consensus that
I'm
we
gonna
would
win
hit
it.
a $100,000 high in the last cycle. That did not happen. If I could predict the price of Bitcoin, I would probably be on a tropical island somewhere. So it's really difficult to predict, but certainly when it's an asset that is finite and we see increasing appetite for that asset, you would expect it to go up and to the right continuously over time.
Yeah, and I'm glad you mentioned the pension.
They want it to go up to 140,000.
Recently as well.
120.
More and more investors
Or
in
100,000.
Bitcoin and more. Thank you so much, Jamie Leverton, Director at WonderFi. Thank you. Coming up next, the disruptors. George Sillis will take a look at First Solar. In fact, there was a bullish analyst note from Morgan Stanley. The stock is up over 50% this year, and George will give us the details and an example trade as well. Next.
I gotta do my exercise. I'm still gonna hold on to this trade while I'm on the treadmill. Could spend another $800, but I don't want to take that risk. If we come back up and break the VWAP, hit 526.75, so that's about $1. I'll be back. I'm still in it.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Glad you're with us. Look at developing stories this morning. And Kevin Hinks is with us, Senior Equities Contributor, taking a look at Intel. We've talked so much about new chips this week, and now it's all about Intel. Tell us about that.
This morning it's Intel's turn, Nicole. They are now announcing their chips. It's called the Intel Xeon 6 processors with efficient cores, or E-cores, and they say, this is what Intel said at this Computex conference, is that they build cutting-edge technologies and architecture poised to dramatically accelerate the AI ecosystem. This is an interesting thing because it was NVIDIA, it was AMD, NVIDIA stock went up, AMD stock went down. Now it's Intel's turn. They're announcing a whole slew of chips that they think will advance both AI technologies and PCs, and the stock is down 0.6%, down about 19 cents. So very little stock reaction to everything that they were introducing today. Remember, this is a big conference, and it looks like NVIDIA has grabbed all the headlines. Intel trying to come out with their new products, not really moving the market for their stock today, Nicole.
Yeah, I mean, they called it Taiwan's AI Tech Fest. I mean, that everyone had to come. It's a big deal what's going on at Computex in Taiwan. So exciting stuff that is emerging bit by bit from each one of the big players. Thank you so much. Kevin Hanks, thank you for that. Now it's time to look at the disruptors. George Sillis is with us, senior markets correspondent here. Taking a look at First Solar. Some positive comments from Morgan Stanley, right, George?
Yeah, I mean, Nicole, the stock is performed exceptionally well. If you look at it over the last 30 days, it's up like 39%, and this comes on the back of earnings which were published back in early May when we talked about this stock, and there was obviously some valuation gap, I'll call it that. If you look at the earnings estimates for the company, which was published for 2024 at basically over $14 a share, it was really cheap, and it seems to fill that valuation gap. Now, Morgan Stanley still maintains an outperform rating, and they moved their price target to $331 because this company, from the standpoint of solar, really isn't exposed to where the challenges are, and that's the residential solar market. There's been too many solar producers out there. The residential installation market has been relatively soft because people are just trying to get into homes, let alone add or install solar into existing homes, which we know from an existing home standpoint has been relatively sluggish. And effectively, when you look at First Solar, they're actually not exposed to the residential market. This is a company that's exposed to the commercial and industrial and the utility grade markets. And if you look at things like the Inflation Reduction Act and all the tax credits from a manufacturing and installation standpoint that First Solar has received from the utility standpoint, their earnings estimates have been relatively robust, even going through 2025. But as I noted back in May when they reported earnings, there seemed to have been a valuation gap where the stock was trading at a very low multiple. Back then it was around 13 times earnings, and now it's around 20 times earnings, which is right in line with its 5-year historical average. So it seems like the calls by Morgan Stanley, and even Goldman Sachs, by the way, maintains a buy rating of $302. And I think it's really based upon the visibility that First Solar provides the marketplace, at least for investors, because of the utility grade installations, which are again locked in contracts from utilities, which essentially utilize public tax money to increase their solar installations.
Yeah, I mean the whole group is down today, as we see. So it's just a little out of favor in the big picture. So that may be another reason why, even with the overweight, that it has this down arrow. Let's talk about the example trade, please, George.
Yeah, so if you look at the stock price, it's made a remarkable move in the past 30 days. It's up about 39%. So stocks typically follow an 80-20 rule where they'll make 80% of the move in 20% of the time. So with that said, I think First Solar right now might be fully valued, and it may just be stationary. In other words, just trade sideways for at least the near term, maybe the next couple of months or so. But it also could continue to trend to the upside based on the financial fundamentals. So with that said, what I'm going to do in this case is just harvest some yield. If you look at the price relative to the 10-period moving average, which is around the $260 area, it could certainly drop to that level, but still be intact from a trend standpoint. So I'm just basically going to sell a June monthly cash secured put, the 260 strike, and you can actually earn about $6 a share or $600 a contract by selling that. So if you sell this put, you have to be willing and able to take ownership of the stock at $260. That's 100 shares per contract, but your cost basis is basically $254. So with that said, the stock can move, about $17 to the downside before break even. So it's a bullish trade, but it'll capitalize on the stock just moving sideways because that $6 premium will erode to zero by expiration in 17 days if the stock holds the 260 area or higher.
Yeah. And look, on this same day that Morgan Stanley is putting overweight here, and thank you for that example trade, on the same day you have GLJ Research reiterating a sell on SunPower, and that's down 9%. So it's hard for a name like this one that seems to be one that Morgan Stanley views favorably, because GLJ has been noting SunPower and pulling on a loan and all that. So that one's to the downside. So a real dichotomy of what's happening in the group. George Tillis, nice to see you. Thank you. Coming up next, it's time for our 360 round. We'll take a look at the state of the labor market. Jobs, jobs, jobs. Because we had JOLTS, ADP, jobless claims. Friday will be the non-farm payrolls, and the Fed's watching. So are we. What do we need to know? Trading 360. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Yeah, this is gonna be tough
It's
one.
time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for the 360 round, all about jobs. We got in our job opening. We're looking at three-year lows. I mean, there was a time a couple summers ago that it felt like there were more jobs than ever. There was 2 to every 1 person that was looking. Things are changing, and the market is changing a little bit. The Fed has orchestrated this. Now they're looking for it to get tighter, and that's the whole point. Mark Hamrick is with us, Senior Economic Analyst, Bankrate.com. Stephen Rasciuto's with us, U.S. Chief Economist at Mizuho Securities USA. And I should clarify, the Fed basically is looking for unemployment to rise a little bit, you know, and that's been part of their plan. Stephen Rasciuto, what did you think about today's report on JOLTS? What did it tell you?
Well, to be honest with you, I think you've got a very mixed bag there. You've got a little bit of a reduction in the openings, but there's still substantially more openings than there are hirings taking place, and there's still a lot of hiring taking place. The hiring numbers went up, and the quit rates basically moved up a little bit as well, which tells you the labor market remains tight. The net result of all the data, even though the opening numbers came down, the quit rate and the hirings, telling you this is still a dynamic labor market. That hasn't changed, and as a result of a dynamic labor market, the Fed's not getting what they had hoped for with the current level of rates, which is why they have to stay high for long.
Yeah, understood and well said. That was so succinct. Mark Hamrick, some of your thoughts?
I don't think the Fed's targeting the labor market. They would become more attentive to the maximum employment part of their dual mandate if they were to see unemployment rise substantially, obviously at 3.9%. That's the least of their worries right now. But what they obviously are targeting is demand. And perhaps one natural byproduct of reduction in demand is, of course, fewer job openings and less hiring. But hiring is still robust, and the demand and supply of labor is still out of balance, largely favoring workers if we're speaking of it in the broadest sense. So this is in the context, and I think this is the most important point, of normalization from the almost bizarre situation that we found ourselves as the economy reopened. That was not normal, and we're getting closer to something that is more akin to pre-pandemic levels.
Yeah. So at this point now, I think we did a great summation of JOLTS overall. And, you know, what does it signal going forward? Because if you have the job openings falling to new 3-year lows, then we look forward to Friday. How are you feeling about Friday? And this one I'll direct to you, Mark. I mean, are you waiting to see some certain parts of that labor report on Friday?
Well, always, Nicole. You know, it's the most exciting time of the month, although the CPI release and PCE are exciting as well. I think it'll probably be something of a plain vanilla report unless we have something that shocks us, because this job market has remained more resilient and robust than had been expected for so long. The long and often predicted recession didn't materialize over the past 2+ years. And that is a good thing in the sense of it's almost boring, you know, but it will never be boring. But you know what I'm saying. In other words, we're not being shocked by the release of the employment data. If anything, it's telling the story we've seen for some time now, and that is normalization and doing so in a modest pace.
And so with all of this, I mean, could we say that the economy is slowing? Stephen Rasciuto, would you be comfortable in saying that there are at least parts of the economy?
I'm going to watch this stock go up on the treadmill.
The economy is definitely slowing from last year's 3.
And I'll be right back. About 15 minutes on there should be enough. My resistance to break is going to be 526.21. And I added some more on here, so we're going to see if it works out. $121. About just take a loss and just
Mark and Stephen, thank you so much. Mark Hamrick at bankrate.com. Stephen Rasciuto at Mizuho Securities. Thank you both very much. Securities USA, let me clarify that. Thank you for joining me, friends, here live on the floor of the New York Stock Exchange every day for Schwab Network. This was Trading 360. I'll see you at 2 p.m. for the watch list. In the meantime, download the free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Keep it right here. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network.
Lichtenstein.
Anytime, anywhere, on any device for free.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to
when
a
you're
Schwab
down.
One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets.
Now I'm down $345
on any device for free. Welcome
More
to
than that
Trade
now.
Live on the Schwab Network. I'm Oliver Rennick.
God, darn it.
My dad was a hard worker.
Here he was.
He used to do side jobs installing windows, charging something like $100 a window when other guys were charging.
We got another 1, 2, 3. It's a lot lower.
Do that. He's proud of the price. He
Back
was
to that
charging.
pivot point.
My dad instilled in me always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies in CrowdStrike, which is up over 20% so far this year into earnings after the close, and Tesla, which remains under pressure and down nearly 30% in 2024, and is reportedly ordering NVIDIA to prioritize shipments to X over Tesla. And like Foley will break down consumer sentiment data on Dollar Tree, which is weak heading into earnings.
Yeah, this ain't working.
Now let's take a look at the major.
I'm gonna still hold it because we're at this
indices,
double
off the
bottom,
pressure
but
lows
shit.
here. The S&P 500, the benchmark down over 0.4%. The Dow off about 66 points. NASDAQ 100 down over 0.3%. And leading to the downside once again, small caps. So Russell 2000 down 1.1% on the day. To help me break this down,
That's today's
let's
pivot
bring
point,
in my
Yoko.
co-host, that's Kevin Hinks. Kevin, a little bit of a head fake after that JOLTS number this morning, where stocks were down about to levels where we are right now, as far as just after the opening, rallied back to unchanged, a little bit positive, then sold off again. What's that signaling?
I think the market is trying to figure out if this is a real tone change, or if weak data means bonds higher, yields lower, and it's okay to buy stocks. Well, this is 2 days in a row now. That's not working.
Right.
Right. They buy them on the weak data, and the rally fails because this looks more characteristic of a rotation out of stocks and into bonds than it does, yields are going down, so stocks look more attractive. It doesn't appear that that's the case right now, and that's a little bit of a tone change. You've got the dollar unchanged, slightly higher. Why? Well, if
That's
the Bank
it.
of Canada and the Eurozone is going to lower rates,
There's that
our
bottom trend
dollar should be
line.
higher. So here's what I was talking to Oliver this morning about. It's a bunch of individual stories. Crude oil has its own story, supply and demand story. The dollar has its own unique story with its relationship with other countries. Yields have another own individual story in terms of weakening U.S. data. So there's a bunch of stories that are making up a macro picture. And then you've got earnings. And then you've got this chip conference where Intel just laid an egg, it appears, even though they came out with all their shiny stuff and the stock did nothing. I mean, there's no reaction.
And that was the same thing that happened to AMD yesterday. AMD was mostly down after announcing a bunch of new chips also.
AMD's always going to be compared to NVIDIA, though.
Yeah.
And NVIDIA came out with such unbelievable news there that it made the divergence go further.
Yeah. A lot of different stories. I think that's key. Let's bring in our next guest. That's going to be Kevin Green, senior markets contributor here on the network. Kevin, I wanted to get your take because we've got some weakening GDP data.
I need 103.
Lately, PMI.
And I'm going to get out of here.
Job openings dropping.
I'm going to ignore this for a few seconds.
Starting to contract a little bit.
Is this getting
There's a
to me?
lot here to
I'm going to take a little break and go to the treadmill and come back. If I keep watching this, it's just going to drive me crazy, especially when I'm down like 356, almost $400. Let me see it. Yep, almost 400. I'll be back. 390 to be exact. So that ain't too bad. I mean, could be a lot worse. We got a 1, 2, 3. With a higher low, and it hit that trend line on that triangle. So that was my bottom line support. Or we're going to see that one that Yoko's talking about, 524.68, 524. I got 524.80. So we're right in line there on that support level, and that's my pivot point. They can go a lot lower than that. As long as I stay above that 24.80, we're still bullish. But I'll be back.
Tomorrow, is this for them to prop up their economies, which have been lagging the U.S. At this point, or is it another telltale sign, Kevin, where, hey, this economic weakness that they've seen is going to start leaking into our data, and maybe it already has?
Yeah, I mean, Kevin is right in that since mid-April, the dollar has worked its way from over 106 to where we are now, closing in on 104. So there's been and the market has reacted to that, right? That's why the market's been strong. But now what? Traders want to know the next move, not where it's been the last month and a half. I can see that. Where's it going when they lower rates on Thursday? Then what's the dollar going to do? And so I think that's going to be the interesting. Does it firm up, or is the U.S. right behind them? Is the data starting to weaken, and that divergence, we're not going to be far behind them in cutting, which tells us July. It won't be June. Right. It might be July.
Yeah, and I think that's what a lot of people are coming to say is, Kevin, and if you look at this, KG, you look at that weakening that's starting to come and creep into our economy at this point. You mentioned the GDP numbers starting to come down a little bit on that weekly basis. But is that, you know, that does it put into play the fact that the Fed can cut, right? They have that ability. We're in restrictive territory with Fed funds. Does that allow them to say, hey, if we still continue to see weakening economic growth and data points that, hey, the Fed can just cut and that'll prop us up, right?
I hope they don't say that. Because, Tom, they've done it several times here, and it's really delayed us from actually accomplishing the goal of getting inflation at 2%, right? And they did that in October. We were on the same type of path. We saw the same type of markets. The reflation trade kind of was falling out of favor. We saw yields going lower. We actually had some despair in the market, to say the least. And then the Fed came out and tried to brighten the skies a little bit. We actually had that about a month ago with the FOMC meeting, and we saw financial conditions starting to loosen again. They're starting to tighten up right now. Hopefully we don't have any commentary coming from them. Let's let the data speak for itself and let us be able to work through these numbers. We don't have enough data yet to say we should cut. We have anecdotal data, and we kind of have some green shoots that are coming out that says, okay, we might see some weakness, but we don't have anything that shows trend yet. And so until we have trend, I think that's when we should be able to cut. I would say September is not out of the equation here. I know it's right before an election, but we will have some pretty decent base effects when it comes to inflation because of the year-over-year comps, especially when you're looking at energy now if we sustain these prices, and also when you're looking at electricity prices and transportation services. They can utilize those base effects to have their own type of mission accomplished type of moment that the ECB may experience here in the next couple of days. I think that's the route we probably will be going. Rather than trying to cut a little bit too early, because it does not take much to loosen financial conditions, as we've seen over the last, 8 months, 9 months, where we have kind of shot ourselves in the foot several different times because of the commentary coming out of the Fed.
Yeah, and then I think the market wants that. They want the earlier rate cuts. Yeah. But if you look at, inflationary pressures, Kevin, you can look right to the energy markets. Crude oil at 4-month lows today, below $73 a barrel, just above it right now. I mean, but that's a positive, right, for the consumer that's been weakening.
Well, it depends on why it's weakening. Is it weakening because OPEC's going to allow a little supply to come back on the market? Remember, they announced that they're going to hold steady, but they also, if you kept reading, they announced kind of a unwinding of the cuts. So, and the United Arab Emirates were complaining that the majority of the cuts were theirs, so they want to bring oil back on the market. I think it's a tricky situation in crude oil, but if it's demand in crude oil, that's a whole nother story in crude oil, right? If it's China demand, if it's overall weakening of demand for crude oil, that's that supply and demand that we love to look at in crude. We like to talk about crude oil and macroeconomics, but it's such a universe in of itself, right? With supply and demand, it's fascinating to cover.
Yeah, and summer driving season. The demand is supposed to be there, but KG, if you look at that, maybe it is demand, and that's a signal. Another signal that I mentioned earlier with GDPs falling, consumer spending pulling back here a little bit, where there's just not demand right now. We haven't seen it from overseas, and maybe here as we're at record levels as far as production here in the U.S.
Well, that is the case. So we actually did see a significant drop-off in April when it comes to gasoline demand. If you're looking at the 4-week average, and we actually had a chart on the Future Show earlier this morning that kind of showed this divergence between what we are seeing right now and what we were seeing this time last year, and then the 4-year average. We're running about 130,000 barrels, 150,000 barrels a day less than what we had last year, and running around 35,000 barrels a day less than what we have for the 4-year average. So that is actually something that has occurred that we did see in April. I think the market was actually taking that into account with the fact that we had a significant reduction in refining rates at the beginning of the year, and then we were just kind of seeing production catching up. But right now it seems like that is not the case. Production's kind of outpaced demand here. We are seeing a softness when it comes to the U.S. consumer, and then export demand is pretty much leveled off as well. So right now, the only green shoot that you have is really that China story, and I'm not sure if it's going to be enough to be able to lift all boats here when you're talking about the energy complex. We're seeing some pretty significant technical damage on crude as well as gasoline as well as diesel, and I'm not sure if we're going to be able to recover quickly enough to be able to sustain and try to get back to say $78 to $80 a barrel oil, and that actually kept right. If you have deceleration of crude prices too quickly, too fast, that's actually a signal that the economy is slowing. You want to see a gradual decline while also production kind of meeting that demand. That's just not what we're seeing right now.
Yeah, down 1.3% today. Kevin, S&P 500 is only 1.5% off of those all-time highs above 53.40 that we saw just about a week and a half ago. I mean, is all the risks to the downside with the market up 10% so far this year, S&P 500, that's probably part of the problem is that, hey, we've already rallied the first, 6 months out of the year since those lows that we saw last October, that, hey, maybe the risks are to maybe some consolidation, maybe a little bit of a pullback. I've seen some analysts and some houses come out and say, hey, get ready for a choppy summer, maybe a pullback.
Think about it. You are sitting at all-time highs, a 21 PE on the S&P 500,
right.
VIX at 11, and you've got an economy that's starting to get shaky and weaken. If you're not hedged, if you didn't hedge, if you're not thinking about hedging or thinking about hedging your bets,
or profit taking or something,
going into bonds and out of stocks, and it seems like a common sense way to look at this market right now, sitting at all-time highs with questions about the economy and so much geopolitical risk and everything else out there.
Yeah.
I don't know. It certainly seems like something you should be considering.
Yeah, and to that note, KG, when you look at some of the calls now where some houses are coming out and sell-side analysts are coming out and saying, hey, we're probably going to see a pullback. A week and a half ago when we were at all-time highs, they said, they were all taking their S&P 500 targets up to the end of the year, that the economy's fine and we can weather the storm in a restrictive territory that the Fed's got set for us at this point. But now it's funny how things change rather quickly, right?
And it's pretty telling, too. I mean, the only reason why they're doing that, Tom, is because they're following the price action, and they don't want to be too far behind when it comes to their price targets, even though they might not have a rationale for it. Similar to what we saw for SMCI, right? The stock that they continue to raise their price targets, but we're kind of like, all right, at some point this has to actually correct on a fundamental basis. I would say probably put the blinders on and kind of ignore some of that commentary and just look at the seasonality. We are into a period where we typically do see low trading volume and do see choppy markets. That could be the case. And if that is, I think that would be healthy. I mean, we've actually neglected the seasonality trends over the last couple of quarters here, and I think the market would actually be happy that we might see some of this normalization coming back into the market, just like we're seeing here today. If we have risk off in the market and you see a bid going into treasuries, that's for the most part a normalized market post pre-COVID, and so I think that's actually a pretty decent sign. I'll go back to this. It doesn't feel like we're that close to the all-time highs. Right. Just based on the commentary, just based on the feeling, based on the price action, it feels like it's a lot worse than what we actually are. And that's also kind of not a good sign. Everybody's kind of looking over their shoulder, pressing their buy button, but looking at everybody else to get confirmation that it's still a good area to buy. And that's kind of where we see some vol creeping in the market. And last thing I'll say, 11 VIX, I was laughing at that when I saw the 11 handle on the VIX. I was like, there's no way if this is going to hold. And if you're not hedging, then you should, if you can.
Yeah.
Even a 13 VIX, it makes it reasonable.
Yeah, and, the markets are optimistic. We've navigated, this higher interest rate environment for a long time. The economy's been chugging along. Consumers are still spending. Job market's still robust, even though we're starting to see some cracks. But we got some data over the next couple of days, ADP, jobless claims into those non-farm payrolls on Friday. I think that'll be give us maybe some clarity on the job market at least. All right, guys, let's take a quick break here. When we come back, we're going to take a look at CrowdStrike. Cybersecurity stock is up over 100% over the last year into their earnings after the close. Bar is set high on this one. Fast Market's coming right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick. Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
There was a time when large cap tech and large cap mega cap plays, the proper PE was in the range of 10 to 12. And we're now at 30-ish on a lot of these names. And I am concerned about that overall because there's so much focus on the investing in these names that if there is a hiccup, this market's in a lot of trouble.
This week on Market Overtime, Gareth Soloway, dubbed the Master Trader. He points out possible weakness ahead for the high-quality tech trade and what that means for the overall market strength that we've seen recently. Catch it all week long, 4:30 p.m. Eastern Time right here on the Schwab Network. All right, let's get into discussion about earnings. We've got CrowdStrike, Kev. Stock's up nearly 20% so far this year, up over 100% over the last 12 months. It's pulled back 14% over the last just over a week here. So some weakness going into this, but the bar's still set pretty high on this one, implied volatility levels elevated.
It's not up 100%. 98.3%. Come on, get it right.
I think you've got the wrong data, 102.
Yeah. So anyway, this thing has had an incredible run, and the bar is set incredibly high. Now, this stock, here's the thing, Tom. Is it Palo Alto Networks or is it Zscaler? Right? One went down after earnings, one went up after earnings, and their annual recurring revenue, they're going to focus on that. They're going to focus on free cash flow, and then we're going to compare, and then you're going to look and find out which one they are. So, you know, this is, I'm not an expert on cybersecurity, but you watch these names and you read about them, and this one seems to be more in the Zscaler crowd than the Palo Alto Networks.
Yeah, and they've outperformed both of those names, those competitor spaces. KG, when you look at this, their subscription-based model generating more than 70% of their recurring revenues that Kevin mentioned, higher margins in that model. Their Falcon 10 cloud platform is supposed to be the leader in the space, but as I mentioned before, the bar's pretty high on this one, and we've seen some stocks this earnings season with a high bar get hammered, even though maybe they beat on EPS, beat on revenue. They say anything about guidance lighter than expected, the one that the street wants, we could easily see this stock down.
Yeah, and I think that's going to be the big risk here. Now, we kind of brought up Zscaler. I think this bar is fairly low for Zscaler, even though when they kind of provided their results and the guidance moving forward, it was better than the street's expectations. But I think the street was looking for a similar type of report that we saw from Palo Alto Networks. And I think that could probably still be the case here for CrowdStrike, even though the stock has pulled back a little bit. The subscription model it gives them a little bit of flexibility, yes. For this particular quarter, but I'm going to be looking at that backlog of orders that are coming in the next, year to 16 months, and I think that's going to be kind of that big risk. If that does come in light, the market could actually sell the stock off. Also, if we're kind of looking at a one-year daily chart, there's another area of concern that I'm kind of focusing on here. You talked about that pullback, but also there's an area of around $280 where we kind of tested several different times, and it appears that we're kind of on that trajectory to kind of hit that level again. And then also looking at that MACD with that 12 EMA below that 26 EMA and that bearish type of cross, not below the zero line yet, but getting fairly close. It appears that the technicals are kind of signaling that if we do have a bad report, we do have bad guidance, a gap can occur, and we could actually see a pretty significant gap to the downside here. And that's a little bit more concerning than potentially an upside move and have them bucking the trend that a lot of these technology companies, cybersecurity companies have been able to, that were not able to do that during this earnings season.
Yeah, broken through that 50-day moving average a few sessions ago. Maybe that acts as resistance at this point. But Kev, option market pricing in about 11% move either way, just over $34 either way on this one. You got an example trade for us?
Yeah, this is going to be a fairly interesting example trade, to say the least here. We're going to be doing a diagonal put spread here. We're going to buy the June 14th expiration 305 puts, and then selling the June 7th, this Friday's expiration, the 280 puts here. Doing that for a debit of around $11. Spread's actually fairly wide there, so that was the mid point at that point in time. That might have changed right now. Obviously looking for a downward move in the stock and being able to capitalize on that. Now, when you're kind of looking at the delta, it was around a 44 delta, so it's kind of a richly priced trade, to say the least. It's very expensive, but once again, you're kind of looking for that downside move. And the reason why I call this a two-parter, if we do see that the stock actually hitting that 280 level or going through that 280 level, Tom, could look at actually adjusting that short strike, that 280 strike, and actually rolling that out. You can roll it at the same strike, or you can roll it out and roll it up to try to receive a little bit more premium and try to finesse the trade a little bit if we are going to see a dramatic drop like we've seen from some of these other stocks, especially these tech stocks that have been richly valued over the last couple of weeks.
Yeah, let's break this one down. June 14th, weekly cycle, 10 days to expiration. Buy the 305 strike put, that's basically at the money. And then in the near term, June 7th, weekly options that expire in just 3 days. Sell the 280 strike put. So Kev, $25 wide bearish put diagonal to the downside here. Paying roughly about $11 debit we've got up there. That's where it was trading closer to $11.80, $11.90 right now because the stock has moved down. But the debit you pay would be your risk, so $1,100 per spread on this one. Your break even about 305. To Kevin's point, to KG's point, Kev, is the fact that, hey, you get to potentially adjust that short strike if the market's open, liquidity is provided, creating credits. That's why we've got that break even around 305 where you're buying that long put because you have a week and a half in this position.
If you're bullish on CrowdStrike going into this earnings event, you need a beat and a raise. Sound familiar for this quarter and this earnings season? You need a beat and a raise, and if you don't get it, this spread is the opposite of that idea.
Takes advantage of a down.
High, exactly. So it's short deltas. You're collecting data, a fair amount of data actually, if you look at it. But you do have some risk. It's right around 1180, 1190 right now, so it's not void of risk. You're short, and you're short a diagonal, right? You're long a $25 put diagonal. It's a bit of a big boy.
Yeah, and to your point. And KG, bring you back in here, it's $25 wide put diagonal, and you're only paying about $11, just under $12 per spread for this one. So that is the benefit of it, where anything below that break even is going to be potential profitability on this one. But, to Kevin's point, if you're more bullish or optimistic on CrowdStrike, which a lot of people on the street are, it's gotten some price target hikes recently, this is a trade you don't want to do, right? But at the same time, you're taking advantage of that dispersion between implied volatilities, correct?
Correct, yeah, and you can trade around that long strike too. So Kev brought up a really good point. You are looking for this downside move. You can roll it up, you can roll it out, you can do all of that, but you can also roll up the short strike as well, and then make it into a credit if you do see some form of a reversal in the stock. It's more of trying to trade around that core position, bearish thesis initially going into it and trying to capitalize on that IV crush. But if not, there's other ways for you to be able to manage the trade, if you will, depending on the earnings announcement, and then also that long strike, you have a little bit more time as well. In the IV, if you're kind of looking out at the curve, especially in the middle of the curve, the IV is for the most part the same. And so that's another way to, kind of finesse the trade. So 2-to-1, it's balanced for the most part, and it's a bearish trade, but yeah, Kev's good. Kev's right. I mean, the bar is going to be high. Beat, raise. That's what it's going to take in order to at least keep the stock where it's at and try to push it higher. And it's just been very tough for a lot of tech companies throughout this cycle.
Remember an important point for our viewers. we talk about you're paying less than the diagonal, or in some cases we're paying more than the price of the diagonal. What's the difference? Move that long strike up closer to expiration. That makes it much less of a debit, and you get inside that move. If that's what you're looking for, that's the way to do that. Move that long strike up closer.
Yeah, and I mentioned the dispersion between implied volatilities. On aggregate, you're buying about a 97% implied volatility in the June 14th options. In the June 7th, you're selling about 157%. So that's why the price of this diagonal is less than the width of the diagonal, which is $25 at this point. Some assignment risk on that short option.
I'm gonna go make my salad real fast, and I'll be back.
3 days, so keep that in mind also. But a good look if you think maybe we're going to see some disappointment. Go back down to that.
That was a nice
280
workout.
level or near that 280 level.
I got it up to 3.7 to speed now. I started at 2.5, and my right hip don't feel sore anymore. And I was actually feeling like I could breathe a lot better. So I'm gonna keep this up. Detoxing with my energy drink in the morning, homemade energy drink. And then barley breakfast with blueberries and apple. And then I came in and had a celery stick with some, kind of treated myself with some ranch cream dressing. And yesterday I had a beet salad, and today I'm going to have a chicken. So I want this thing to get up and break 103. I don't know which moving average. We got to break the 9. It's hard to say which one of these is going to be. But we've got the 1, 2, 3 here, and we have the 1, 2, 3 here. And this is a triangle on the hour time frame. And I'm at 92. Come on, baby. God. I mean, I should get out here and play it safe. See what it looks like on the 2 minute. The 2 minute looks good. The 1 minute. The 1 minute hit the 200, so I've got a resistance. I either sell. Here's the 1, 2, 3 right here. Fuck. Should have sold it right there. And I'm still good. I'm gonna redo that line. It's not good enough. I'm gonna thin that fucker out too. I'm using cuss words. Sorry about that. That's better. Let's break the 200. If I break the 200, I'm going to make my profit. Break it. Break it. You're taking a bath, Georgia? Whoa. $5 in the jar. Like, I'll do that. Blake it. This will be the best turnaround game I've ever done. One of the best. It'll rank up in the top 10. I'm about ready to go into the kitchen and do a sky hook. Kind of like Abdul-Jabbar style. Oh, the prison guy's on.
Other parts of retail where Macy's is closing stores and some others.
Dollar Tree shares down 15% years to date. Oh, come on. God darn it. That was a shocker to the market. They just stopped. Okay, I'll be right back. Let's see what the prison guy has to say.
A lot of different types of retail operations. And like you said, they've got so many stores, it seems like a really good use of company funds rather than chasing what isn't working to try to find something new that does work. We've seen a lot of
Thanks a lot, fella.
Create successful pivots through those types of experiments. And so, I do applaud that approach that they are taking. I think it's very much necessary.
How about breaking the 200 SMA, you idiot?
You just like to see some things start to work, before you throw your money in behind an idea.
Oh gosh, rub it in.
Individual investors and not activist investors, we're pretty passive. We have to watch. We have to count on the executive team to do things the right way and to see success. We can't force that success, and so.
Well, I can. I'm a market maker. You need me on the job.
To it, and like Folio Data generally is very good at seeing turnaround stories. Start to bubble up, start to see some stories of some people talking about their improved experience or this amazing experience they had at one of these new brands or experiments a company like this runs, and we're not seeing that yet. So when we do, you guys will be the first to know.
Yeah. You got an earnings score for this one going into the report, Andy?
Yeah, it's still, despite the stock sell-off, it's still a little bit of a negative score, which is kind of tough to do. So we think that the bar is low, but it's very likely that Dollar Tree will find a way to get under it.
All right, great stuff. Great stuff, great data. As
It's low, but not too low.
Yeah, I think your data equates. I'm looking at a 2-year chart, and it seems like every third, maybe 3 out of 4 earnings, this stock just gaps lower post earnings just because they continue to disappoint. All right, thanks, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down data. I mean, I was looking at this chart, Kevin.
May I apply for a
gaps
job,
to the
please?
downside in probably 75-80% of their earnings reports. Going into another one, option markets pricing in $11.25 either way, moving the shares.
We don't know.
Yeah.
Right? Where it's going to go. They come out with a good story. They can come out with more of the same.
The TTM looks real good.
And I'm not an expert on Dollar Tree. I honestly say I've never been in one in my life, so I don't know. So what do you do as a
This is
trader?
the chart.
Well, there's opportunity, right? There's diversions.
This is the chart I used to trade off of a lot. It's called the TTM squeeze. And we are starting to come down a little bit here, but we're consolidating. We're having divergence right now, volume divergence. Where this should, at this point, get ready to break out if it wants to go ahead and do it. But that 200, you had support, resistance, resistance, resistance. So we get past that 200, which is an easy shot up here to 526.53. We're squeezing right now. You got volume divergence with price, rising price. The lower the volume, the higher the price goes up. So it's definitely a bear day today, and we're getting ready to squeeze something here. Let's go down here and use this. I need to get to using this a little bit more. Break it. Oh, God, please. I don't want to have a losing streak. I could get out right now, but I'm going to see if it's, I've been in this long enough and I've took so much pain and sweat. I want it to break. We got price divergence going on. See, it's thinking about it. You see how the bodies thin out? You got these thick bodies, and all of a sudden you get these little bitty ones. It's making a business decision. Oh, yeah. Damn right. Do it. Georgia, get ready. Georgia, Georgia. Old MacDonald had a farm, me-I-me-I-O. And on this farm my spy broke out, me-I-me-I-O. With a there and a there, meow here and a meow there. Old MacDonald had a farm. I'm in the green. 3 white soldiers. What's this mean? What's 6 fucking 50? Oh. $526.78. $526.69. I'm changing my mind. Randy, give me a good grade on this trade, please. I'm gonna get out of this trade. I'm out. 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 God, what a trip. Whew. Fuck. I got an A plus. Thanks for helping me out there, Yoko. That was not easy, Georgia. My timing was way early today. But there's a great example on sticking with it, and I could have added a lot more, but I didn't. I just kind of baby stepped it, which is better than putting $4 or $5 grand in the trade. Man, it's so nice. That was nice. I mean, I come in here with a little high horse to begin with because I'm going to be getting a plaque for the best good-looking guy in Springfield, Missouri. Anybody gonna call me on by? Yeah, it sure did suck. And I tell you what, it didn't have to take much to go down and lose a lot of depreciation in that stock, because I thought I had a pretty good spot. My grade's a C? Yoko, come on. We're talking about sticking it out and getting it. I mean, I'll tell you what, I went into the exercise room and I turned the treadmill up to 3.7. And I finished my time almost 2 minutes faster than I would have if I kept it at my normal pace, because I wanted to hurry up and get back here. Look at that knife. God, what a great exit. .7 miles per hour. That's a new record for me. Walking. That's walking, not running. And that's a half a mile in 8 minutes. I usually lift the weights a little bit, but I had to hurry up and get back in here. I'm gonna go make my lunch. I like doing this because of the adrenaline rush that I get. I was very active in sports, and I found nothing else better to pump that adrenaline than trading stocks. I mean, it gets, if you know what I mean, little head rushes. Oh yeah. Well, I'll be honest with you, Yoko. The more I thought about it, the more, I mean, we were both right, but I understand what you were saying. You weren't bullish until it broke 530. I was using the pivot point as a common denominator at 525.80, and it worked. But also your plan worked too, because you traded it. If you traded it bearish under the 530, it was an A plus. So actually, your call was better than mine, but it was two different kind of calls. I had the same number you had. If we broke that resistance, then I've been very bullish. And we had the same number, the 530 area. But I was looking at it more as a day trade, scalp trade. If I could stay by that 525.80. And we did break below it. So I'm going to give you kudos, A plus, for yesterday. I was teasing with your C. But in all, I mean, we were both spot on. I think you might have saw it that same way. No, Yoko don't win. Exactly. Jim's got it. That was nice. Now I can have me a nice peaceful lunch.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. and sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once a client knew that she was her, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Alongside Alex Coffey. Alex, it's another quiet session. I know that's sort of how we always have been starting things for the last several weeks, but pretty much I would say unchanged now in 2 of the 4 major indices. I know we're slightly higher in the Dow. If you call it that, I'd say it's unchanged. We're unchanged also in the NASDAQ. S&P is down 0.25%. Russell, though, is leading the weakness, down about 1.2%.
Yeah, I guess I would say kind of quietly choppy, a bit of a tug of war. The market is struggling to make sense of the economic picture at the moment. And I think we'll talk a little bit more about that with Kevin Green later on. But the Fed's big thing lately has been the risks of inflationary pressures, the risk of potentially economic decline are more balanced than maybe some of these headline CPI numbers the last few months have suggested and strong jobs data have suggested. The market's coming to terms with that right now. There is economic risk, and maybe the inflation fears have been a little overblown. Those 2 things, a little bit more balanced. Market doesn't really know what to do with the news now.
I know. I also feel like the market doesn't know what to do with the news because even like those notorious bears of the overall economy, I feel like have been somewhat quieted, but also some of the bulls. So it's just been somewhat of this waiting period. But as always on this show, we will kick things off with upvote and downvote. As always, we have a nice chip semiconductor focus today to kick things off. We'll chart and trade those upvoted names. FOMO today, we're actually looking at Boeing, which landed a pretty sizable contract with Turkish Airlines, or reportedly so, which gave the stock a little bit of a lift today. Pretty much now unchanged on the session, but at least an initial pop on that news. We'll also be looking at some retailers selling off after earnings, designer brands, as well as Bath and Body Works. And last but not least, we will preview HPE ahead of their earnings. Of course, not to be confused with HPQ, but this is the enterprise side of things.
There have been some very, very large sell-offs post-earnings lately in various names, yet the market doesn't seem to reflect that. So I'm looking forward to that conversation later as we look at some of those individual stories that are struggling. Boeing getting some love finally, a stock that needs it after what's been just the most up and down last half decade, let's say, for Boeing. There are going to be textbooks and chapters within those textbooks about Boeing. We've said that before, and that continues to be the case. So we'll talk that. But let's do upvote, downvote, not endorsements, not recommendations. Largely, the epicenter of the optimism of the market has been within the semiconductor world and those that are tied to artificial intelligence. Of course, NVIDIA is the flag bearer of that group.
It is, and I will say that NVIDIA today, impressively so. I mean, we're just hovering right around that all-time high here, and so making a modest but nice move to the upside after just rallying yesterday to kick off the week. I will say, as far as the Computex conference goes, which is underway right now in Taiwan, NVIDIA has received the most attention. I think rightfully so. They did unveil their next generation of GPUs to follow Blackwell. That will be known as the Rubin Ultra chips. expected to be unveiled in 2026 with the Ultras coming in 2027, but the overall new chip will be coming in 2026, which I think signifies the fact that they're on an annual basis right now for their chip releases, which is seen as a huge win. But we also got some interesting news that Tesla CEO Elon Musk to divert a significant shipment of NVIDIA AI processors reserved for the EV maker to his ex-social media company. And in doing so, Musk did push back Tesla's receipt of more than 500 million in GPUs by months, which is likely added to the delays that are setting up the supercomputers that the EV maker has said it needs to produce autonomous vehicles and humanoid robots. So I do think this is a really interesting sort of development. Musk also to seek to build the world's largest GPU cluster in North Dakota at his other company, xAI, according to this internal NVIDIA email that was actually first released back in February, but is described as a Musk mandate to make all 100,000 chips available to xAI by the end of the year. So I think that this whole debacle of like the Elon Musk NVIDIA orders is fascinating here, but obviously not enough to lift Tesla shares today, which are down about 0.5%.
Looking at NVIDIA, we're like awkwardly close to that split. Of course, if you're a share investor, it's just going to multiply the number of shares you have by 10. The price of each share will be, 1/10, so it won't really economically make a difference, but it can make a difference if you're an options trader, just simply from a per contract fee standpoint. So if you did a one lot $5 wide spread in NVIDIA, that's going to be 10 50-cent wide spreads after the split if you held it through. That's a lot more contracts than just the two that would be associated with the $5 wide spread right now. So for me, this is a situation, unless you really want to deal with that, you want to have 10 times more contracts that are very, very small spreads. It's maybe just a wait until post-split if you're looking at the options.
I believe it's June 10th, correct?
Exactly, which is next week, right?
It's also the same day as Apple's, I believe, WWDC, so that will actually be a surprisingly busy day that we'll be, I'm sure, keeping on our radar here. But next name today also fits into the similar conversation of Computex in Taiwan, that is Qualcomm, which did say that its new chips will allow customers to operate their laptops extensively without any concern of battery life. I mean, music to my ears, but they're supplying these semiconductors for Microsoft's latest Copilot Plus PCs, which of course do incorporate these more advanced AI features. Both companies highlighted the importance of Qualcomm's hardware in enabling these specific AI enhancements, while also maintaining that very long battery life. Their CEO did say, with its collaboration, it's been groundbreaking compared to the significance of Windows 95. And they emphasized that Windows laptops powered by Qualcomm Snapdragon X Elite systems will boast, again, twice the battery life of the traditional models and can be over 100 times more power efficient and running certain AI features. So they've been working more than a decade, I'd say, to focus on reducing the PC sector's reliance on Intel by introducing these various key components, actually a lot of which are from ARM holdings. So everything is connected, and I always think it's important to differentiate these companies, especially when looking at a lot of these like keynote addresses we've gotten from these major companies in Taiwan right now.
So obviously this is not a log chart, so it's going to be,
When's the Fed come out?
200 even linear chart. That's a 5% decline over there.
Is the Fed coming out tomorrow to speak? Do we know? Does anybody know if the Fed's coming out tomorrow to speak? The 11th and 12th. So it's next week. Fed comes out next week. I gotta go stir my onions.
beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Master segment. So joining me today is our Chart Master, Ben Lichtenstein, the host of Futures. We're talking Taiwan Semi as well as Qualcomm. We'll start off with Taiwan, though, which I think is one of my favorite names to look at in the semi space because it has its hand in everything. And like Alex mentioned, it's like, it is the supply chain. If anything happens in Taiwan, like any major earthquakes, which there was, it is a huge deal. But the chart has been, we pulled back, I mean, significantly. I know it looks strong on a long-term basis, but we have pulled back from recent highs.
Yeah, I think that really sums it up in many ways. The chart has shown some short-term weakness, but I think long-term trend that we're seeing to the upside remains intact. Let's just start with some of that selling. Over the short term and the move lower, we've seen off the highs from just about a week ago. Stock was trading up around 163 to recently down as low as 147. As I look at this chart, my eyes just really drawn to these two areas that the market spent most of the time kind of consolidating around. First and foremost, that 159 level. You can see a breakdown into the middle end of last week and how for the most part throughout the beginning of this week, we've just been kind of hanging out right around 151, right? Trade down to 147, back up to this 157, 158 area. But you can see most of the activities occurred in this range. So again, we can see value, which is moving lower just over the last couple days. There's a 5-minute candle chart. Let's step back a little bit. And this is where you're going to, or a 30-minute candle chart, I should say. Let's step back a bit to an hourly, and this is where you're going to start to see some of the strength come into play here. Now, I think there's two ways of looking at this chart. One's a bit more bullish.
No Fed tomorrow, it's on the 11th.
Longer-term chart we'll look at in a minute. And then one does raise some concerns about TSM in terms of what we've seen as far as the most
thank you, Magnificent.
off that 163 level. So 60-minute candle chart. Let's look at the bearish scenario first and foremost because we had been seeing value move higher. Again, we're going all the way back to when the stock was trading around 125. You can see a few areas where the market formed these consolidation areas at higher and higher levels. So basically trending higher, as you can see. Now, while we're balancing around 160, just off those highs up around 163, what are we looking at? The most recent area balance prior to the one that we're currently forming. So the bulls are expecting that kind of staircase pattern to continue to the upside, but look what happens. We've actually started to take out a key area that was established on the way up. That 154 zone has been broken now, and we worked our way lower back down to, again, 148-ish. But here's where I think if you want to, and I do give the benefit of the doubt to the bulls here still, lean on this longer-term trend to the upside. I think you could look at it along more lines of this being just kind of one large area that's forming, possibly around 156. Now, the bulls do not want to see that 148 level get taken out, that's for sure, no matter how you slice it, that a prior example or the existing one right now. But let's take a step back, and you're going to see why I'm giving the benefit of the doubt to the bulls here in this instance, because if you look, you've got a well-defined trend up off those fall 2022 lows around $60 if you remember. I mean, again, recently up around 161, currently in a balance. It's forming around 140, and on this daily time frame, I mean, you got some wiggle room here still. Below 114 is where that real line in the sand is drawn. So I guess here's what I'd have to say about this. Not what the bulls wanted to see in terms of that move off that 161 level, but it's not necessarily, really taken out anything significant at this point. It turned out to be just a false breakout, kind of hanging out in the middle to upper extreme of this range here still well above 140, and then again, well above that 114 level.
Yeah, so I mean, we recently saw things sort of falter, but again, we're making a 2.25% move to the downside today. Still a very, very strong stair-stepper trend to the upside, like you said. But as far as like big picture here, now we're sort of in this weird lull. We don't really have earnings anytime soon. I would have thought that this Computex would be more of a catalyst. I mean, maybe it has been, unfortunately, to the downside, but what are you watching big picture here?
Well, on this chart, again, that lull, you could see some random price activity continue to play out here around this 140 level. The one thing I would watch for that I've been kind of keeping close on is price oftentimes works its way down to this level and then finds that as the potential catalyst to the upside. So something to watch if we get that broader market turnaround, because I do feel like some of that short-term weakness we've seen has been really more, again, related to the broader market rather than TSM name specific. Take a look where we are in terms of the 50-day, the 200-day moving average, because I was talking about if we saw some further price decay, how the bulls would get a little bit concerned, keeping it on the 50. We're still holding above that, well above the 200 RSI, reflection of some of that recent weakness. But I think this chart kind of speaks to the strength that we've seen. Again, not what the bulls wanted to see in terms of this pullback, but blame it on the broader market maybe. Again, not necessarily Taiwan center-specific.
Blame it on the broader market, yeah, because as far as I could see, like, the streets didn't really like this name, and they had nothing but positive developments over the last 24 hours. So with that being said, now Alex, walk us through an example trade leading into, I mean, like, the obvious optimism we see from especially a yearly chart.
Yeah, one of the levels that Ben talked about on the shorter time frame was 148. So if that acts as support, we would look for a neutral bullish trade below the support level. That would be around 147. So we did that for this one. Avoiding the earnings, so going to the week prior to those July monthly earnings that capture, or monthly cycle that captures the earnings. July 12th, weeklies, 147, 144, $3 wide spread. Looking for a $1 credit. Max profit 100, max loss 200. Break even, simply take that $1 away from the 147 short put, you get to 146. So I would say pretty straightforward, Jenny. Stay above 147, you have a chance to make $100. Breakdown below 144, $200 at stake if you did go through assignment and exercise all the way through expiration for max loss.
And we have a little bit of time here also for this, obviously, to move here. Next thing today, though, is Qualcomm. And Qualcomm, I will say, actually looks very similar to Taiwan in the sense like it's lower today, it's pulled back from its highs, but has been a different pattern to get there, per se.
Yeah, short-term weakness, but this one's a little bit more clear when you get into that hourly time frame. Still well-defined trend up, and definitely when you step back and look at the bigger picture here, so let's do just that. Starting off in a similar fashion as we did with TSM and some of the selling that we've seen over the short term. Again, off the highs that we saw middle of last week into the end of last week from 217 all the way down to what looks like we bottomed out around that $200 level, but my eyes kind of just drawn to this area where we started to become a bit more overlapping rotational. You can see on the left side of the screen, you can see conviction lower, and then it just sort of tapers off, right? We're hanging out around this 204 level. So well-defined upper extreme around 211, we'll call it. Lower extreme lows that we saw again recently around 199, 200. But as long as we're in this range here, it's very random and kind of limited in terms of real conviction one way or the other. So when in doubt, zoom out. Let's do just that and take a step away from that 5-minute candle chart all the way into the 4-hour now. We're looking at the move lower here that we just saw. Again, short term relative to this longer term trend that continues to be to the upside. So this is a somewhat counter trend retreat that we've seen here. This is a 4-hour candle chart. We're going all the way back to the price activity we've seen since the beginning of February. My eye was drawn to the consolidations that have formed along the way up because it helps us determine which way value is moving. It helps us determine trend in this instance. Look, I mean, you can see it's bottom left, top right, but also what these areas of value help us do is, again, determine the range that we're in, which is around 208 right now, and then helps us kind of draw that line in the sand because these consolidation areas help us establish this footprint, this path that the market's taking to the upside. And when we start to reverse that, when we take out significant areas that were established on the way up, that's when, again, that working assumption that we're trending higher starts to come into question, but as of right now, it still appears to be a pretty valid one. Take a look, one more step back. I'm going to show you on a weekly candle chart a very well-defined trend up off the 2016 low around 40. Recently, the new 218, and this really I like because it's transitioning from that vertical to the horizontal phase right now. Look at this. It does sort of look like we've gone from that higher highs, higher lows, that real high conviction breakout type phase away from this balance area around 145 to something that's occurring and a bit more rotational right around this 210 level. So let's keep an eye on this. This is going to be something to watch, a fun one to watch as that transition occurs and maybe kind of lends itself to a little bit, something a bit more sideways than what we saw to begin the year.
Yeah, and that's also a really good point, I will say, to sort of, re-find our footing here. Although in real time, we're starting to see, I mean, some of these losses maybe ease on the session. I was just hoping, but not quite yet. But as far as big picture here, what are you watching in Qualcomm, which also had nothing but positive news in the last 24 hours, I will say?
Yeah, bigger picture of the chart really reflects that as well. I mean, look at this, holding above the 50-day moving average, convincingly above. We saw a nice test thereof around that April time frame, and this has seen a couple tests. Again, the most recent time we were below that. You have to go all the way back to October of last year. So a reflection, again, of some of the strength we've seen in the sector, for one, but also look at this, again, talking about that balance potentially forming at this higher level. You can see how we've transitioned from that kind of higher highs, those green candles that were stacking up into this a bit more sideways and rotational, overlapping, random type price activity. basically that momentum we saw to the upside's kind of losing steam, but again, hasn't reversed, it doesn't appear at this point as of yet.
No, and still off of lows by like 94 and some change percent. So we are well off of lows, even though we pulled back from highs. Great insight has always been Liechtenstein, our chart master, and posted futures, of course. So now when we trade this name, Alex, I think considering that we've seen a pretty nice rally this year, 40%, but maybe you were still looking for further upside and you believe in Qualcomm in the way that it's right now partnering with some of the major players like a Microsoft in tech.
Yeah, the high was just under 218. Closest strike available to that in the July cycle was 220. Looked at a 220 call calendar, selling June, buying July. If the debit was $2, which is roughly where it was earlier on today, you have $200 in risk. And of course, you know the risk profile of the calendar spread well. It is a mountain-like peak here, Jenny, where you're looking to land it on that strike selected. Very customizable, but clearly a bullish strategy as you need the stock basically back to highs over the next month and a half.
Yeah, and I think that is the hope for a lot of these semiconductor names that have pulled back, but it's like we've gotten nothing but positive news. I know that hasn't been the case over the last 2 weeks, but definitely positive news for Qualcomm in the last several sessions. So we will leave it there now for our Chart Master segment. Coming up next, it's time to talk a name that has not seen such positive price activity this year or over the last several years. That is Boeing. But with some positive developments today, Turkish Airlines and a pretty major contract. We'll dive more into what that means for Boeing coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Liechtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time for FOMO. So we are talking Boeing, and actually FOMO feeling perhaps today is not so much to the downside as we are up around 0.75%. But here now joining me to discuss more on this is Caroline Woods, Senior Markets Correspondent for the network. So Caroline, positive developments in Boeing. We love to talk about it. We've had enough bad PR, I think, for a lifetime in Boeing. But walk us through the story today.
Hey there, Jenny. Yes, Boeing is bucking the downtrend, although the Dow just turned positive, but it's up about 0.75% today, adding to yesterday's gains. It's been a strong start to the month of June for Boeing, although we've only had 2 trading days. But this is linked to a report that Boeing is poised to land, or is landing, a 250 jet order from Turkish Airlines. The deal is a mix of Boeing 737 MAX jets and the larger 787 Dreamliner models. Discussions about pricing, commercial terms, and engine costs are ongoing, but the Turkish chairman did say in an event today that they are in advanced stage in terms of those talks. but the definitive timeline for the agreement remains uncertain. The chairman was saying that the decision to order MAX planes will depend on the price of the CFM engines, which is the only supplier, so placing the order may take longer. This, of course, comes just a few months after Turkish Airlines struck a deal for 230 planes from Airbus back in December. The airline aims to double its fleet in the next decade to 810 aircraft. It had previously said that it wanted to place this big Boeing order, but then back in April, amidst all of these issues with Boeing, the Turkish chairman said they were considering adding more Airbus orders instead. But at this event, he was saying that the order could go to Airbus, but he wants to mitigate risk and work with both manufacturers. So this is giving Boeing shares a nice pop, up about 0.8% right now. We know they've been facing intense scrutiny from lawmakers and regulators over that fuselage blowout earlier this year. There's been whistleblowers, there's production quality issues, but at this event there were quite a few votes of optimism from some of the airline executives for Boeing. So getting a nice pop today. There was also a Deutsche Bank note that signaled the possible resumption of Boeing 737 MAX jet deliveries to China, which could be boosting shares as well. The analyst said that there's a flight on the schedule out of Honolulu for June 7th. It's a Chinese airline that's a 737 MAX, and if that plane departs, it may signal that China has again cleared the 737 MAX for deliveries, and this analyst said there may be some upside relative to Boeing's most recent free cash flow commentary for both Q2 and the full year, if that is the case. So this analyst maintained a buy rating on shares with a $25 price target. Or I'm sorry, I need to check that price target because that wouldn't be right. But it could be more positive commentary for Boeing, and it seems to be giving a boost to shares.
Yeah, it looks like they updated that note too, Caroline, saying that while it does appear to be a delivery, they don't see it necessarily as a signal of broader delivery resumption. So that, I guess, is a supplement to that note. But I know you watch these analysts like a hawk. Are they
Always
losing
clean as
faith
Jim.
in Boeing with all this negativity, or are they still on board?
Always clean.
Everything we've heard from Boeing gives me the sense that they will get on top of it. It's just one of the positive commentary that I saw coming out of this conference. So I think that that's also important. We've seen other airline executives. I think it's the Ryanair executive who's been very tough on Boeing. So they don't have to only play nice with their commentary, but I'm seeing a lot of positive commentary. And hey, Boeing's off to a great start this month, up almost 5% in the first 2 trading days. So chipping away at some of those year-to-date losses, but we did see more whistleblower complaints come out just a couple of days ago. So Boeing's sort of like Tesla. You can always count on a headline these days. Lately, they've been negative, but let's see if there's more positive commentary to come out for Boeing.
No kidding. It's like Boeing, Tesla, and NVIDIA that we can pretty much rely on every day, even when we're relatively news light in terms of like earnings right now. But great insight as always, Caroline Wood, senior markets correspondent for the network. So now we trade Boeing. And I have to say, I'm sure that there was some more eyeballs on this name, just given the fact that it pulled back substantially. If you're a believer in Boeing, I do think that you looked at it as perhaps an opportunity.
Yeah, I think it's a discussion, be it Boeing or just interchange it to XYZ. It doesn't really matter what the ticker is. If you're trading, you see a stock that at one point was trading at almost $450 a share just 4 or 5 years ago, traded down to below 100, but it's now at the 186 level after trading at the beginning of the year near 270. So I guess in this case, you start asking the question of risk to reward. How much downside is there versus upside? Well, if we just look at the kind of price of the last decade or so, it's been well over $400, and it can only go to zero. So if you use those kind of price parameters, it has a lot more potential upside than it would downside. Now, even if you just looked at kind of like the pandemic lows around 90, well, now you're risking, in that case, $90 or so a share to make upwards of several hundred. Now, I don't know that either of those is a likely outcome, or if it's perhaps even going to recover. But it's down 25% over the last 3 years. It's down a lot over the last 6 months or so as well, over 20%. And it's had a really obviously tough start to the year. You mentioned the fact that it has this kind of firm relationship within the U.S. in this kind of duopoly state where it does a lot of things defense-wise with the government. It's the American plane maker as well. So many of those major airlines worldwide, of course, based here in the U.S. And it takes a lot to make these planes. So if you're looking at a trade here and you wanted to be optimistic, you've seen it maybe perhaps turn the corner. There's been fake outs before, but maybe you've been waiting for this to get a little bit off the lows before you finally enter that trade. It's not up a ton. It's off the lows, but it's not up a ton. It's nowhere near where it was to start the year. I looked at a strategy that would benefit from a move higher. In this case, buying a call vertical, going out to the June 21st expiration is all. The 182.5, 187.5, this would be one strike that's in the money and one strike that's out of the money. For a 250 debit, break even would be around 185. At the time, the stock was trading closer to 184. It's now over 186, so you may have to adjust the strikes accordingly. But the idea always being try to have a break even near the current share price, and then try to have those risk rewards fairly equal, as we've talked about. If you're going to be directional, it can go up or it can go down. It can be a coin flip at times. It can be 50-50. Even if you think you know something, there's always a chance for a surprise. So equal risk to reward, break even near the current share price, and then it's just selecting a duration.
You make a really good point. I mean, like the same exact principles can be applied on anything, just depending on your overall conviction. It's just that, fortunately for Boeing, like Caroline did mention, there's always headlines. So for that reason, I think that there's always opportunity for volatility or just to see some movement overall.
I think it's a good point, but the last thing I'll say is that's not a secret. If we're talking about that, if Caroline's talking about that, like the market knows that, implied volatility reflects that there's uncertainty.
And that's a really good point. You're right. This is absolutely no secret. Far from it, actually. I think it's well documented, but we will leave it there for our Boeing conversation. But now I'd like to welcome in Kevin Green, senior markets correspondent here for the network. And Kevin, you are looking at some of these overall global growth concerns, specifically when it comes to some of the metals like gold, copper. Tell me what's standing out to you today.
Yeah, we are seeing a little bit of a fade when it comes to the reflation trade, Jenny. And across the board, when you're looking at a lot of these commodities, we are seeing some selling that is occurring. Even if you're looking at the 2-month performance when it comes to crude oil down about 15%. We're seeing silver down about 9.5% from its recent highs, and even copper down about 13% from its recent highs. And we're kind of also seeing a little bit of a rotation when it comes to sector performance as well. Today, the leading sectors are real estate, which is going to be a little bit interest rate sensitive, as well as healthcare and consumer staples. And then some of the other sectors that will focus mostly on manufacturing and production, like energy, industrial materials, are the ones that are lagging for today, while yields are going lower. So it's going to be an interesting dynamic as we get through the rest of this week. We have a lot of economic data, but if this is going to be the new regime, we might see a little bit of a break when it comes to yields going lower and the equity markets going higher. And you're starting to see a little bit of a disconnect with all of these correlations. And just keep your eye out on that reflation trade. If we do see that fade, that could be a good thing when it comes to inflation, but that also could be a bad thing when it comes to economic growth, which I think is a concern that a lot of market participants have here in the United States, as well as around the globe right now.
Kevin, I think there's two actionable lessons from what you just said. First off is sort of beware the crowded trade. It became market consensus that recession's off the table, inflation's the only thing that can be concerned about, but what you're describing is a more balanced risk. Not saying inflation's going away, not saying there's going to be a recession, but both are a conversation to be had. And so whenever you hear consensus, that should be setting off some alarm bells to maybe think about, what are we missing perhaps in the market. And the second thing, I think
he's talking too much. If he could just come out and say, we've only had one recession since Barack Obama. And that was during COVID, when the government shut the country down. And none of these idiots will say that. We used to have recessions. Before that, we used to have them every 4 years because the government wasn't throwing all this money into the market. It mainly started back during when Bush did the stimulus. Bill Clinton kind of brought it back to a reasonable level, but he had to change his perspective midterm. He was a real left-wing wacko, and then he figured he'd lose the next election, so he got with the Republicans, and they did welfare reform. And the country just went wild after that. And then 9/11 hit, and that shut the country down for 3 to 4 months. And Bush handed out stimulus checks. And then Obama was elected, and he put I think it was about 10 trillion in the market. 6 trillion, something like that. And we recovered. We crashed during his era. We crashed. The market dropped 50% when he was elected. Not when he took office, but after everybody knew he was elected, the market crashed. So he'd come out with stimulus checks. I think it was all pre-planned in a way. Not stimulus check, but he had what you call Wall Street reform bill, health care, Obamacare, and then we had, I forgot how many billions was pumped into the market. We passed a shovel-ready project bill that never did go to the shovel-ready. It went straight to the unions. And then the market went from 6,500 all the way up to 20,000. For 4 years, they printed $18 billion a month and added it to the market. So they kept adding liquidity. I mean, we're up to 134 trillion now, or 34 trillion. $35. But we've not been in a recession since the Obama crash, 9/11, because the health care caused a lot of businesses to collapse. A lot of businesses collapsed, and new businesses came in to take their place. I was working for one. They just couldn't afford the health care anymore for their employees. So they revised it. And then COVID came, and that really was the big one. That was a recession. Stores were closing down, restaurants were closing down. But the only people that benefited were the government employees. They kept their checks. we haven't, the talk of recession is beyond stupid right now. Because we printed so much money, so much liquidity. It's going to run out, and then you'll have probably a crash that you'll never forget. Because the market, the country's been spoiled. Hear some of these commentators get on here, well, we still got that stimulus going on. But I can only recall one
Real time, this
since we recovered from the crash of Obama days. We were at 13,000, it dipped to 6,500. Then they put in the, in case it dropped over 1,000 points, they put the halt in because they didn't want that to keep going. They didn't want it to keep going. It was just, they didn't know where the bottom was. One guy said 50%, and it stopped at 50%.
Year, it was better than last year's drop of 10%. This year, same-store sales again fell 2.5%. By the end of the quarter, cash and cash equivalents had fallen year over year to 43.4 million. And the company, good thing, managed to chip away at its inventories. Now it's down slightly from last year. It sits at just over 620 million. And the company managed to also declare a 5-cent per share cash dividend. That'll be payable in a couple of weeks. But the CEO said this quarter, the company was pleased to deliver results in line with their expectations for the quarter as they gain more traction in the path to returning designer brands to growth. And what he's talking about is likely that past about 8 consecutive quarters, the company had declining same-store sales, and the company has seen some big drops. I mean, running up for the past year, however, the share price has been pretty strong. It's up over 20% over the past 12 months, I should say. But clearly that's falling now, and it has a lot to do with the stretched consumer. They're just not spending as much on these items anymore at designer brands, different companies.
Okay, this totally ruins my whole theory that these shoewear companies were doing well.
Yeah.
I mean, like, we saw really nice results from On as well as a Foot Locker even. I mean, like, so many of these names were doing quite well in, like, the shoe space. Obviously not, because that is all of what designer brands frankly is. I mean, it is DSW, and that is ultimately majority shoes. If you've ever been in one, it is the ultimate like treasure sort of. Yes, thank you, because it's like a little bit chaotic in there. It kind of gives me the same energy as Nordstrom Rack. But next name today here to look at another retailer selling off. Bath and Body Works. If I call this name best, I mean, I am so thrown with this ticker. Bath and Body Works, though, to get it right. They are the one that is seeing this selling today. We're down almost 13%.
Bath and Body Works selling off, earnings, revenue, or actually earnings were okay, but the company had a guidance miss. Earnings did fall from last year, however. They came in at 36 cents, or pardon me, I'm looking at the expectations. Let's go back, rewind. Earnings per share is expected to be between 31 cents and 36 cents a share in the second quarter, and analysts had expected 39 cents a share. That's a strong decline from last year's 40 cents, what it actually is expected to be. Now, the company's also guiding for sales to be between flat and down 2% in the second quarter, and analysts expected sales to fall no more than 1.3%. And the company did manage to slightly boost the low end of the full year earnings guidance, and that is at $3.05 all the way up to $3.35 a share, but analysts expected $3.31. But during the quarter, the company actually did okay. Clarity, the company did well for adjusted earnings and revenue. They both beat expectations. Adjusted earnings earnings came in at 38 cents, revenue $1.38 billion. Operating income actually rose slightly during the quarter as well. And the number of stores increased, but it was after the company closed about 11 stores, it opened about 16 new ones. And the CEO here says that the company is maintaining its focus on building brand awareness and engagement.
God.
And they say that that is actually
Never done that
delivering
before.
that greater customer retention and loyalty, right? But one thing this company needs to work on is its digital expansion. And notably, about 74% of Bath & Body Works sales comes from the brick and mortar stores. And so they really need to find a better way to make more revenue online.
Yeah, it's an interesting one. I don't really know who to compare them to. So to me, they're almost like an isolated classic, winners, losers within retail. But I think what we're starting to see is through designer brands more, I think is more interesting. Even if you look at Foot Locker, the numbers weren't good. They were just better than feared. You look at what Kohl's, I think it was Kohl's, who basically said we stopped discounting and the consumer stopped coming to the store. So the same thing I see here is we're seeing this K-shaped recovery. Those who are struggling a lot right now because they're not invested in NVIDIA. They're not invested in the stock market. So it's like, great, the stock market's at all-time highs, but I can barely, make ends meet. And so there is a theme happening. The stores that are reaching those, struggling consumers are struggling right now. There is not, I guess, this perfect economy out there that we keep reading about.
It's not, and I think we saw this in Dollar General earnings as well. Just
exactly.
Stores that are struggling more because people who were struggling in the first place were likely going to some of these, or in some areas, I should say, not all across the board. But we are seeing that K-shaped recovery. I remember hearing more about that during COVID. It seems like that's reemerging.
Gosh, and I feel like I've done my part, particularly for Bath & Body Works, because I am a scent enthusiast, and I still shop there, even though I think it's like very much an early 2000s trend, but I still love Bath & Body Works. I guess not enough to lift results, though, because we saw, you just see, there's like some good scents that can still be found there, but we will leave it there for the retail sell-off. Now coming up next, though, we're looking at HPE, as they do have earnings due out today after the closing bell. George will have more on those expectations for us coming up next.
GPU chips. So I think the analysts, I think investors will be looking at HPE, which is essentially the infrastructure computing arm of what used to be, of course, Hewlett-Packard, which is split now into two different companies. HPQ, which is essentially their computer and printer and mainframe business, but at the same time, HPE is essentially a software-defined networking company with their servers. But at the same time, with HPE, they bought Juniper Networks, which now places HPE more in line with competition with Cisco systems, more in the networking and telecom areas of the IT infrastructure. So I think if you look at the earnings estimates at 38 cents, they're actually quite low compared to 52 cents last year. So they're expecting to show a decline of earnings about 25% compared to the same quarter last year, with revenues at 6.81 billion. That's also expected to be down about 2% compared to the same quarter last year. Now, there's a couple of things that I think are important in this conference call. One is the acquisition of Juniper, which is still ongoing, $14 billion acquisition, which is quite large compared to the total market capitalizations of HPE, which is around $25 billion. I think the second thing will be essentially what's going on with their server market, because ideally speaking, you look at this company compared to Dell Technologies. I mean, Dell has significantly outperformed Hewlett-Packard Enterprises. So I think that maybe Hewlett-Packard has actually been, underrepresented in the GPU and of course, our AI-based high-performance server market. So if they do announce some improvements in that area of their business, this actually might be a rewarding earnings call.
Yeah, and so I think that's a really interesting point, because I was looking at like Dell, for example, which had a pretty massive sell-off after their earnings, and I was concerned, but could we see that this is not going to be the same as Dell? I mean, this is a very different company.
It is, and so one of the things about Hewlett-Packard is they fit more in line with Cisco systems, and in fact, if you look at their business, they're more integrated as a software-defined networking company. Buying Juniper Networks buys the network gear or hardware. And of course, cybersecurity is another area of their service provision. So they're more in line with Cisco systems, but they do have, of course, their server division, which puts them a little bit more in line with Dell Technologies. So I think that portion of their business has really been underrepresented of their performance in the past year. But nonetheless, I mean, looking at Cisco systems, it hasn't been a great performer over the last year because that business is more in line with traditional IT infrastructure, telco, and networking versus what's really hot right now, and that is the build out of AI infrastructure associated with, of course, GPU. That's the core architecture from NVIDIA, Micron technologies. We're talking about high bandwidth memory, and then high performance servers, which are being sold by Dell Technologies and Supermicro.
Yeah, and that's also a very good point. I think it's always important to reiterate, like, the various ways AI is not lifting all boats. There's definitely those hot spots like GPUs, CPUs, data center workloads. It's not like large language models are driving the whole overall AI trend, which I think was at one point sort of the narrative. But we will leave it there. A great insight as always, George Tillis, senior markets correspondent for the network. And that'll also do it for Alex and myself for Next Gen Investing for this Tuesday. Coming up next, we have the watch list with Nicole Petalides.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash.
I hate that commercial. I just don't like that commercial at all. He's finally come to conclusion that he's going to only allow 2,500 in per day. And you know that won't work. He is an idiot. He's ruined our country. Democracy? It's more like fascism or authoritarianism. I'm still raging about the student loans. I worked 2 jobs to pay mine back. Took me 4 years. And they give this Antifa bunch a free ride. I don't know anybody that's an Antifa, but I don't live in a big city. If I did know him, I'd probably punch him right between the nose. Or right between the eyes. Nicole's back.
From the New York Stock Exchange, we've had some back and forth action for the major averages. Here's what's coming up in today's show. The CEO of Insmed will join us to discuss its positive results from Aspen Phase 3 study for the company's lung disease treatment, as well as its product pipeline to cure other rare diseases. It's Technical Tuesday. Kevin Horner joins us with some key levels to watch on the S&P 500, as well as trends he's noticed with Duolingo and also Elf Beauty. Our panel standing by to discuss the very latest earnings of Bath & Body Works. It was a tough one, previewing the earnings also of Lululemon. So all those retailers, that's due out. Lulu's due out tomorrow after the close. In the meantime, take a look. Real estate is one area that has helped to prop up the market. I was just looking at those sectors. Healthcare has been doing well, consumer staples. You're seeing some defensive plays, utilities in the green. So definitely defensive plays that help to bring the market higher. Here's a look. The Dow is up by 83 points, up 0.25%. But the S&P is down 7, the NASDAQ is down 0.1%, and the Russell's down 1.2%. Oil and gold both lower, though gold is off the earlier lows. It's down about $19 now. Oil is down about half a buck at $73.65, US dollar 104.03, and Bitcoin has been creeping higher back to 71,320, up 2.3%. For some of the big stories in the markets, we welcome in Kevin Hanks, host of Fast Market here on Schwab Network. And of course, the job openings, JOLTS, kicked off all the labor data. What stood out to you? What are you watching?
Yeah, we're going to get a steady flow of labor data the rest of the week, Nicole, as we're getting some type of labor market data each day from now until we get the jobs report on Friday. But today it was JOLTS, Job Openings and Labor Turnover Survey, and this one came in a little better than expected. They were looking for 8.4 million. It came in right at 8.059 is the exact number. We'll call it right around 8 million. And really, if you think about it, Nicole, that's good progress since last summer it was 9.49 million in August, 9.35 in Sep. So we've taken about 1.5 million, 1.4 million jobs off the market since last summer. So good progress in terms of job openings, Nicole.
Yeah, you know, I get torn on that. It is good progress because it means I get torn on that because it means there are fewer job openings and a lot of those jobs were taken. But sometimes in a poor economy, a company won't list jobs that they could have originally in a better economy.
Or they pull back.
I feel like sometimes, right, you know, if it's a great economy, they keep listing jobs and there's so many job openings. But, sometimes if the economy starts to, falter,
Sure.
then it may not
Okay,
be as
I'm
good,
back.
and there won't be as many openings. So that's like if people dig into their savings. Are they digging into the savings because they need it, or are they dig into the savings because they feel so confident that they have a great job and they can fill it back up? So that I go back and forth on those. How about Hewlett-Packard?
Hewlett-Packard's coming out with earnings after the bell today, and there's some issues here at Hewlett-Packard. Like, case in point, the earnings per share, they're expecting about 38 cents a share. Now, last quarter it was 48 cents a share. A year ago it was 52 cents a share. So some deceleration there in earnings per share. Revenues, about flat for the last year. 6.81 billion is what they're expecting. It was 6.76 billion last quarter, 6.97 a year ago. So slightly lower in year over year. They're looking for annual recurring revenue growth. They're looking for stronger margins and an as-a-service offerings. However, their server revenue is expected to decline. So we'll see. Right now, the stock's down only a small amount, a little over 1% going in. The earnings trading about 17.73. So their earnings coming out after the bell, Nicole.
All right. Thank you for all of that. Kevin, great to see you. Thank you so much. Let's get a look at the bigger picture. George Schulte's with us, founder of Schulte Asset Management. Some of your thoughts on the market right now.
Hi, Nicole. Good to see you. So we've had a lot of volatility. I mean, it's early in June when we last spoke, when I was down on the exchange with you last month. I said sell in May and go away. Well, May was a pretty volatile month. Now we're starting to see a continuing uncertainty about what's going to happen with the labor market and interest rates, and of course, inflation continues to, be trending here. Yesterday we had the big, trade settlement issue with some software problems on one of the exchanges. So there's a lot of uncertainty. A lot of macroeconomic data coming through this week, mostly with labor. You'll see the DOL report the May jobs, later on Friday this week, and right now. It looks like there's a lot of continuing uncertainty. People don't know if the Fed's going to lower rates or keep them higher. For now, my bet is that they'll probably keep them higher. You still have an inverted yield curve, which is forecasting risk of future recession later this year or maybe early in 2025. And certainly the equity markets have been on quite a run up until now. So I think what we're doing is we're setting up for really a once-in-a-lifetime opportunity for investing in distressed securities going forward with higher interest rates, with inflation, with secular change. And so I think that really sets up for an exciting future for that strategy going forward.
Yeah. And we will start with Friday's jobs report. It could go either way, and then you have the Fed meeting next week, right? What do you think is the most likely scenarios that we will see?
I think the Fed is likely to punt again. I mean, you might see some additional guidance about where they might go, but I think they're likely to just leave rates where they are for now. And then maybe in November there's some action if you get a bit of a sell-off or some systemic issues coming through. I think that a lot of the issues you've had up until now in the market with much higher interest rates affecting most borrowers, including highly levered borrowers, is still reason for concern. And the banks, the regional banks, I think you still have lots of reason for concern as well. Many of them still have unrealized losses on their balance sheet, and this big change with commercial real estate where there's less and less demand. And that secular change because of the trend of more people working from home means that the value of a lot of commercial real estate office space is just lower, and banks may have trouble digesting that on their balance sheets. So we'll see, because that could create systemic risk to the system overall. But I think for now, the Fed is not going to do anything.
What's your interpretation? And I just had a great conversation with Kevin Hinks because we noted together that there was progress made and that there were fewer job openings. You presume that those are filled, and so that number comes down. At the same time, the other side of the coin is the economy, and sometimes when the economy starts to slow, companies just list fewer jobs. So right now, the JOLTS number fell to a 3-year low, to the 2021 levels. And we're at 1.2 available jobs for every job seeker. Had been 2 jobs for every job seeker, so you get my point. How do you interpret when this JOLTS number is coming down?
Well, it's certainly showing a trend, but I think the important high-level concept here is that the unemployment rate is still quite low at 3.9%. That's at sort of close to record levels. And inflation is still higher than the Fed's target, which is 2%. You know, whether you measure it via CPI or the PCE price deflator, you're well above the Fed's target still. And so the Fed, I think, is unlikely to suddenly drop interest rates. We're probably getting close to the tail end of their hiking cycle, but the bigger concern there is that rates came from 0% previously. 24 months ago, rates were effectively zero, and now the short-term policy rate is above 5%. So that's just a dramatic change.
Right.
And that impact on most borrowers is significant.
Right, so you're more in the camp of it's more progress when those numbers were coming down versus concerns about a slowing economy. Tell me about Vistra. That's your name, your stock pick, right? VST?
Yes, we like this utility. This utility restructured, its ticker VST. Restructured a couple years back in 2016. In that plan, it eliminated over $30 billion in debt. And before that, it had been the biggest independent power company leveraged buyout. It was formerly called TXU, and then, briefly it was called
So we got the SPY here, and I was doing the weekly time frame just to get a kind of a general look. And this is a bear flag, and we've had 3 weeks of selling, but each one of these weeks, the bulls have been in charge. The bulls have been in charge. Because they're all hammers after that doji, but they're red. There's still 3 red weeks. When we come into next week, we might have a green week. If we can hold the 9. The 9 keeps us in the trade. It's around a little above 520. If that doesn't hold, we'll definitely see the 21 EMA. So far, we're topping out. This is a total month that we've topped resistance out. Pretty much. And that resistance level is right up in here. I gotta get my water. I'm making some coffee now. $530.74. So at 530 that we keep talking about, 530, 530.50, 530.74, 75, whatever that number is, pretty much 530.50. And the 9 is our keeps us 521.44, and that moves around a little bit. That's a pretty good spot right there, 521.44. But it kind of tells me that we're still bullish because we got the wicks on the bottom. By the end of the day, the bulls are winning. By the end of the week or however. NVIDIA back up. This is their baby. Now Intel came out with some new chips, some big time chips, and it did not affect the stock at all. Might be like it was before, tomorrow will be the time to see if this thing's gonna hold. I guess still got 2 weeks on this trade. So I still got 2 weeks on this trade. Oh, SPY jumped up there. Whoa! SPY has a new high. Dadgum, man. Them things went to 143. $15-minute. Surprised they don't halt to spy. Now that's a trip, ain't it? YouTube. 529. Randy. Biden blaming Trump again. America, I want to let you all know, America has been dummied down big time. I don't know what they're teaching these kids in school anymore, but they're coming out stupider than hell. These people are so gullible anymore. So divisive compared to what we were back in the 70s, in the 80s. I don't think this country started falling apart once Obama got elected. That's when it started getting real bad. Everybody's racist. I was telling the IRS guy today, I said, hey, man, I hope they don't check me out. I can't tell you how many prostitutes I paid off. I even bought a girl a house to get her out of my life. That's probably shameful. He just got a kick out of that. I said, yeah, I wrote it down on my HR, human relations. That's an easy way of doing it, straddles. Good job, Randy. What a trip. What time did the fat cats come back from lunch? Yeah, they just continued the run. They said,
hypertension and lung diseases and things. You know, we do have a lot of baby boomers in an aging America. That probably falls right into your wheelhouse, right?
It is sort of right in the center of that population you're referring to. And of course, we conducted this study on a global basis. So we have all the necessary clinical data to be able to secure regulatory approvals for those populations, not just here, but in Europe and Japan. And we expect this to be a fairly smooth approval process. We certainly hope that'll be the case. But we'll be anxious to turn our attention to the launch and getting this drug into the hands of patients that will benefit from it. And there's a lot of enthusiasm in the patient community for this compound because they've been waiting a very long time for something to get approved so that they could have something that will help their condition.
You talk about launches next year and then potential filings and launches in Europe and Japan. Tell me a little bit about some of this timeline.
So we will hopefully launch in the U.S. by the middle of next year. That's going to be facilitated by the fact that we have breakthrough therapy designation from the FDA. That's a kind of designation that allows you to have an ongoing dialogue and should accelerate the time for review and approval. We have what's called PRIME designation in Europe. That's a similar kind of designation that helps accelerate, hopefully, the time to approval. And it's given only in a handful of cases. So it really speaks to what people believe will be the impact of this medicine on this patient population.
A lot of folks love investing in healthcare or pharma or big pharma or biotech or biopharma. Tell me a little bit of something for the investors. I mean, a lot of times they're looking for either some groundbreaking story or dividends or good economy, bad economy, still need medications and such. A big picture thought?
Yeah, I think as we step back, the reason you invest in biotechnology are for moments like this. And to the audience that we're speaking to right now, this is what you call that moment of idiosyncratic alpha creation, because you have a data readout that resets the expectation and understanding of what is going on with a particular potential biology. And in so doing, you unlock the potential of a product to potentially address multiple diseases, a so-called pipeline into product.
Right.
Those come all along very rarely, and when they do, it usually heralds the beginning of a very long and positive run for the company that is behind them.
Will Lewis, CEO at Insmed, thank you so much. Great to see you. Appreciate it.
Thank you very much.
Congratulations. Stocks at 23-year highs, folks. Groundbreaking developments in the phase 3 trials that we've been seeing, studies. Coming up. we will focus on the robotics sector, which in fact has seen slight year-over-year decline despite an emergence of AI. And its ability of this sector to improve the potential for robotics. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides live at the New York Stock Exchange. Glad you're with us. Quick look here at the markets, 90 minutes left in the trading day. And we're seeing some up arrows in some of the areas that are more defensive, such as real estate, utilities, healthcare, and so on. But you know, the market is turning over a little bit to the positive side. Tech is giving it a go, for example, as well as consumer staples. Ben Lichtenstein's with us, senior futures contributor. 90 minutes left in the trading day. What are you watching?
Yeah, a bit of a turnaround into this afternoon session here. Seems to be quite the trend we've seen, right? Following that big run-up that we saw on Friday. Yesterday, a rally into the close, and then today as well. We're seeing this pattern repeat itself there. I just wanted to start with some of the price activity we've seen off the lows from yesterday because we were just trading around 52.34, if you remember. The high yesterday was up around 53.04, 53.05. So even this rally that we've seen today has a short of that level. So again, the lows from earlier today, unable to take out the lows from yesterday. Actually, I think on this chart I have it. There it is on the left side of your screen now. You can see the high from yesterday. So all of today's price activity, Nicole, again, very much contained. But let's just kind of focus again on this rally we've seen off the lows from yesterday, because on this 1 minute candle chart, you're going to see almost a similar depiction. Bottom left to top right, trend up as we're seeing on a daily candle chart. So this little move right here, pretty representative of what we've seen basically since the October lows here. If you remember when the S&Ps were down around 4,100 all the way up to 53.41 recently. We're balancing up here, establishing a bit of a range near these all-time highs. So holding this upper level, Nicole, just off historic highs, but market that's in a bit of a digestive phase, it looks like to me.
All right. So as we digest that, let's talk about treasuries and yields in particular.
Yeah.
Some of your thoughts there.
Well, I think we're in a bit of a holding pattern because we're trying to figure out what's going on with treasuries, with yields. Is bad still good in terms of eco data? Because recently you've seen treasuries bid up amidst some of that selling we've seen in stocks. Yields have come off a little bit, but yet again, we've seen selling in stocks, not that typical inverse correlation that's been playing out recently. Taking a look at the 10-year here, though, you can see the move lower from 4.6% down to 4.3 recently, Nicole, and I just want to point out that, again, with rates low, you'd expect to see stocks getting a little bit of support, right? So well below that 4.5% level that we've been kind of keeping an eye on as that sort of psychological threshold. And then not only a psychological threshold, but kind of the middle of the range here. If you take a look at the lows that we saw back around this time last year, we're talking 3.6 up to 5% in the fall of last year, and here we are. Look at this, smack dab in the middle at 4.3. So market's comfortable here right now, that's for sure. Whether you're talking the S&Ps or yields at this point. It's also a market that's waiting for more information. We'll get a bit of a look at some of the jobs in between now and Friday, but that's, I think, the next big catalyst coming our way, Nicole.
Okay, thank you so much. Ben Lichtenstein, great to see you, appreciate it. Time to turn our focus straight over to the robotics sector and learn more about that. Joining me, Zeno Mercer, Senior Research Analyst at Vetify. Thank you for being here.
Thanks for having me.
So when people think of Vetify, I mean, you're basically looking, they have so much research under the umbrella there. You focus on the robotics part of things. How have things been looking?
Yeah, the last, I guess, 14 months have been pretty tough for the robotics space. I want people to think and separate in their minds kind of like the AI space and the robotics space. Robotics has a lot of traditional exposure to manufacturing, industrials, a lot of these kind of what many think is like traditional markets. These newer markets that we'll get into in a little bit haven't really started to take off yet. So exposure, we saw labor strikes and delays in the US. China was slower than expected last year, and we're starting to see kind of a bottom. So this earnings season saw some upsides, some inventory leveling out, and really across the board we're seeing excitement, if you will, a muted excitement for the second half of this year in the robotics space globally.
Where do we stand on, valuation, and we think about this group overall, AI, but robotics in particular? Is there more room for more growth?
Yeah, so kind of separating those two out again, the robotics space is valued basically at all-time average levels right now. So, and we're coming off, like I mentioned, kind of 14 months of underperformance. So really not many people are looking at robotics right now as an investment class. It's kind of an overlooked area. You've got a lot of blue chip companies that are like John Deere, Teradyne, a lot of other players that are at compressed valuations and have exposure to kind of the energy transition, the semiconductor space, and the chip manufacturing in the U.S. So there's a lot of 5-10 year headwinds coming up ahead in those traditional markets that are misunderstood.
So at this point now, I mean, you're in charge of the whole index or ETF, right? Is it index or ETF?
At Vetify, we manage the index.
Okay.
Yes.
So
Robo
tell
and
me
Think.
a little bit about what goes in there. How often are their names changing and rebalancing and things like that?
Yeah. So our process is evaluating the companies and universe that are in robotics and AI, and we rebalance every quarter. So we have a scoring process. We work with our strategic advisors who are leading roboticists and AI professors and leaders across the globe, and that's incorporated into our process. So we're looking at technology, market leadership, where companies are investing, and basically the outlooks for the end markets and where they're heading.
What would you like people to know about robotics? And then I won't say, instead of AI, sure there's something you want them to know about AI as well. So, because you obviously are differentiating the two in a big way.
Is he carrying Bud Light?
What people should know about robotics and a little bit about what they need to know about AI.
Right, so robotics makes our modern world. Robotics has been around a lot longer than artificial intelligence has without the help of AI. So you've got traditional manufacturing in China, but you also have, healthcare. So we've had surgical robots for decades now, like Da Vinci from Intuitive Surgical, right?
Yeah.
So the applications are a lot more vast. Now, AI is going to benefit.
That's weird.
Impact robotics. It's going to improve capabilities, the dexterity, the energy consumption, all of these different elements, which is really going to raise the bar on what they're able to do, and also the way they work together and can coordinate. We're about to see a massive expansion in the applications in which robotics can be deployed. So that's physical world automation, where AI is kind of like this decision making and data, right? So they work together, but they're very different end markets.
And really, robotics, you said, is really showing us where we're headed, even more so than AI, right?
Well, I would say they're both pointing where the world's heading right now. And part of that is like the world is leaning towards AI. A recent Microsoft survey showed 75% of employees were using AI, even if the company didn't have a formal policy or approval, right? So you're seeing adoption in the working class across.
I'll tell you, today was a real stressful day for me. I didn't know what I was going to do. I was down 600 points. And I just kept contemplating, should I sell, should I sell, should I sell, should I sell? And I didn't. And I keep telling everybody in the room, every time I sell, I regret it. Almost 95 or more % of the time. But you get to that point where, God, come on, mentally, this is dragging. You know it's the wrong time of the day. You jumped in the trade, you know. That I'm talking about between 11 and 1:30. 11 and 1. And I know that. I know it. I've known it over and over and over and over. So I got stuck in this trade, and I'm just going down and down, and it seemed like it lasted forever. I had to get away. I had to walk away, go do an exercise, and come back. And that's when things started changing. But they kept saying, should I add more? Should I add more? Should I keep adding more? Do I have a limit here? And then all of a sudden, you break all-time high, you run it up 100%, and you just go, shit. I had 15 calls at $100. $1,500 profit. And I end up getting away with about 6 after I re-scalped it again. 340, and I could have had 1,500. So for that, I give myself a C. One, getting into trade at the wrong time. That was an F. Holding on to it was an A. And that averages out to a C. Then selling it too soon, after you go through all that heartache and all that pain of being embarrassed, because I got, people watching me, and you sit here and watch me every day, man. I don't hardly ever take a loss. Hardly ever, since I've started this new strategy. And when I do take a loss, it's regretted. I regret it. I fully regret it. I always hated stop losses. People would say, no, you got to get a stop loss, man. You got to do it. You got to do it. And every time I do it, I go, shit. If I just held the thing, I know I was down another $200, but I could be up 600 now. I could be up 1,200, and I could be up. We got up there, I was down, and it got back up to even, and I was thinking about selling, pushing the button, and getting out of the trade. And then it tanked on me again, and I got down, real down low. And I'm going back and thinking, I wish I'd have sold that at even when I had a chance. And then it dips on me, and I'm going, oh my gosh. And then it pops up, and I'm back to that even spot again, and I'm going, I'm up now. I'm up. My average is 103, and I'm at 115, 116. Should I sell it? Bam, I sell it. And then it dips, and I go, hey, man, perfect timing. And then all of a sudden, boom. Could have been 100%. I mean, they were at 221. $226. But I went through a lot of emotions there. I mean, so it's a little different when you're behind the scene, but when you're sitting at the desk and you're the captain, most people would go hide under a desk or something. You wouldn't hear from them. I've been there before. I've seen people like that, you know. I was like that. I mean, I'd clam up and I'd start breathing heavy, and I don't do that anymore. I mean, because I didn't have that, I wasn't able to control that emotion. And I'd start breathing. People, Jim, hey Jim, you're breathing heavy again. We know you're down. We could tell by the way you're breathing. I'd be hyperventilating on this side of the desk. And then by the end of the day, I should be doing jumping jacks almost every trade I get in. It's like Apple. They're pumping this Apple like it's going to be the best thing ever. Over NVIDIA. This guy got on this morning. Well, it's going to be the game changer, man. Apple. It's going to get everybody involved in AI. Everybody has an iPhone, an Apple computer. I have an Apple, but I don't use it. It's 2007, I think. 2006. Apple. It still works. I haven't turned it on. I think I might even forgot my password. Let's see. Hear it? Probably got so many updates that needs to go on with it right now. Might take it in and have a look at it before I screw it up. I forgot even how to use it. But I used to record music on it and used to do my trading on it. Let me see, 2007. I don't know if I got a video that goes back that far. Yeah, I might have one. No, not on there. This goes back 13 years, so this is on my Apple.
See clearly.
Hello, this is Wash at Wash Stock Talk. Well, again, we have another down day. Oil market bringing the market down. I alerted this about the time that Egypt started to erupt. I said, hold on here, because we're going to have some high gas prices. Our energy problem is not solved. It's worse than what it was 4 years ago. It seems like America just can't get it straight. So I'm thinking that FAZ is going to fly, and I've been in it all month. I've warned everybody about it. I said this would be a sell-off month. So FAZ is up today. Up 200's been up $3.
Fast.
A high of 41.77 and a low of 39.68. Right now, FAZ is sitting at 41.40, and the opposite partner, FAS, is falling. And I told one of the guys going to bounce up a little bit here, so he tried to put some kind of thing on it, trigger on it. He's going for FAS. I'm still in FAZ. I'm going to ride it till close to the end of the month. LEI I'm in, it's still up. It's up 11% today. It's at high of 523, a low of 463. Right now, LEI is sitting at 473. So I'm still in it, and I'm going to stay in it. I'm going to ride it to $6. That was my target price, LEI. I'm riding 6. So I wanted to bring those up. And then my big stock that I got into, I think I was too tired to think about the stock this morning. I made a mistake. I sold it. I should have kept it. I knew it was a good stock, but I didn't know it was going to go BK. So that threw me a pattern, a red flag, and I sold it. And I lost. I lost $150 on it today, and I gained $150 on it Friday. So the only thing I really lost was my commission. Sometimes when I'm in a stock and it goes up like that, I'll sell half of it, keep the other half, and see where it goes. Because that way I'm locked in profits. So that's XMDC that turned into XMDCQ overnight. It's up 85% today. That was off today's low after the...
What do you think of that goatee?
Everybody have a great day. Today's stocks that we're watching, FAS, FAZ, LEI, and XMDCQ, with the market in a sell-off mode for March. FAS ought to go up 2 at least. Now, I said 40, now I think it might go up to about 45. So my next target on FAZ will be $45 by the end of the month. I think with the spreads that it have, it'll hit 45 easy. I'll catch you all later. This is Wash and Beppy at Wash Stock Talk.
With my FICO, I get easy access to credit reports, 24/7 monitoring, and alerts for my FICO score changes.
Other credit scores can vary as much as...
That was me 11 years ago with a goatee. What's that guy name that sings? Tim McGraw. I got a knock on the door one day. He said, "Jim, I love that goatee you got on, man, that mustache. I want to get one just like it. I'm going to become a country star. And that hat, whew! I heard you live down there at Winfield. You sound great, man. You got a great voice, Jim. I wish I could sing like you." I said, "Tim, I'll tell you what to do. The first blonde that comes in your path, I want you to take her and marry her." "What do you mean?" I said, "You watch. Another couple years, some beautiful blonde going to come across your path." I got another knock on the door 3 years later. Said, "Jim, you wouldn't believe it. I married Faith Hill." "Yeah." I got on my knees and I begged her. I said, "Hey, honey," I said, "I'll turn you into a country star if you just marry me." And she says, "I already am a country star, hon." I said, "Well, let's have some kids in." Wash, stock, talk. Webcam video, what the heck? I didn't have it tagged. That one looks better. Aller.
Stuff that was lagging, and general a little risk appetite building throughout the day here. Once again, we saw data this morning that wasn't perfect, far from it, and the Russell's still down, which does kind of show you how you're in a bit of a catch-22 to some extent here economically, given that we've seen weaker than expected activity from the data, but also some pretty sticky inflation.
I forgot to mention the minus. Your
How you
dog.
describe the data, I've heard some describe it as disinflationary, and arguably still that's not a terrible way, but more precisely, let's just call it slowing. Once again, as we saw jolts this morning, the disappointment is seeing some of the weakness in the data creep into the jobs market, definitely something that's notable. And we've also seen, of course, manufacturing yesterday with a fresh update that was pretty soft there, but prices paid still very elevated. Trying to figure out what this is going to mean for the market if softening in the economy doesn't bring softening in inflation, then you're a little bit stuck. And so that's kind of what we're dealing with. Bonds, at least, are pretty clearly a winner right now as treasuries are catching a bid again. About 40 bips. 10-year futures have been elevated and strong now all week, and the 10-year yield is making lower lows on the chart. So we are notably dropping here over the last couple of days.
SPX and DVX.
Depending on where bonds finish and how much buying appetite there is for treasuries over the next hour, we might be able to hold in that low from the past month, but we're really challenging it here as we're trying to break
True.
down the low wick of the candle here in today's session for the 10-year, pretty much exactly at the lows from mid-May. So this is definitely a pretty big deal, as we were just talking about the opposite scenario where it looked like yields wanted to break out again and move higher. A very strong rejection of that potential trade, and that we see the dollar softening up as well. That to be expected when yields are coming off the way they are. Dollar a little bit more resilient today after getting really beat up yesterday, but I do think that there's a case that the dollar can kind of hang on here. That was what I was talking about yesterday.
Knife.
Revisiting the bull case for the dollar, given central bank differentials still favor the greenback as a currency, with the ECB
Spike to 200
this week, but the Fed without any cuts in sight. Still though, maybe that's already been priced in. If you just look at the chart there, you can see on the volume profile on the right, this is basically the meaty part of the dollar trade, and there's been a ton of ups and downs over the year. The dollar has swung around quite a bit, but we're actually basically like right in the middle of where most of the trading has happened. So I do think you're going to be hard pressed to see any massive moves in the dollar right now, but range bound might just be the way to think about it, as there are some forces that could support it. The fact that other central banks are going to cut and we're not right now, and some things that might work against it. The fact those other central banks are going to cut might give their economies a bit of a boost, and so the rate of change for growth expectations might shift away here, especially if our data continue to come in shy of expectations. Now, where we are getting some volatility, and I think you can probably expect to see some more volatility, is in commodities generally. We saw that crude dropped off pretty hard here over the last couple of days, but copper as well after its really fast and intense spike has come back off. Commodity index, DBC here, cutting down to lower lows on the chart. A lot of volatility and kind of the opposite of the dollar volume profile. If you look over on the right panel there, the big volume nodes showing you that the commodity index doesn't spend a ton of time in the middle of this range. It's sort of at the top, we're at the bottom. So we look for a good bit of volatility in both directions. Personally, I don't have a bias on which way it's going to go or any particularly strong thoughts. Commodities are a tough trade for a reason, but it does look like it is pretty prone to volatility in terms of asset classes. Think about stocks, which have just been kind of sitting below the highs. Yes, we've had a good bit of swings in bonds too. The dollar sitting in the one-year range. Commodities look more like the volatile asset class right now. And I think that speaks generally to the difficulty of pinning down the macro narrative right now. Just a couple weeks ago, it looked like the threat was going to be inflation still, higher rates, and pressure coming through that route. And now it's suddenly looking
Same
like
one's 528.
expectations. Maybe there's too much slowness
At 114,
in the economy. So
it's got to hold. If it doesn't, I'm going to stop out of this
macro
one.
goes, but we'll get some more clarity later this week with all the big jobs data. Lastly, just want to point out the semiconductors kind of missing again today. That limits your upside when NVIDIA and its ilk are not ramping up, given how important they've been. Just also maybe a little expected when Intel is your main news leader overnight from Taiwan. Just not quite the same ability to stoke a broad rally like its peers. So chips a little bit lower here today by about 0.75%. Jay Horn, Kevin Hanks joining me here in studio. The data, Kev, right now is seeming to drive most of the action. Given today's bond rally, it seems like that's our big move here on the week, is generally Treasury strength.
They're buying bonds. I think this is the first course of a 4-course meal we're going to get throughout the rest of the week. And we're going to try and figure out what it all means. And really, if you look at the overall stock environment, yeah, you're getting moves in bonds. That's the only place things are moving right now. Stocks are frozen here. They don't know if they should rally or if they should sell off. Is the weak economy or is the higher bonds, lower yields going to be good for stocks? I don't think they know yet.
Yeah.
So right now, the only thing moving, even the dollar's not moving. So really, right now, what we're getting, we're starting to get information, and we have no idea which way stocks are going to go by the end of the week.
Yeah.
It's just not ready yet. You got to react. You got to be ready. I mean, they're rallying some of the Magnificent Seven. They're selling off others. Overall, stocks aren't moving very much. Earnings aren't doing much. They're doing what they normally do. But right now, we're at the beginning of this, and it's going to play out over 4 days, and it might be a big nothing burger, but it probably won't be.
Yeah.
I say this a lot. I've said it.
We created the penny play. That was one of the first websites out there.
Stocks don't always move, but
Chat
bonds
rooms.
always move.
Sure. Well, now that I'm thinking, what
Penny play was back in 2007. I wonder if old Hank showed up. Hey, Sep Blues, are you still out there? Guy I probably played with music with. We're at 127, baby. Take it. $131. I can do that. I can do it. $131. Blanket. Boom. 137. 21 next. $143. Locked it in. I'm out. How you do that? I'll tell you how you do it. You have 9. Now I did a video on this back when I was with Washboardjim, and I used to call it the penny play. We formed a group of traders back in 2007, and we started trading stocks together. And they say, "What happened to you, Jim?" And I said, "Well, 10 years later, I'm live on YouTube. And I take the 200 SMA and run it up to resistance at the 9, man. And then I get a knock on the door. Yeah, this is Elvis Presley. I'd like to have you sing a duet with me. I said, what do you mean? Yeah, you know, it's been a long time, and I just wanted to tell you something, Jim. I got lucky. I said, what? Yeah, man, I got lucky.
Interior bar. Friends and
I want you to sing it with me.
Cut. A sudden distraction.
That is good.
Fine, Father.
Found four-leaf clover up to you.
No rabbit's foot, no lucky star, no magic wishing tree.
But I got lucky. Yes, I got lucky when I traded you.
Got no rainbow around my shoulder, no horseshoes on my door. But I got you to hold me tight.
Who could ask for more? I got lucky. Yes, I got lucky when I traded you. Walk around with all my fingers crossed.
I'm afraid the love I found
just might be lost.
So won't you tell me that you love me? Hurry up and make the day. And then I know that my good luck is really
here to stay. Well, I got lucky. I got lucky when I traded you.
always walk around with all my
Fingers crossed.
I'm afraid the love I found just might get lost. So won't you tell me that you love me? Hurry up and
Make me day.
and then I know that my good luck is really
Here to stay. Well, I got lucky. I got lucky when I traded you.
always walk around with
All my fingers crossed.
I'm afraid the love I found
Just might get lost.
So won't you tell me that you love me? Hurry up and name the day. And then I know that my good luck is really here to stay.
Oh, I got lucky. I got lucky when I traded you.
Oh, I
Got lucky.
I got lucky
I got lucky.
when I found you.
Come on, let's do it again, Galahad. We're just getting warm. If you get any warm, you're gonna melt the guitar.
Yeah, get away from me. That was a nice trade.
Code, it's been clearer in the bonds.
So I'm just sitting here waiting, flipping back and forth in charts, always going back, oh, what's this? Treasury yelling, smelling, continuing. Now, what gives smelling, yelling the right? I mean, this bitch is going to get us killed. U.S. Treasury Yellen says U.S. is continuing to take sanctions against Iran. What's any of her frickin' business? Is she the Secretary of State or something? I can't stand that woman. If she brushed her teeth, I could probably listen to her. I want to know who gives them the right. Who gives the Fed the right to make policy, foreign policy decisions? Is that just the job? Is that their job? I didn't think it was, man. Monetary policy, bitch. Damn, Jim, we're going to sanction you, man. You said bitch on YouTube. God darn it. It's going to go higher, ain't it? Oh, that, yeah. What up? It didn't go up. This PA, Jen, are you telling me I give you anxiety? I thought we were friends. That trade was an A. Yes. Thank you, Yoko. You go without hearing me for 2 days and then you tell me I give you a headache? Take some buffering, baby. You're going to be listening to it for a long time. It's about time. Whoa! I gotta fill up my water. I think that was an exciting trade. You like it when I get spicy? Well, I like to know who gives her the right to do foreign policy. I mean, the chick stands about 4'2" and weighs 500 pounds. And doesn't brush her teeth. I think a foreign diplomat should, I wonder how much money she's making on the side.
And anywhere on
Millions for sure, yes.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Let's do a little trading here with Tony Zhang joining us from Options Play, the chief strategist, looking at Home Depot today after a couple busy weeks for retail earnings. We're talking about consumers in America still ready to pay up for cruise lines and travel, Tony, but what about fixing up the home?
Yeah, the story is quite different when you look at some of the retailers, especially the big box retailers. And Home Depot, I think, is pretty telling because America's largest home improvement store has benefited for a very long time for investors who are interested in this particular name, owning it at a premium valuation. However, I just think in the current market environment where consumer spending seemingly is much more discretionary and especially in a higher interest rate environment, I think that's finally being caught up here, and I think there's a risk that Home Depot might trade as low as slightly below 300 going forward. So if we look at a chart here, we do see that rally up to that all-time high, just shy of $400. But since then, we've pulled back and broke below some major support levels. One major one at 350, and we recently just broke down below another major one at 335. So you have a chart that's breaking down from an absolute basis perspective. But I think more importantly, if you actually look at Home Depot relative to the S&P 500, you look at Home Depot relative to the consumer discretionary sector, it's making fresh lows as well relative to the market and its sector. And that's suggesting that these support levels are not likely going to hold, and they're more likely to break and then continue lower. So the next support level to the downside is really just below 300 to the downside. And I think that's really where we're potentially headed next.
So the stock trying to hang on here basically, but if it breaks, then it breaks, and earnings weren't able to keep it afloat. So he kind of, it already kind of missed the catalyst for some upside. So then, do you buy the downside puts then? Because I mean, $300 is a pretty good ways away.
Yeah, absolutely. I think that the options are incredibly cheap right now in Home Depot, and the valuations on it is not necessarily expensive, but it's not cheap either. It's trading at 21 times forward earnings, which is still a premium that relative to the other big box retailers, or some of the big box retailers, given the fact that analysts are expecting only low single-digit growth numbers for both EPS and revenue. So we're not expecting much growth out of this particular name. Margins are sitting below 10%, so relatively thinner margins for Home Depot. And when you're in an environment where you have a higher interest rate environment, consumer spending is slowing down or actually decelerating, not even decelerating, declining. Trading at 21 times forward earnings is just on the expensive end, even though this is a stock that very regularly traded 25, 26, even 27 times forward earnings during kind of peak optimism. I think we're kind of shifting to the other end of the spectrum, and we have seen it trade as low as 16 times forward earnings. So we are talking about potentially a multiple that is well below 300 from that perspective. So to answer your question, I do think the downside opportunity is fairly sizable, and because options are so inexpensive right now, with VIX currently trading around 13%, you can actually buy some puts fairly inexpensively, but still, I like to use the vertical spread here to further reduce the cost of buying those puts. So I think I'm going out to August here, giving myself plenty of time. It's over 2 months of time before expiration, and I'm looking at buying the 325 300 put vertical. Earlier today, you can spend about $6.50 to buy that downside exposure down to 300. Now, I'm not betting that it's going to go much lower than 300, just because that is on the bottom end of the valuation range that it's traded in over the past 5 years. So, you know, $650 in terms of risk on a $330 stock, we're talking under 2% of the stock's value that I'm risking to potentially make about a 3-to-1 risk reward ratio if it does end up below 300 by August expiration. And like I said, there's almost 2.5 months to go on that specific trade, and we'll kind of see how it plays out. This is kind of establishing a short position here, a small short position here in Home Depot. If it starts to decline, we'll likely add to that position or potentially roll these strikes down, strikes lower.
Okay. All right, so selling the 300, buying the 325, looking for this thing to break down pretty quickly, but giving it time. You've got it all the way through yours truly's birthday, August 16th. Okay, so we'll be looking for Home Depot to slide a little bit from here. Thanks for the trade, Tony. Always like the explanation and the walkthrough. Appreciate that. Tony Zhang, Chief Strategist Options Player. All right, shorting the Home Depot trade for the next 2 months. Coming up, a bunch of bullish trades, so we'll balance it out. Thomas found some action in Boeing. Norwegian riding the cruise line upside today, and the Upstart lending business with a 1% rally today, trying to get up off the lows, and it's been near post earnings. Be right back.
Post earnings?
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad always put the people before the money.
My dad.
Proud of offering a good product at a fair price. I think he'd be extremely proud of me.
He'd be very proud of me, man. The windows.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour.
Who's doing windows?
I'm Kevin.
And I became a window cleaner. My dad would install the windows.
Fast Market, ready for you.
And after my dad installed the windows, I started a business called Always Clean, Window Clean. And he kept me busy. My dad would be proud of me right now. Jim, how dare you? Right when people want to start buying Boeing again, another crash happens. Options Corner.
Having a pretty good run. It did get upgraded, remember, twice last week out of Mizuho and Truist. Both put some positive spins on this name. Capacity throughout 2024, 105%. That's pretty good.
I know.
If you think about it.
They're all booked up.
Doesn't have as bad of a balance sheet as CCL. does. But yeah, these analysts think that they're going to continue to see momentum and
Oh,
push
yeah.
through
It's ready.
into 2025. That's good for them.
It's
You got
ready.
Oil prices hitting 4-month lows. That's going to be better for margins as fuel prices continue to get hit here in the summer travel season. And I think one of the biggest things during that leg in the spring when they typically see some weakness, that bridge quarter that they saw strong momentum there. So yeah, you're seeing the cruise lines do well, as I mentioned.
Look at that, man. How can you say no to that?
Yeah, they've got their own island too, you know. You get to go on there and pay more, and that's where they're making a lot of their margins up from the people that are cruising. You're not only booking it at higher levels than they were in 2019 as far as price goes. Now you've got all the
Anybody ever been on a cruise?
charge extra for. They've got their own island set up.
I think it's the first time I've ever desired
Tell me what you think
B-roll
about it.
more than the Chipotle footage.
I'm not sure if it's for me.
I'd take this a little
I'd do it
bit.
once.
So Norwegian call buyers today, or what you got?
Yeah, it's still down 11% this year, so it's still underperformed the overall market. S&P up 10% this year. So saw some call buyers in here, really short-term positioning, really cheap options. I mean, this is a low-price stock. On the June 7th weekly cycle, trader bought over 15,000 of the 18 strike calls for an average debit of just 20 cents. So they're not sticking their neck out as far as option premium goes. So that break even 18.20 over the next 3 days, it's only about 2% above the current share price in there, with call volume about 3 times normal daily average volume that we've seen over the last week of trading. So yes, the bulls are coming out in full force here in the cruise lines. Airlines not participating as much, but it's surprising to see the delay as far as maybe some of the movement to the upside here in some of these cruise lines, because a couple of them, besides Royal Caribbean, they're down on the year. As I mentioned, NCLH down 11%, but this trader thinks, hey, we're going to see continued positive momentum throughout the rest of the week, and you only need 2% gain to get above that break even.
Okay. Wow, man, what a trade in the Royal in particular.
Yeah.
Up, 380%. Jeez. Talk about, that's like a chart that I think everyone looks at and goes, why didn't I buy that stock,
And then they're probably piling into CCL and NLCA.
What
and they're not doing as well, right?
Because we're desperate for a hero in this market right now, other than NVIDIA. All right, so wow. Call buyers continuing, and last time we talked about this, it worked pretty well for that Carnival trade.
Yep.
Okay, now let's shift over. Connected to travel still, though. Boeing, up 2% today.
Yep.
Look, I don't want to speak too soon, but it kind of seems like Boeing's got a little something going on finally, technically, for the last month. I mean, I could argue that there's an uptrend forming, but I'm not going to do that until we really get through the March highs, which is still a good bit of ways away. That's close to like $200, but we put in a higher low, and now we're almost putting in a higher high here on the chart.
Yeah, it seems like maybe it bottomed out. Maybe that area around 165 where it bounced off of. Then last week it was down near the 170 level. It's bounced off of there.
This is what I talked about. I learned it this week from McDonald's. These are McDonald's I got insulted by. It's kind of like that chick that was the marketing person of Bud Light comes out and calls us all an idiot. And after you drink keg after keg after keg after keg of their crap, then she comes out and insults us. And I stopped drinking stuff. I didn't like it anyway. I just drunk. Back then it didn't matter because you buy it in kegs and everybody would pay $1 and you'd have your beer, a couple bucks. I got a picture of me right now taking a Bud beer, Bud 8-gallon keg and drinking it to. We always carried an 8-gallon keg in the back of the car. After we finished the party, we'd have 2 or 3 kegs, then we'd top it off with an 8-gallon, and that'd be it. This would be the last call for alcohol, we'd tell everybody. They'd come running up there and have that 8 gallons gone in a half hour. And that's it. Time to go home. But it's true, I probably bought more beer I mean, I moved out when I was a senior in high school, and we had this big rock house we partied in. It was perfect. We'd have 200 or 300 people come over, have these big keg parties back in 1979, 1980. And then we kind of just went all over different ways. Still partied some, and we'd drive around party to party, and that was the thing to do. We didn't have cell phones, we didn't have computers. We all got along. There was no propaganda out there to pay attention to. I don't know if you all had that kind of lifestyle or not, but I did. Vape. I do have a porter recipe. In fact, check this out. I took first place in a contest with this beer right here. If I still have the picture. I mean, I don't drink anymore.
I find it hard to believe.
Find it hard to believe? What's a fact, Jack?
Yeah, let's hit the bar, huh?
Yeah. This was me back when I was doing the keg thing. I looked like a Mexican. That was 1979. I was saying cheese. Do I look like a Mexican? I had that mustache. You know what we used to call that? I'm not going to say it live. There's too many girls around. I wish I still looked like that. That is fact. Now I look like this. Beautiful hair. It was curly. That hair, I wish I still had that too. Girls would say, "Do you curl your hair?" I said, "What?" Spy just jumping back and forth. Who loves the 200 SMA? Raise your hands, please. Who loves the 200 SMA? Finally broke the who? PCD this time? Whoa. Yeah. All right, good job. All this running round. All right. Yeah, I got a silver dollar porter. I forgot the recipe, it's been so long. That's what I called it. I'm gonna tell you the story about this beer that I made. If I can find the picture. Right now we got 12 minutes left. We're trading addicts. We do what we do. If I ever find the recipe, I'll find it. I'll tell you exactly where it is. It's called a silver dollar porter. Let me pull the picture up first. It's all grain. Where the fuck is it? I can't lose that picture. That's some of the best times I ever had, was making beer. I mean, it'd give you a different kind of high. It's kind of like eating wild turkey. If anybody ever ate wild turkey before. I'll find out where I got that picture at. I got the original Bill Clinton cigar. Now I'm baffled. Randy, I hope your wife's doing better today. $179. Jesus. Oh well. I've left at least $3,000 on the table today. Just in the SPY alone. I can't find it right now. I made a coffee porter one time that was delicious. Yep, there it is. Cascade hops. Yep, here's the recipe. Canadian Pale. I don't know if it's caramel crystals. No, that ain't it. God darn, man. Barley has sugar in it, because I remember making a barley beer. Jim's Brew Kit. 5 more minutes left. I made 5 gallons of beer out of instant mashed potatoes one time. They got kits. You can buy a kit if you didn't want to go all grain. It said pale malted barley, Munich malt, crystal malt, black parent malt, chocolate malt. This sounds more like it. Cascade hops, yeah. Now, 1 tablespoon of Irish moss. I probably had that too. Well, these are malts. Yeah, that ain't it. It's all grain. I'll look it up when I have time, when I feel better. All my running around. Ding, 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 ding. All right, this was a pretty interesting day. I know someone real personal the other day when we were having that real down day. So they decided to go ahead and take the day off. And they come back and they go, Jim, damn, them calls went up to $4,000. I thought it was going to be a shitty day. I said, that's what it's all about, sticking around. When the market, there's always a bull in every market, in every trade. If you keep your top 10 watch list, if you're new and you're not getting it yet, grab you a top 10 watch list. I call them out every day, every single day. I get mine from CNBC and I got them from Schwab. Today, I like Schwab, especially during earnings, because they do all these earning recaps and they have 3 or 4 different opinions on the stock. And then I can forge my own opinion of what they're saying. You hear me argue with them a lot. You got to be a devil's advocate. You got to be a devil's advocate. Every trade you take, what's the odds of me winning? Where am I going to get out? And where am I going to get in? So the SPY, I'm sitting here. I'm having a good time. I'm singing Elvis. I get stuck in the trade. It's a falling wedge. Breakout, pull back, boom. And I'm sitting here again waiting for the sell-off. I hit my resistance and got out of that scalp. 529. So I'm sitting here watching it, waiting, yakking, making some water, doing whatever I want to do. And I see us approaching the 200 SMA, and I get a knock on the door. Hello, this is Richard Nixon. I understand that we're approaching that landing spot of the 200 SMA. What do you think? And I said, well, that 200 I called out earlier, I said it was working as a pivot point. Oh, pivot point? What do you mean? Is that something like Henry Kissinger going to China and trying to pivot to the point? No, Richard. A pivot point is a part of the chart where you find an equilibrium. Every animal has an equilibrium. They have 4 legs. 1 on the left, 2 on the left, and 2 on the right. And then the pivot point's right there stuck in the middle. It's called the spine. That spine's going to guide you which foot to move. It's going to be the right foot or the left foot. It's an equal common denominator. It's an equilibrium. So that pivot point determines if you're bullish or bearish. Once we broke below the 200, we become very bearish. Once we busted above the 200, we became very bullish. And we held that bull signal all the way up to the end of the day. So I'm running in. Well, I've never quite had that explained to me before. Did you know that Hillary got fired for trying to get me impeached? Yeah, she was a biased bitch back then, wasn't she? She still is today. She's hateful. Hateful. That's right. But I went down in peace. So we took the 200 to the 21 and I got out of that scalp. We came back to the 200 and boom, back to resistance and got out of that trade. All that stress this morning, you get caught up in it. You want everything to work for you. I'm here as your witness. That you've seen me get in these trades and get stuck sometimes and just play it out. You got to learn how to read them charts. Play it out. Fallen wedge. We had a 1, 2, 3. I jumped into trade and it failed on me. We got up a little bit and it pulled back and I got stuck. And I was down quite a bit. And every time we thought we was going to back up, I'd get in some more and then it'd go down on me again. And at that time I didn't want to take it anymore. I could have got in this thing at 60 cents. And it ran all the way to $200. $2, two something. And I sell it. You know, I sell it because I stressed out. The psychological part of it. I got wrapped. Still, no matter how many years you have in it. I mean, there's probably some people out there that can brush it right off. I had a girl come, like Mike. But I got stuck in it. It was hard for me to get over that. Once I got out of it, I was so excited. I had to walk away and go do some exercise, go hit a punching bag or something. And I ran as hard as I ever did. I walked 3.7 miles per hour for 10 minutes straight. And I couldn't do that 2 weeks ago. I could barely do 2 miles an hour and do it for 5. But I was persistent. And that's what you got to do when you're trading stocks. You got to be persistent. You got to, if you really want to do it, you got to do it. You got to stick in there and do it. And then all of a sudden, it took me a very long time to realize what I had, the potential I had. I mean, in and out, and swings. But now I got a strategy, a real strategy. And you'll build one with little bits that Mike, if you go back and look at his work he did this morning, I mean, it was outstanding.
Thank you very much. That's really nice. Thank you.
Yes. He spends probably a lot of his private time looking at charts and studying. I don't know, but I'm just saying that because he's been up in the middle of the night with me before. And it takes dedication like that before you to finally become a good trader. And I'm just giving you the sign, telling you, you know, that's what you got to do. You got to stick to it. Now, Yoko's a very good trader in here. I'm going to put him up there 5 steps below me. Magnificence changed my life. He got me out of the scanners and got me to quit bitching on CNBC. That's frustrating. I'd rather sit here and argue with them all day long and trade stocks. So I had to get away from it. So there's stuff that you got to cut out. Sometimes if I get too excited, mute me. If I throw you off your concentration, mute me. If you like my entertainment, I have many people tell me, Jim, I don't trade, I just sit here and listen to you. I had an old lady that went out with a friend of mine a couple nights ago, and she says, Jim, she was with this girl, and this girl calls me up and says, I'm with so-and-so, and she remembers us trading back in blah, blah. And she still listens to the videos that we did 7 years ago. It entertains her. She likes listening to it. So, you know, I've helped people that way, and I've helped people learn how to trade. And then I've pissed off a few because they just couldn't get it. They didn't know how to count to 3. And if it wasn't for Mike, I would have never thought of 4. And I would have never put that together. I would have always been 3, and I would have been if it didn't work on 3. If it didn't work on 3, I'd get out of the trade. But if you can count to 4, you might make a little bit more. And that's the sweet spot.
Switching to secret hypercut.
Exactly. I mean, look at it. 1, 2, 3, 4, boom. 1, 2, 3, boom. You can almost call that one. I think you can. Yeah. So we had the snake, we had the breakout, and we pulled back. 1, 2 bits, freebie, 4, 1, 2, 3, 4. Boom. Then she retest and boom again. 1, 2, 3. Bam. The 200 exit idea. Triple top. 1, 2, 3. Run it up to the 21. Get out of the trade. Then it comes right back. I'm seeing it coming back again and calling it out. We're going to hit the 200 again. Prepare ye in the name of the Lord. Boom. So I'm going to get on out of here. I'm going to go clean some windows. Hit that like button, YouTubers. Make a comment down there. Tell me how good I am when this video's over with. It'll be recorded in the live section. And I want to thank everybody in the room. We got employment news and all that kind of stuff coming out this week. I don't think it's as big as a deal until next week. They're already talking again about rate cuts. You know, I get fed up, I get tired of it. I don't care about the rate cuts. And they might have an adversary, you know, sell into the news. It could be one of them mechanisms that pulls the market back. The fat cats have been totally wrong about this whole market all the way up. Once it got up, you know, they said, well, we're going to have 6 rate cuts. Well, we're not getting it. But if they just get 1 rate cut, they're going to say, well, we were right. And I know that they were wrong. And what the hell is smelling Yellen being a foreign advisor? I want to keep her out of foreign policy. Ain't that Kamala's job? Okay, I'm out of here. Thanks a lot, everybody. Mike, thank you. Randy, thank you. Jen, thank you for finally turning on the mic and cleaning out your ears. Woo! YOLO.
Yeah, let's hit the bar, huh?
Yepers. Thank you, Yoko. You get back at me in 8 years, I want you to buy me a yacht. Let's all pray for Randy's wife tonight. If you pray, or however you do your meditation. I thought I almost had skin cancer the other day, but it ended up being diaper rash. Jimmy's funny. We always keep a friendly atmosphere in here, and that's the way we like it. That's the way I like it. I can't trade when I'm pissed.